Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching.
This
right,
environment
That's
is
right. We're
stunningly
going to help you develop a
eerie.
wealth mindset.
How do you plan to
trading
tackle
strategy
these
that fits
shadowy
your core
foes?
personality and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about imposter syndrome. I know we talked about that a little bit on the last episode, but maybe we can go into that a little bit more in depth. Maybe you could tell us what that is and how that manifests in trading.
Right. So imposter syndrome is when you feel like you're a fraud, basically, right? So we talked a little bit about in the last episode where let's say you're a new trader and you start trading, right? And you have, in your first month, you make 30%. You make a bunch of money. Actually, I know a guy that did this. He went to one of our seminars and he was talking about this. If you feel like you didn't deserve that, if you feel like it wasn't you that did that, right? Then you can easily self-sabotage yourself, right? So you can do something to bring yourself back down to where you believe you should be. And I think this is something that comes along a lot with traders, like the traders we talked about in the last episode, who they could make a lot of money, and then when they hit a certain level, it's like a psychological barrier, and then they crumble. Mm-hmm. This is something that, to me, I feel like the root of this is really your core beliefs that you get when you're schooled at university or high school or even primary school, and your home life, the people around you that you trust and admire and ask questions of when you're growing up. You feel like you're not worthy, so you're an imposter. You've lost. You've got something that shouldn't be yours. And in fact, there's a really good interview. I think it's the last interview of the first Market Wizards book. So it's called The Market Wizards by Jack Schwager. And I believe it's the last interview. It's either that one or the New Market Wizards. I believe the New Market Wizards has a different psychologist. I think that the first one has a hypnotherapist. And he talks about this guy and how it was kind of an imposter, but he was the other way around. So he had this imposter syndrome where he was a trader, right? Mm-hmm. And he was losing money, and he wouldn't look at his statements or something like that. Like he would get his statements from his broker and he'd throw them away or something. So under hypnotherapy, this all came out, right? It wasn't, the trader had come to the hypnotherapist to try and figure out, how can I improve my trading? But what come out from the hypnotherapy session was that he basically felt he was a fraud.
Mm-hmm.
Because he was telling all of his friends he was a trader, but he was actually just losing money hand over fist, Mm-hmm. And so he was talking about what he was doing with his statements and things like that. So the core of this is that you have to change who you are, right? Mm-hmm. So you need to change, and we can change our personality. This is something that people think that, by the time you're 5, your personality is set. That's all BS. We know that from the recent research in psychology that you can change your personality. And you've probably done it. I've done it in my life, where you live in different places with different people, and you can kind of reinvent yourself and become a little bit more outgoing, or a little less outgoing, or a little bit more intellectual. You can change it's a progression. Our life is a developmental curve. It's not a straight line. You don't just stay an introvert or an outrovert or extrovert or whatever. You don't stay simple-minded or whatever. You can improve lots of things. Mm-hmm. So for imposter syndrome, what you can do is change your beliefs about yourself, and that's really, in my estimation, best done with subconscious tools like hypnotherapy, like subliminals. There's a lot of things you can do when you're falling asleep, but ways to seed your subconscious. You can use hypnotherapy. You can use a really good hypnotherapist. NLP is something that people talk about, neuro-linguistic programming, which is kind of on the fringe of psychology. And most psychologists that are academics will frown, but not all of them, but many will. Mm-hmm. But they frown at ESP research. So, whatever. There's a lot of good research on that sort of stuff. So I would say if you feel like this is something you're running up against, you would work on yourself, you would work on your core beliefs and change what you think about yourself. Because the way I look at it is your subconscious isn't out to get you. Your subconscious is just your program. So whatever you're programmed to do, look around your life, that's where you're at. Where you're at right now, where you're at today, that is your program. Okay. So if you want something different, reprogram your subconscious, and then you can get different results. The Silva method is another one that people look at. That's another thing you might look into, if that makes sense to you. But there are lots of different ways to do it. What are your thoughts on the imposter in trading?
Yeah, so I was just thinking about that, and an interesting reflection of that kind of like, oh, like the younger guy or the newer guy can't be successful is like, I see that in soccer a lot, right? Football.
Yeah.
So like you have these like 16 and 17-year-old kids playing on the senior team, right? With these 30-year-old, 40-year-old guys.
Yeah.
And you don't really see that in any other sport. And, you know, those kids could feel like, oh yeah, I'm an imposter. I don't belong on that senior team. I don't belong with those older guys. But no, these guys are just as good as the rest of them. So I think, you know, that's a good way of looking at things and saying, okay, you know, even if I'm not that experienced in trading, or if I feel like I don't belong here or belong making money or whatever, then you can kind of look at those kids and say, hey, this kid is doing really well at, you know, the highest level of soccer. Why can't I be at that level of soccer also? And I think what you're saying is spot on, in that you have to change the way you're programming. And at least from my perspective, there's two ways to do that. One is you can consciously change things, and that's if your programming is more in the conscious mind. But if it's more subconscious, then I believe that you have to get rid of a lot of the traumas that have been programmed into you or have been given to you, or whatever, you know, whatever happened. And there's a lot of different ways to do that. Like you said, the Silva method, I've seen people get some good results on that. And some of the other stuff I've tried. So yeah, just try a bunch of things and, you know, see how it works.
And it's important to remember that it's kind of normal, you know, for people to you know, to feel like no matter what they've done, no matter what they've accomplished, that it was, you know, that they're a fraud or that they're incompetent. I mean, that's kind of normal to feel that way, because there's always going to be someone who's better than you, right? Like that's just the case. Like when the models go to the runway, there's always going to be a model that's more attractive than they are. When the bodybuilders go to the bodybuilding contest or whatever, there's always going to be a bigger, you know, more defined, stronger dude or whatever, you know what I mean? Or whatever. Like, and the same in trading. Like if you hang out with traders and you're starting to click and you're starting to make money, there's always going to be a trader who's trading bigger accounts or more, or making a higher percentage or whatever. And traders can be kind of jerks that way. You know, you see a lot of like talks, traders give talks and they talk about how great they are and stuff like that. And it's, you know, it's funny. Like, I don't know. I just find it interesting. Like, how a lot of times traders will use their past to justify, you know, maybe they feel imposter syndrome. You know what I mean? Like maybe that's what's going on. Like they feel like, you know, I worked at, you know, Bank of America and I was trading these huge amounts and I made this amount of money for my bank, you know, and now he no longer works at Bank of America. He's no longer trading that huge amount, right? He's no longer doing that, but he still wants to feel important. So he'll tell those stories about what he used to do, and you know what I mean, and feel like, oh, I called the top on the pound and blah blah blah, you know, things like that. Like it's just, to me, it's just screams imposter syndrome. You know, that's what they're. And there's a lot of that in trading. Even you know, it's funny, they say, actually, this is a really good thing. I know I've talked about in the past, but it might be important for people who haven't heard this before. They say that one of the things I learned from one of my first psychologist professors was that you can get free therapy by going to a park bench, sitting on the park bench and watching people walk by, and listen to yourself. Listen to what you say about the people that walk by, because that's the stuff that you're projecting out there. Do you know what I mean? So you see that guy and you go, oh, he thinks he's so smart and blah, blah, blah. Well, that's basically, you know, it's a reflection of what you're saying, what you think inside about yourself. So yeah. So that's another thing you can do too, is catch that. Because if you don't know why it's happening, it's hard, right? Maybe you go see a hypnotherapist, maybe Silva method, maybe, you know, park bench method, whatever. But there are a lot of ways to kind of get at that. Yeah.
All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
spend some time with the system and figure out how it works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we have a question from YouTube. So this guy says, I've been watching the podcast for a while, and he hasn't gotten to watching all of it, but he's a beginner and he has a problem exiting trades. What he does is his stop losses are 10 to 20 pips, and he'll move to break even at 30 pips. And he says that he consistently can catch 50 pips, but a majority of the time he doesn't know when to take profits, and he's always hoping for more. And then basically it turns against him and he either loses or breaks even. So what are your thoughts on trying to fix that?
So I wrote about this in the Naked Forex book. Like, you kind of have to decide who you are, or you can be both, right? So I talk about this idea of being a runner, where you like the trailing exits, and you're going to have these really big wins occasionally, but a lot of times you're just going to have like middling okay trades, and you're going to give back profit, right? Mm-hmm. Or if you're a gunner, you use targets and you look for specific targets that can be based on quantitative data that you have, like the pair usually goes this far in 10 candles or whatever, you know what I mean? Like, you can do something like that, but at the end of the day, you're just happy with the target. Now, I like to do both. So what I will do is I will have a target. Some systems, the target is relatively easy to achieve, provided the trade is winner, provided the signal's okay in this instance. And then the other bit of the other half of the trade, usually I will use a trailing exit on, because I like to catch those big winners occasionally. And anyone who's a trend follower will tell you that will make your year, that time of the year where you get that really big trade or two trades of the year. So that's my belief, is that you can decide to be one or the other, or split it up. Usually the test that I ask traders to use to determine whether you're a runner or a gunner is to say, all right, hey, Hugh, imagine you're in a trade and your trade is up 100 pips, but then it goes against you and pulls back, and you end up losing 50 of that 100 pip profit, and you're out at 50 pip profit. Okay, so that's scenario one. Scenario two is you are in a trade, it goes in your favor. As soon as it hits 50 pips, you get out, and you're very excited. But then if you had waited just a little bit longer, it would have gone 100 pips. So that's scenario two. Which of those scenarios is more psychologically distressing? Is it scenario one? If that's the case, then you probably are a gunner. If it's scenario two, then if that's more psychologically distressing, then you're probably a runner, and you'd be better off using a trailing exit. Or you can do like me and do both, and that way you can always pat yourself on the back when when it's a winner, no matter what, right? So it really comes down to that. You just don't know. Like, you can use the ADX, and you can use the moving averages, and you can do that, the MACD, and you can do all these things to determine whether or not the trade's going to keep going. But at the end of the day, the trade doesn't care where your stop is, if it's at break even or if you're up 900 pips. The market doesn't care. It is probably going to go up and down. Even when it's going down, even when it's going up, it's going to go up and down. So whether you get clicked out on your trailing exit or your break even stop, the market don't care no more. So what do you say about that?
Yeah, no, I agree. And I think, like you said, the data is super important, right? I think if you have a lot of data, you can really see, okay, does this make more sense to do this for me, or does it make more sense to let it run? One example recently that I tested, apparently it only works in the euro US dollar, the system that I tested, but works really well. And what I looked at was, I asked like several questions. Okay, how far does this run from the entry? What's the biggest run that it has? And then how often does it hit these other points, like 1R, 2R, 3R, or whatever? And I found out that you could get like 7R on some of these trades. So that was a reasonable target that you could put in there. I started using a 7R profit target at every trade, but my exit was on a moving average. So if it crosses over the moving average, and it closes on the other side of that moving average, and I'll close it out. And that seemed to be the best balance between capturing some profits and still having that, capturing that big run also. So I think it really is about the data. Like, look at the data. Don't look at the data from a perspective of a particular trading system, but ask some questions like, how far does it run? How far it does it get into profit before it snaps back? Or how often does your entry actually work as written? So those are some things to look at, and not necessarily just taking a certain strategy and going with that.
Yeah, you're right. I mean, and traders will find when they look at trailing exits that there are different types of trailing exits, right? There's like tighter ones that are going to bump up your win rate, but they're going to reduce your average winner size. Mm-hmm. And then there are looser exits that are going to depress your win rate, but your average win size is going to go up because it's going to more easily capture those huge wins, right? Those 9R, 10R wins and things like that. So yeah, so it really depends on what you want to do. I mean, I will say most of the time when I've looked at it, I have found, not always, but most of the time, the trailing exit is the way to go in terms of if you want gross profits, right? It kind of makes sense, right? Like, you're letting the market give you as much profit as it wants to. That's not always the case, because what you'll find is that some systems, they kind of have like momentum signals, right? And it's just good for a little pop, and it's not, do you know what I mean? It's not necessarily likely to keep going. So it really depends on you, and how you interact with your strategy. So yeah, like what you were saying was really interesting. Like, if you look at the average distance that a trade goes, right? And then you go, well, the median is 75 pips, right? So I'm going to use that as my target, right? Because that's the median. And so, half of them are going to go further than that, half of them aren't. But remember, that doesn't mean you're going to have a 50% win rate or whatever, because it's just of the winning trades, right? So it's only the winning trades are even going to get on that side where the median is, right? So, all those things you have to take into account. Yeah, so, I mean, it's really interesting, I think, when you're building a strategy, because you're forced to answer the questions like, what's important to me, I mean, kind of these sorts of things that come up a lot in trading. We talk about it in the podcast where all these things keep coming up, like, what's important to me, how do I deal with this, what does this mean, right? And so when you're building your strategy, a lot of those questions come up because you're confronted with, okay, if I do this, then this is probably going to happen. Am I happy with that? Or should I do this so that I avoid this sort of feeling or this sort of, going down this path? So it's really interesting. In a lot of ways, it's like you're thinking like, who should I marry? Should I marry this person? Yeah, she's really great and everything, but she's got a cocaine habit. What am I? You know what I mean? Like, so like, it's sort of like it's the same thing with trading systems. There's always going to be something you don't like about it. Even like the brilliant trading systems that have high win rates and high average winners and all that stuff, they usually have the problem of not trading that often, right? Like, there's always something about So
and along those lines, like, you're not going to find out about your girlfriend's cocaine habit unless you spend some time with her. So like, the same thing with the trading system, right? You got to go through the iterations, you got to do the testing, you got to look at the data, you got to get on the screen and do some demo or whatever, live trading. So yeah, spend some time with the system and figure out how it works.
Great point.
All right, cool. Thanks, Walter.
Yeah.
See ya.
All information in this podcast is for educational and informational.
Chat with Traders is brought to you by Trade.
Learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's going on? Welcome back to another episode of Chat with Traders. This week, I'm pumped to introduce an incredibly humble, relatable, and overall genuine trader, Adam Ryan of Optic Trader. He's actually also the first Canadian guest on the show, which is really cool. But just like the majority of those who make it, Adam will not hesitate to tell you he was no overnight success. He went through the same struggles and faced the same challenges that many of us can relate to. However, the one thing that set Adam apart was the fact he never gave up. And it was that determination and perseverance that landed him in the hot seat with a trading mentor who was able to steer him in the right direction. Jumping forward a few years, Adam has now forged his own method for success and actively trades crude oil, gold, and the S&P 500 futures. During this interview, you will hear about his journey on a much deeper level, and you'll pick up many great pointers, especially around the topic of setting goals and how to actually achieve them. Okay, here it is, this week's interview with Adam Ryan. Adam, how's it going?
Pretty good. Yourself?
Not too bad at all, man. Thanks so much for coming on. It's really good to have you on the show.
Oh, no problem. Thanks a lot for having me. Glad to be here.
Awesome. So, how'd you go in the markets today? Did you do all right?
Yeah, today was a pretty good day. Pretty easy going. I went long in the S&P in the morning. A little break out of balance, but we were actually in a longer term balance, so it kind of chopped midday till it got up there. Not too exciting.
Okay, good stuff. We'll just run through a few different topics. We'll start off with sort of how you got started. And I know you had a mentor early on, so we'll have a few questions around that.
Okay.
And then we'll speak a little bit about your actual trading style and how you're approaching the markets. And I noticed you're using some sort of probably not so common indicators on your charts. So I'd like to ask you a few questions around that. And then just some advice for other traders who are at that beginner intermediate level who are, on their way to becoming pros. And, that should probably take us through. How does that sound?
Oh, yeah, it sounds good.
Awesome. So, this is going to be great. So let's just get right into it, eh?
Okay, perfect.
So, Adam, if you'd like to just give us a bit of a background on yourself and tell us how you actually got into trading.
Okay. Well, I got back into trading. I was actually working 2 full-time jobs at the time, back to back. I only had about 45 minutes gap in between the jobs where I could quickly run over to the bus, get on the next job, and I was doing it to save up for a car. Now, I couldn't really keep this up because it was just 2 full-time jobs. It was pretty tough on me. And then when I did get the car, I quit one of the jobs. But having half the income, I was kind of like, man, I need to do something else to get up there again. I want to make some money, and I don't really know what to do. And I stumbled across the stock market, and I thought, yeah, this is it, this is it for me. And I did a little more research, and I seen that, the same guys year after year were coming out ahead. The hedge fund guys, they were on top. They were able to make money. So it was more to this than just gambling. And I thought, I'm going to open an account, and I thought I'm going to start with penny stocks because it's affordable. I only had about a $10,000 account. So it was a pretty small account, and my thinking was if I trade penny stocks, they're more affordable, they're cheaper, then I can get started that way. Now, at this point, I had no clue about anything. I didn't know about how the market works, risk, control, nothing. So I didn't even have a strategy. I just went in there, and I knew I wanted to buy penny stocks. So the first stock I ever bought was Turbo Power Systems. I don't even know what it did, what the company did. But I went in there, and it was trading at 1 cent to 2 cent, 1.5, going up and down like that. And I figured, wow, if I just buy this at 1 cent, goes up to 2 cent, oh, I got 100% profit right there. So it went down to 1 cent. I put an order in, and it just sat there for a while. It moved off. It sat there, moved off, sat there, and I wasn't getting filled. I'm like, well, what's going on here? The market's trading at my price. Why am I not getting filled? So I decided, I'm just gonna put a market in put an order in above the market, and I'll get filled for sure that way. So I got filled at 1.5 cents. And I was like, this is awesome. Once it goes up to 2 cents, I'll sell and I'll still get a 50% profit. So the market ends up going to 2 cents, and I just can't get out. And I'm wondering, okay, what's going on here? So the market goes down, keeps going back up, and then the market closes, and I didn't get out of the position. So I'm like, okay, maybe I'll get out tomorrow. So the next day comes, and the same thing happens, and I'm unable to get out of the position. And at this point, I don't know anything, so I'm thinking, oh, this is the broker's fault. It's definitely the broker. So I call up my broker, and I say, hey, what's going on here? The market's trading at 2 cents. I'm trying to get out. Why can't I get out? And he's like, well, there's not anyone on the other side of the trade. There's a long line of people waiting to get in at that price. And I'm like, well, what do you mean there's a long line of people? Like, how long's the line? And he's like, it's really long. So I thought, okay, I better just liquidate the position at a lower price again. And I did that, and I ended up losing half my account in 2 days because I put all my money into that thinking it was going to be this great idea. And at that point I thought, okay, I'm going to have to step back from the markets for a little bit, and I'm going to need to learn something. So I stepped back, I stopped trading for a while, and I just did some research, looked around on the net, and I found technical analysis. And I thought, okay, this is it, technical analysis. So I got to learn this technical analysis stuff, and then I'll be golden. I'll be a professional trader, and that's it. So I went on Amazon. I bought this 600-page book on technical analysis, all the patterns, all these setups and everything. And I thought, yeah, this is it. I got it now. But they don't teach you why the patterns are occurring or what context you need to take the trades in. So it really didn't really get me anywhere. But after about a year of doing this, I started seeing a little bit of results. And I was paper trading because after that big hit, I didn't want to put any more real money into the market without having a system and knowing what I'm doing. So I was paper trading for about 6 months or so. And I started seeing some decent results. I thought, okay, well, maybe I should take this live again. But doing it with a job, I didn't feel like I was fully committed, and I wanted to be a trader, and I just thought this is for me. So I quit my job, and just before I did that, I was about to buy my first home. I had $25,000 saved, and I said, you know what, I'm going to just trade, and then in 6 months I'll have 100,000. In a year I'll have $1 million, this crazy idea. And I just went at it, and it didn't go as well as I thought it would go. I was struggling at the beginning. I never really lost too much money because the main thing for me was I made a million mistakes, every single mistake a beginner trader could make except one. I always respected the market, and I never went above and beyond my risk parameters. I set risk for myself, and I stayed within it. And the main reason for that was because I had no job. This is all the money I had. I had the $25,000 account, and then I took out a $10,000 line of credit on top of that. And if I lose this, I was just done. I don't recommend traders doing this, but it's what I did. And I went that way. And then I kind of stayed, even a little bit up, a little bit down. My first week, kind of what set me up, what I thought I was going to be so successful, is because I made $2,300 in my first week. And then it was just back and forth from there. It was kind of a little beginner's luck. And I thought, you know what, I need to get some education here because I'm definitely not doing something wrong here. So I found this educator, and I thought, yeah, this guy seems like he knows what he's talking about. They got a couple of courses. I took their courses, and then I spent months and months and months learning this guy's system, executing it in the market, practicing with it, and to only find out that I had no real edge in the market. What this educator was teaching me was nothing. It wasn't even proper anything. It was just terrible. He didn't trade for himself. And I was devastated. I was like, man, I spent all this time learning this guy's system, and now I'm back at square one. It doesn't help me at all in the market. And I just kind of kept chugging along, went back to my old system, and here and there I would look online and see, okay, let's see if there's any good education out there, if I can learn something from some forums here and there. And this was about a couple years into my trading now, and I still wasn't where I wanted to be. I was seeing marginal success, but I wasn't really getting ahead. And I found this one trader, and just by hearing him talk, after being in the market for a little while, I could understand who didn't know what he was talking about and who did. And this trader really sent different. He wasn't just pressing, make easy money here, buy this, you're going to be rich in a week. He was saying it was difficult, it was tough, and he laid out, kind of a little path for success, and he had a course. And I thought, I'm going to take this guy's course. So I took this guy's course, and it was quite a bit more expensive than the previous course I took, but I figured that, if it's a better course, it'd be a little more expensive. And I was just blown away. I couldn't believe it. What I was learning was just totally different than what I was doing. And I was using all these different indicators and, always on this quest for the Holy Grail. And this was saying, no, get away from the indicators, learn price action, market structure, and kind of simplify the trading a little bit. And that's what I did. And then from that on, I started moving forward. It wasn't an overnight success. I still wasn't doing that great with my trading, but I could see it kind of moving in the right direction. So then I shot this trader an email because I was just blown away. And I said, yeah, I'm blown away with your course. It's such a breath of fresh air to finally meet a real trader who's offering this education. And he was living in the US at the time. I was living in Canada. And just by chance, he emailed me back pretty quickly. And he said, hey, I see in our records, you're from Calgary, Alberta, Canada. And I'm like, yeah. And he's like, yeah, I'm actually there right now. You want to go out to lunch? And I was like, yeah, sure, I'll go out to lunch. And I was just like, wow, this is awesome. I'm going to get to sit down with a professional trader and talk. At this point, I've never even met a professional trader or even known one, because around where I'm from, no one even trades. They don't even really understand what I do when I explain it to people. And here I am going to get to sit down with a professional trader, and he's going to take me out to lunch. So we went out to lunch, and we ended up talking for about 2 hours, and it was just, I kind of got to pick his brain a little bit. He was kind of picking my brain a little bit, is how I found his course and why did I choose him and all that. And we kind of left it at that. And I went on my trading for a little bit longer. And I had my first really devastating loss a little while after that. Now, the account wasn't that large. It was maybe 35, 40,000 around there, just a little bit higher. And I took a loss of around 3,500 in one day. And I was a guy who always respected my risk, but I was into this position and I thought, yeah, it's going to go up. All the market signals are pointing this way. I'm going to get long. And then I got stopped out right away. And I let the emotions kind of take over. I got really angry and I thought, you know what? I'm going to revenge trade. I'm going to double up my size. I'm going to get this back. I'm going to show the market kind of thing. And I went in there and then I took a bigger loss. And I was just like, what the heck have I done? This is just massive. And I stopped trading for the day after that. And my heart kind of sunk. And at this point, I was actually moved back home with my parents. I was renting a condo. I decided to move back home so I didn't have to be forced to earn. And there was a spare bedroom beside the office I had upstairs. And I just walked over to the office and I collapsed in the bed with my head down. I felt like I was in the dumps. And my dad came home from work a little while after that. And he walked in and he said, hey, what's going on? And I'm like, my life's over. I just lost so many thousands right now. Like, I don't know if I can make it as a trader. Like, it's just too tough for me. And then he said something to me after that I don't even think he knows kind of picked me up and motivated me. He said it as a joke, but it actually is what got me up and going again. And he's like, don't get so down on yourself. One day you're going to be the professional trader taking money from a sucker like you. And he kind of laughed it off and walked away. And it was weird as that sounds, that actually kind of motivated me because I'm like, wait a second, I am a novice trader. One day I will be a professional, but I'm still learning. I got to stop putting so much pressure on myself to earn here. I'm going to make it one day, and I just got to keep going. And I got up, I went back to the charts. I started dissecting what went wrong. And, I typed the entries into my journal and I went from there. And that kind of gave me the courage to message the trader who kind of mentored me again. And I said, hey, man, I just had this terrible day. I kind of explained it to him in an email. And he said, you know what, I'm going to call you up and we're going to have a talk and, I'll get through this with you. So he called me up and he said, listen, Adam, this happens to the greatest traders, okay? Everyone makes mistakes, but the way you feel right now, you don't ever want to feel that again. So don't ever do this again. I'm like, yeah, I feel terrible. Like, I don't want to go through this again. And we talked for a bit, about 30 minutes or so, and I was really feeling a lot better. And he was telling me about how some struggles he went through in his trading and how he overcame them. And then I was like, hey, man, do you think you can do some private coaching, kind of mentor me a bit? I'm close. I know I'm close, but I need that extra little push. And he said, I don't know. I'm getting ready to write a book here, and I don't know if I'm going to have the time to do it. But, I've already met you and I've seen, how dedicated you are and how much you wanted. And you remind me of me when I was starting out. And he's like, you know what, I'll do it, but we got to start on Monday and it's only going to be a month long. Right. And I was like, oh, that's all I need. Thank you so much. So we started on Monday and every day after the close, I would write down my trades. I'd mark them up on a chart. I'd send them to him, and then he'd kind of critique my trading over Skype. And we did that it was only a month, but just doing that for a month and seeing where I was going wrong, having a professional trader tell me, okay, you know what, the market gapped way down here and you're still thinking you're getting long, a change has occurred now. So I was like, oh, wow, I never really thought of that. And a bunch of other aha moments I had. And after that, a little while after that, consistency started to set in. I really started reaping the rewards of all that hard work I paid off. So I was pretty happy with that. But it wasn't an overnight success. Like, I didn't just take that mentorship and then I was doing crazy. What really boosted me up there was when I started going above and beyond the training. I started making my own observations. I started understanding what's really going on in the market. And I started to be able to understand, at different times in the day, prices being controlled by different participants on a given day. So sometimes the higher time frame participants are controlling the market. They got different buying and selling patterns, and the market moves a lot different. Sometimes day traders are controlling the market, and they have different buying and selling patterns, and the market moves different when they're controlling it. And I got a really deep understanding of how the market operates and what drives price. And that's kind of what really took it from there. I was able to buy my first home. My son was born. I started a family, and trading's been really good to me. And I decided, you know what, I want to start a business and help traders like me, because I remember how it felt when I was just struggling and somebody helped me out, and I want to do the same for other traders. And that's pretty much my story in a nutshell.
And here we are now.
Yeah.
That's awesome, Adam. Thanks for sharing that in such great detail. That's awesome.
Yeah.
Just taking a step back there to the mentoring side of things. So how important do you feel that was to your success? If you hadn't had that, where do you think you would be now? I
think it's absolutely crucial to anyone's success to get a mentor, because I think I would have done it because just the kind of person I am, but I think it probably would have took years and years longer, because a mentor's already been through all that. They know what works, they know what doesn't, and they can kind of get you on the right path very quickly. And they can say, okay, you're doing this wrong. You kind of need to come this way. This is not going to work in the market. You got to get away from all these crazy indicators, blinking things across the screen and doing all this crazy stuff, and just understand price action. And having a mentor there who's already been through all the ups and downs and who's where I want to be, like he's right where I want to be right now, is huge. Yeah, no, definitely. I agree with you on that one. That's really good. So for others who might be in sort of like a different sort of situation, who might still be in that learning period and sort of still trying to get profitable and trying to get some consistency in their trading, what would be the best way for them to find a private mentor? Like, how would they reach out to someone who they think could, teach them, on a private sort of level? Like, that's not an easy thing to pick up. How would you say would be a good way to approach that? See, that's extremely difficult to say, because it's very difficult to find a mentor, first of all. And second of all, you may find one, but the majority of them out there, they're teaching terrible methods and they don't really know what they're doing. So it's really difficult to find a mentor. But if you do find a mentor, you want to hold on to that mentor and stay as close as you can. And that's kind of why I offer a mentorship program as well, because I've seen that there's a void here that's not being filled. It's definitely an important one and a tough one to get hold of. So you might have touched on it in your story at the beginning there, but how long was it after you got started before you were reasonably profitable and sort of consistently profitable with your trading? Okay, well, about year 3, I started seeing like the consistency was going pretty well. I know that's seemed like forever to me, but 3 years is a decent amount of time to not be really making much money. But it wasn't long after that. Once year 4 came around, it was like exponentially, it grew right away, because consistency is just the hardest part. And although that's just one step, once you get consistent, then you can move on from there, and it kind of grows very quickly after you get consistent. Would you say that the sort of 3 years is a reasonable time to allow yourself, or to like go in with that expectation that learning to trade and become profitable could take me up to 3 years or more? Yeah, I think you should definitely think like that. Now, I know my mentor, it took him, I think, a year and a half or something like that. Like he was really quick at it. So I kind of always thought, I got to do that. That's how quick I got to be. And when I didn't get that quick, I was thinking, well, am I really straggling behind here? And he said, no, like I just did it quick. This is a normal timeline. So I think you should expect 3 to 5 years around there. If you can get a mentor, you can definitely shorten the time of that. But it's not a get rich quick kind of thing at all. It's going to take time.
Yeah, that's really good. So I'd like to talk a little bit more about how you're actually trading the market right now and get a better understanding of that. So let's focus in a little bit on your approach to the market. I believe you're mainly a day trader. So was this something you naturally gravitated towards, or did you try other various styles of trading as well before you sort of stuck with that?
Yes. So first I started off swing trading. And I actually wanted to start off as a day trader, but it just seemed way too complex and too much going on. So I thought, you know what, I'll start swing trading first, and then I'll move my way into day trading. So I swing trade at the beginning, and I was just holding for 2 to 10 days. This is when I just had a simple moving average crossover system, nothing else. And I was doing that for a while, and it was actually going not too bad. And then I wanted to move into day trading pretty much after I had a pretty big hit overnight. And I didn't really like that overnight exposure. I tried to get out of the trade pre-market, and I couldn't get out. So I just thought, yeah, you know what? I want to get my risk lowered and just exit positions at the end of the day. And then I decided I'll try to day trade from there.
Okay, so what do you think are the sort of main advantages of day trading compared to swing trading? You mentioned the overnight exposure, but is there anything else that has you sort of more in favor of being a day trader?
Yeah, the risk, but also I believe that it's easier to predict the shorter term moves than the longer term moves, which is kind of not what everyone else says. And I don't mean like moves within seconds. I mean like the intraday swings, like when I can see the higher time frame players coming into the market, I can expect price to go a certain way. And it's just easier for me to predict short-term market action than it is long-term, because many different things can happen. Many different news items can come out and change the way that a market can move long-term.
Okay. I mean, what are you trading? Are you trading stocks, indexes, commodities, currencies? Like, where do you sort of lean towards?
So I trade futures. Like, I'm actively trading futures. That's what I mostly trade. But my method works on any instrument with sufficient liquidity. But what I do is, first I take a top-down approach to the market. So I look down at the furthest time frame. Even though I'm just a day trader, I have to be aware of key reference areas on the bigger picture scale. So I'll start with a monthly chart where each bar represents 1 month, showing me several years of data. And then I'll drill down to the weekly chart, and then I'll drill down to the daily chart, and then I'll drill down to the 5-minute. And I'm drawing key reference areas on each of those charts, finding support and resistance zones where I think buyers and sellers are likely to become active and where one of the two is going to be aggressive. Now, once I pinpoint that, I go to the profile charts, which they're market and volume profile. And market profile is showing me how much time the market spent at a particular price. And volume profile is showing me the actual quantity that's traded at each price. And without getting too in depth with that, I use that to find key reference zones as well. And I'm pretty much trading around those levels.
Yeah, that was actually one of the things I was going to ask you about, was those profile charts that you've been using. So for those listening who might be unfamiliar with this, it kind of looks like a volume bar that's running, instead of horizontal, it's sort of been turned 90 degrees and running sort of vertical up the side of the chart. So can you just speak a little bit more on those and what they sort of actually show you?
Okay. So they show me where value is at any time. So when the profile gets fat and you see a lot of those bars running, that's showing me that a lot of volume is transacting at that price. So that's where the market perceives value at. So now I don't trade price as much as I trade value. So if the price could be going up, but value's moving lower, so the volume on the profile where the fat area is going down, and that's where I'm thinking the market's likely going. Now, it's kind of hard to just do a quick quick rundown of this without kind of pulling up a chart and showing what I'm saying, but that's kind of the gist of it.
Yeah, no, that's cool. I noticed you've got some good videos on it on your YouTube channel that you sort of touch on it briefly.
Yes.
What I might do is I might put those in the show notes underneath the episode on our website. So if anyone wants to find out a little bit more about that, they can do so.
Perfect. Yeah.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with 0 locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Just taking a step back, do you have like a select few markets that you follow religiously, or are you sort of more looking across a broader range of markets and just looking for a very particular kind of setup to trade?
Yeah, so I've pretty much narrowed it down to crude oil, gold, and the S&P 500 mini contract, all futures, and that's what I trade actively every single day. Now, I look here and there for other setups in other futures markets and maybe a couple stocks here and there, but this is what I'm actively trading every day. And pretty much I come in the morning, I see what happened overnight, I write my trade plan out, I get ready to trade the day, and I have 11 setups that I use. It sounds like a lot, but some of them don't occur that often. So I have 11 different setups I use, and I'm just preparing myself for when I'm going to see one of these setups. And I'm just hunting for the trade. So most of the times I have my orders just sitting at the market, waiting for the market to come to me. And then when I get filled, I go with the position.
Okay, that's really cool. What would, maybe if you'd like to just share one of those setups with us, not in great detail, but just sort of give us an idea, maybe one of your favorite sort of setups that you tend to watch?
Okay, one of my favorite setups is actually the balance failure. So when we talked about market and volume profile, when the market's chopping around and the profiles are getting fat, that's the market coming into balance. So if you see a consolidated range, tight range on the chart, that's all a balance area. And when you're in a balance area, you want to be trading from the low of the balance area to the high of the balance area, because the extremes are where the real opportunities lie. In the middle is just a bunch of chop most of the time. And when you break out of this is when that's what starts trends. So when you break out of this, because there's a lot of stops accumulating above these highs and above these lows, and they just get hit, plus new money steps in and you get an explosive trend. Now, what you can also get is you can get some smarter, larger traders that come in and they purposely push the market up because they want to hit those stops and get liquidity there, and then they want to slam it back down right away and it goes violently the other way. Now, this is one of my favorite setups because it gets so many traders off guard. They think, oh, a huge breakout's coming. Yes, they're getting ready for the breakout. And then when the failure comes, it just stops all those traders that were getting long out, and it flushes the opposite direction, and it goes pretty fast and violently, and it's one of my favorite setups.
Nice. I like it. So let's talk a little bit about maybe some advice for those sort of in the beginner, intermediate level of trading. Where is one of the areas you often see traders who are not yet pros continually getting it wrong? And maybe what would you like to say to them?
I gotta say, it has to be searching for the holy grail and using way too many indicators. Just always trying to find a new indicator, always switching your chart, going from a new time frame, not being consistent in applying the method you're using. You got to get away from searching from the holy grail. There's no holy grail. And get away from indicators altogether at the beginning. I think when you're first starting to trade, the most important thing you need to do is understand price action and market structure. Because in order for an indicator to populate, it needs price. So it's populating from price. So why not cut that off and learn what price is doing yourself? Because no indicator is going to be able to tell you something better than you can tell yourself. So don't use the indicators at the beginning. And now I'm not against indicators. I don't say no, indicators are bad, but you got to get that price action and market structure down first. And then if you want to add indicators later on, you can move on to that.
Okay, that's a really great point, Adam. Thanks for sharing that. And this question might be a little bit similar, but what is it that you believe stops the majority of traders from ever making a huge success? Like a lot of us start out with sort of big dreams and hopes of, becoming a pro trader, making a lot of money. But I mean, as the statistics say, 90% of traders, or I don't know, it might even be higher, fail. So is there anything particular that you think sort of stops traders from ever reaching that level of success?
Yeah, I think it's got to be two things. One is they give up too soon. They don't realize how difficult it's going to be. And I probably would have given up too if I didn't throw myself into it with no other option. Because if you look what other educators are saying, or some videos you see where they're just ramming it down your throat, trading so easy, look how I made $1,000 with 30 minutes of work. And people get into it thinking, wow, this is going to be so easy. And then they finally get into it and it's not easy. It's extremely difficult and they give up. So I think traders are giving up too soon.
Yeah, no, that's really good. I mean, and it comes back to what you said earlier on about how it sort of took you around about 3 years to sort of start getting a little bit consistent with your profits. So, yeah, that's good to keep in mind. Do you have any pointers around sort of keeping your emotions controlled and maintaining a level head when you're trading?
Yes, it's important to keep yourself in the optimal mental state when you're trading, especially when you're starting out, because once you get a little more skill and you develop, you don't really need to focus too much on it. But what I used to do when I first came in is I would do some visualization exercises, some breathing exercises, and really get myself in the optimal mental state to trade. I'd go through what I need to do to be successful, things that I'm struggling, and I'd visualize myself going through those struggling times and doing them successfully. And just making sure that you're calm, because you're going to go through a lot of emotions at the beginning. It's going to be tough to control. But the main thing is confidence takes away 90% of all the emotional garbage that's going to affect you during the trading day. And that's going to take a while to get that confidence. But during that confidence, I definitely recommend, during that time period when you're trying to gain that confidence, I'd recommend what I took is I took the Peak Performance Home Study course for investors and traders by Dr. Van Tharp. And that's just loaded with great information about how to control the psychology of trading and the emotional side. And I definitely recommend that to all traders.
Okay, nice. We'll put a link to that in the show notes. Yeah, on your blog, you've got an awesome post about how to achieve your trading goals. And, this is something I personally have questions around too. So what are some of the key points to note if we want to actually achieve certain goals this year? And in addition to that, how and what sort of goals should we even be setting when it comes to trading?
Okay, that's a great question, because I'm big on setting goals and measuring performance. Now, when you're setting a goal, it can be anything like I want to trade a more challenging market. I want to make a certain amount of money in the month or so, or get my trading account up to this much. But if you're just setting the goal itself, it's not going to do anything unless you're writing it down, and then you're also writing down the necessary steps to achieve that goal. And the reason for this is you always want to have something you can periodically review and say, okay, am I moving towards my goals still, or am I straying off to this side? Do I got to move a little bit more back to center? And by writing down your goals, you're going to give yourself a method to achieve those goals. Now, that method may change as you get closer to the goal and be like, okay, I thought I needed this, but really I don't need that. And I guess I could give an example with that is when I was first starting trading off, I was trading, when I first was getting successful, I was trading crude and gold. And those were my main markets. And I really wanted to trade the S&P 500. But it was just very difficult for me. It seemed like it didn't move as fast. It was more choppy, and I couldn't really get it under control. So I set a goal at the beginning of one year that I want to successfully trade this market this year. So I had that as my main goal. Then I had to write down, okay, what are the steps so I can achieve this goal? So my first step was I'm going to go through historical charts, and I'm going to draw my key reference areas in on the chart, write my trading plan out, and forward through the chart just like I'm trading that, and try to get some consistency doing that. Then my next step is, while I'm trading crude oil and gold, I'm going to add the S&P 500, and I'm going to trade it on sim while I'm trading my two markets every day until I can get that consistency up. And then once that happens, I'm going to add it to live with smaller size and then build my size up to the same markets when I feel comfortable. So I gave myself a goal, and then I also gave myself ways to achieve that goal.
Okay, that sounds really good, actually. I like how you sort of, while you were trading, you did that, on sim, like not real money. That seems like a really good way to do it.
Yes.
One thing you said in there was about sort of setting goals around certain amounts of money you want to make. For someone who's not sort of consistently profitable, is that a good goal to set? Like, is that realistic?
Yeah, that's a good point there.
You know what I mean? Like, they want to make, $5,000 this year off a $5,000 account, but they're not yet making money. You know what I mean?
Yeah, so you don't want to get too fixated on the dollar amount, but it's still good to set a goal like that and set the necessary steps that it would take to achieve that goal. So what's it going to take for me to earn X amount a day? Well, first, I'm going to have to show up on time every day. I'm going to have to make sure I do my prep work, and I'm going to have to make sure I do this consistently. I'm going to have to make sure I dissect my trades after the day's over. I'm going to have to make sure I fill out my journal. I'm writing my stats in my Excel sheet as well, keeping metrics so I can review for later date, and just not get too fixated on the dollar amount, but the process it takes to get there. And if you follow that process, you're going to get there. You may not get there on your time frame, but you're going to get there, and following that process is key.
Yeah, that's really good. Okay. Well, this has been awesome, Adam. I really appreciate you coming on. It's been, really, really good. So let's just go to the closing bell, which is just a few short questions that we ask to all the guests. So the first one might be a little bit tricky. Sometimes people get a bit thrown off by it, but what's the best piece of advice you've ever received?
I gotta say, the best piece of advice I ever received, I don't even know if it was really advice, but it was probably the thing my dad said to me when I had my worst day laying on the bed.
That's good. That was a top point. What's the number one trading resource you couldn't live without today?
Yeah, I gotta say it's my trading platform, NinjaTrader. I've been using it for a number of years. I got all the hotkeys down. I'm really comfortable with it. So
okay, nice one. Is there one book you believe is a must read for any trader just starting out?
Yes, Reminiscence of a Stock Operator.
That's a popular one.
Yeah.
Yeah, awesome. Well, again, we'll link to that in the show notes. I've had I think you're probably maybe the third person to say that, and I still haven't read it myself, actually. I've got to get onto that.
Oh, you got to read it. It's a great read. It really lets you know what the trading world's like, what you're getting yourself into.
yeah, definitely. I know I need to get onto that. And the last one is, knowing everything you do now, what would you have done differently come day one?
Day one, if I had to do it all over again, what I would have done is stay on sim until I was profitable. Now, I know it's so hard. You just want to get in there live right away. But if you can't make money paper trading, there's no way you're going to make it trading live money. So I would have stuck it out sim trading a little bit longer and saved myself some devastating losses.
Okay, cool. So Before you go, you've recently launched Optics Trader. So do you want to tell us a little bit about this and why you've now decided to start teaching?
Yeah, once I got to a certain level in my trading where I hit the professional point, I really remembered the early on days in my career when I was struggling and I wanted someone to turn to. And, luckily I found someone, but I still went through a lot of hell, and a lot of traders don't find a mentor. So I thought, I'm going to make a program built by a professional trader of what actually works in the market. And I set out to make the best program there was. And I also want to make a mentorship program so I don't just leave traders. If they want a little extra help, I can work through their issues and kind of be with them one-on-one.
That's really good. So before we part ways, do you want to tell the listeners where we can find out more about this and where we can connect with you also?
Yes, you can go to optictrading.com and check out the professional trading course. I'm also on Twitter at Optic Trading, and I have a YouTube channel, Optic Trading, as well.
Okay, awesome. And we'll put links to all three of those in the show notes at chatwithtraders.com. So definitely make sure to check those out. And again, Adam, man, been really good having you on. So thanks a lot.
Oh, thanks a lot for having me here. I appreciate it.
All right, we'll talk soon.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you'd leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's happening? It's really great to have you tuned in to a brand new episode of Chat with Traders. This week, our guest on the show has upwards of 15 years in the game, so we had no shortage of deep trading knowledge to reflect on for our interview. Let me introduce you to Lance Beggs, a price action trader that is a little different to most. While he still relies on technicals to a certain degree, his edge comes from the ability to adapt the mindset of other participants and gauge entries based on their fear. Lance refers to this as the meta game. He breaks down in much more detail during the interview. Lance also goes into how he controls tight stops and uses an aggressive risk management strategy to trade successfully. This segment also includes some great tips on how to nail the re-entry that many traders struggle with, mainly due to the psychology reasons. Also, Lance will be keeping a close eye on the comments for this episode, so go to chatwithtraders.com/Lance and leave a question in the comments that you would like him to answer. Alright guys, enjoy this week's episode with Lance Beggs. Here it is. Hey Lance, how's it going?
Yeah, really good, Aaron. Great to be here. Thanks for the invite.
No, I'm stoked to have you on. It's I know you had to juggle a few times around to make this fit in with your schedule, but I really appreciate it. And like I mentioned when we were talking before, I spent a lot of time on your blog yesterday, and I found it very insightful. You have so much great content on there, and I especially like how you take some of your readers' questions and turn them into like detailed blog articles. I found that really cool.
Oh, man, that is awesome. I've been up for about 2 hours and you've made my day already. So we're off to a good start. So no, I'm really glad you got some value out of reading through the blog. So thank you.
Yeah, no doubt. So let's start this off by telling us how you got into the field of trading, because I believe you were a military pilot in a previous career.
Yeah, that's correct. What appealed to me with trading and what really attracts me to this business is not so much the money, not so much the large incomes that it can provide, but rather the freedom to set your own, to live according to my plans and not be subject to someone else's agenda. That is what I really love about this business. How I got into trading, the short story is I was in a job that I absolutely hated. It was just a frustrating, mind-numbing, soul-crushing experience day after day. And I think a lot of people go through similar stuff. I mean, you look at them on the commute to work each day, and I think, a lot of people are stressed and depressed, and that was me. And it's kind of interesting. A lot of people have trouble relating to that because, to be honest, I had a job that I think a lot of people think is like the dream job. I was a military pilot. I flew helicopters for the Army. But, really you do any job for several years, and when you're only flying for about 200 hours a year, that's a whole lot of hours just to be stuck in the frustrating bureaucracy of a large organisation like that. And I was just not suited to that environment. I needed some change. I needed something different. So that's really the short story. How I got here is I just hated my job. The process of that leading to trading is a bit longer story. It wasn't an immediate sort of, hey, I hate flying, let's go and trade. It's a bit of a longer roundabout process. Do you want me to go into that?
Yeah. So let's go into that. So maybe sort of talk about where you actually got started once you decided that you wanted to sort of move in the direction of trading.
Yeah, initially it was a roundabout process because I didn't discover trading till I was about 30 years old. I had absolutely almost zero exposure to it. My parents aren't involved in the industry. My friends' parents weren't. None of my friends did economics or markets trading or anything like that. I really just almost did not know it existed, with the exception of about a 10-week period where I did a share market game. I see some of your other interviewees did something similar in about grade 9 or 10, but that was really the only exposure I had to the markets. I didn't know it existed. What triggered the initial change, I'll try to make this quick, but a guy came into the pilot's crew room one day, one of the other pilots, and he said, guys, I have a plan. We're all going to get rich. And he laid out a roulette strategy. It's a really simple one. It's called a martingale approach. You just put all your money on one of the colors, let's say black, and if it loses, you then double your bet, and you keep doubling until it wins. And at that point, you've won back all your losses and got your initial stake back. And so we were like, no way. We plugged that into Excel. Took about 5 minutes, and just confirmed that theoretically this works really well. We're going to get rich. But it doesn't take much longer to look into this and realize that, hey, this is really common. It doesn't work in practice. Because you reach psychological limits for the size of the bet, you reach limits of your bank, and also the casino limits the table. So it was a real high and then a quick back downer and back to work for us all. But that planted a seed for me. And it led to just a really dumb decision that, hey, the way for me to get out of work was to become a professional gambler. And so I just immersed myself for about 2 years into study of money management and staking plans for roulette, blackjack, and a lot of time on horse racing. I was, this industry we have in trading where, the systems industry and the indicators, And you go on the forums and it's like, buy when the moving average crosses the other moving average and RSI is rising, etc., etc. There's a whole industry like that in horse racing as well. You can buy systems and strategies, and I spent a fortune on those sort of things. I actually talked a friend of mine into going halves in a $2,500 black box horse racing system. Of course, that didn't work. Thankfully, he's still a friend. But so for about 2 years, I just immersed myself in every piece of spare time I had was like in gambling. If I had been smart, I would have looked at poker, which is the only one that sort of really offers a good, sustainable edge if you've got the skill. But I wasn't smart. That looked like too much work. I was chasing systems approaches. So, but around year 2000, somehow this then led to seeing the financial markets, and I guess it offers kind of a legitimacy that the other forms of gambling don't have. So that attracted me as well, and I hit the books and I hit the charts and got started then in 2000. So it was about a 2-year process from first realising I hate my job, I've got to get out, to when here I am, this is what I want to do, I've found the markets.
Okay, so when you went down that path of you found the markets, you want to learn more, what were some of the first sort of things you started to learn about it?
Yeah, very first things I did was hit the books. With my background, I have a computer science degree from university. There's a lot of study required for the flying that I did as well. So I'm really comfortable with the process of self-directed education, and so I hit the books. A lot less books available back then than there are now, but I went out to the shop, bought everything I could get, and just sat down and just immersed myself in them. Got a trading platform, a charting platform, and got started. It was probably about a 6-month period of just solid immersion before doing my first real trades. So there was a process of learning, of growth and development there.
Okay, and what sort of level of success did you experience fairly early on?
You hear a lot of people have stories where they got massive success initially before crashing, or massive failure initially. I didn't get either. It kind of just ground out results around break even, which is very frustrating. And quite lucky, to be honest. I mean, this was, we're talking sort of 2001, 2002, the first couple of years of my trading. And you look at the charts there, I was trading stocks on a weekly time frame, if you can believe that. But the stock markets then, 2001, 2002, it's all going backwards. It's all massive bear market. And yet I was still able to grind out round break-even results. And to be honest, that was nothing to do with my skill. I just lucked upon a really good strategy. It was, which I traded with some slight variation, but a guy named Alan Hull had a book, Active Investing, which is still around in published new editions since then, but it's just a really simple approach to the stock market, which the real strength of that is it identifies really strong and stable trends. So despite the fact I was long only and just buying into a bear market and getting losses, you'd get the occasional win as well, which would just keep the results around break even. Had I been smart enough to continue that from 2003 onwards in the bull market that went for about the next 5 or so years, probably would have kicked some serious butt. But unfortunately, I'd moved on before then to options trading. So the problem I had was more so than just wrong market environment for strategy, but it was the wrong time frame for me. I think that's one of the biggest challenges we face in the beginning, is finding our niche in the markets in terms of time frame and strategy and the right market, something that fits our personality and our lifestyle. And the longer time frame equity stuff just does not suit my sort of control freak personality. I hate overnight risk where I'm not there watching it to control it.
Okay, so is that what you would say was probably your biggest challenge when starting out, was trying to sort of find the right time frame that fits your personality, or was there something else as well that you sort of struggled with?
Yeah, initially, I mean, I thought I was a pretty smart guy, so I thought, hey, this looks easy. You look at the charts and they show you a moving average cross. How hard does that look? It's really simple. So I thought I was a smart guy and I'd have this sussed out and be making money in a few months. But of course, it doesn't work out that way. And so a couple of years of break-even results was pretty frustrating. So I had trouble there. Mindset issues, of course, was massive. I guess we'll talk about that at some stage later. But really and of course, failing to recognise that a strategy should suit the environment, and trying to trade long into a bear market all the time was not necessarily the best. But yeah, absolutely. The biggest challenge for me was the timeframes I was trading did not match me. They did not suit my personality. They did not suit my lifestyle, and so they're just wrong. And it took me like a 6-year process to get from equities on weekly timeframes down to forex and futures markets on really short timeframes to find this place where I thought, yes, this suits me. This is where I belong. It's where I fit. It's where I can feel the market as it moves and understand what it's doing. So I think that's something we don't discuss much in the industry. Is people need to go through this process of trial and error. I think initially, if we spent maybe the first 6 months of our career just immersing ourselves in different timeframes and different markets and different strategies and just playing on demos just to find what fits our lifestyle. You just, if you're trying to fit something that's wrong for you into your life, it just won't work and you'll underperform, and it'd just be a frustrating result. So you need to go through that trial and error. I didn't realise that initially, so it took a lot longer than it should have.
Yeah, so how long would you say that trial and error period took you until you were sort of somewhat consistent with your profits and you started to feel like you had a good handle on your trading?
Yeah, it's well, the initial 2 years, as I said, was kind of break-even stuff. I moved then in when was it? It was probably early 2003 across to the options market. Part of that was I recognised that was maybe more suited to me, in that it's a little more action, being a bit more leveraged. And I had a change of strategy as well, going to more of a pattern breakout price action type strategy. I got some okay success with that. And, at the time back then, once again, I thought, man, I'm good at this. This is fantastic. Because I was getting some good results, but I'd get some periods of not so good results as well. I kind of thought I had it then. I kind of thought I had it worked out and I just had to iron out a few of the kinks. But I was wrong again. That was options on a daily time frame. Options on Australian equities. So once again, being a daily time frame, it's not a good match for my mindset. If you're waking up in the morning freaking about what happened in the US markets overnight, how's that going to affect my my open option positions? It's not a way I like to live. Where I am now, if I'm not in a trade, if I'm not watching the screen, I'm not in a trade. Everything right now as we interview, I'm sitting on the side in cash, so there's no stress. And that's how I need to operate. So it took me, to answer your question, about 3 years, sometime late 2003, I thought I had it all sussed. I thought I was a good trader, and that's where I was wrong. But that's about how long it took. Ultimately, though, to get to the stage where I thought I knew what I was doing, and it turns out I did, it took about 6 years. So I don't know if that's typical of most people. I see some who can do it in months. I see some take about 3 years. I see people who are been going for a decade or longer and still not there. So I guess it's an individual journey.
Yeah. I think that's some really great points you touched on there. So during that time, was there ever a point when you felt like you weren't going to make it as a trader? I believe you hit a rough patch around 2004.
Yeah, absolutely. I couldn't say that I ever thought I wasn't going to make it, but I hit absolute bottom in 2004. Combination of good results through 2003, making me think I was better than I was. Perhaps, the option strategies. There was some option selling, covered calls, credit spreads and things, but mostly it was just buying puts or calls, mostly calls because it was a bear market. So I think part of the good results was just I was in a suitable market for the strategy. But 2004 was a real low point. Not so much the trading. It was that combined with other factors. 2 years prior, we'd sold our house and we'd moved to get involved in another business opportunity. It's not trading related. We don't need to get into that. But things went really sour with that. And we essentially, 2004, lost everything we had. So it's myself, my wife, 2 kids. They're about 5 years old at that stage. And so I was mindset-wise, in a really bad place. You're meant to provide for your family, and I clearly was not doing that. And I thought, 2003, I had some good results with trading. I will trade myself out of this hole. And that is just the dumbest thing you can ever do. And so I just I scrapped everything else out of my life so that I could just focus on trading and just immerse myself in that. But it didn't go well. I wasn't in the right mindset. There was too much pressure to put food on the table for the family. And so, the trading was dumb. The trading decisions were really dumb. I even took some of the money and put it into another brokerage account with a full-service broker. So that I called him up and said, "Man, give me some tips. Give me some options trades." And that is really dumb as well. That's just the worst thing. Looking back after that with hindsight, some of his trades were very good, but I wasn't in the right place to manage them appropriately. So 2004 was tough. It took only a couple of months to realise this is not working. The family situation is getting desperate. We're in debt. I need to go back to work and sort myself out. So there was probably a 6-month period there where I didn't really trade. I still sort of followed the markets a little, but I really just dropped back, just a tactical withdrawal, regroup, reset myself up better to launch again. And what that involved, the second time I went full-time, 2006, we were structured a lot better there. I'd set myself up so that I had income on the side that was sufficient to cover sufficient to cover all our living expenses. And I think that's so important when you're planning to go live. You get a lot of people giving advice that, before you go live, save up 6 months of income so that you can just focus for 6 months or so. But what if it takes you 8 months to get it? So you've just run out of money and you're back at your job that you hate. So I think a better plan is structure your life some way to get some other income streams, whether that's, maybe if you can survive off your partner's income, that's fantastic. But if not, just get some part-time work or some consultancy or something such that, and fit trading around that. So that, and that's essentially what I did. So 2006, I was back full-time, but with the income covered. If I made nothing off trading, that's cool. We're surviving. So, 2004 was really bad. 2005 was just hell. That's where I just got so lost and off track with, stuck in indicators and systems and all of that sort of stuff. I don't know when it was, late 2005, early 2006 is when I just said, enough with that. Get rid of all these indicators, get rid of all of the systems. I had some success earlier with price action, basic price action stuff. Let's go back to first principles. And, I sat with the chart, just a naked chart, and it's like, what is price? What causes price to move? How do I see that early in the price move rather than waiting for lots of confirmation? And how do I profit? And by just taking everything back to first principles and starting again, with the background knowledge and skill and experience that I had, things fell in place pretty quickly then, in a matter of months.
Yeah, I really like that about how you talked about having a side income to sort of take the pressure off yourself to actually sort of be making money every day or every week sort of thing. That's a really good point. So let's talk a little bit more about your actual trading and your approach. So how would you best describe your approach to trading?
All right. Best describe it. I'm a short time frame, technical discretionary trader. So short time frame, I'm operating on a trading time frame of 1 minute charts at the moment. That's the trading time frame. Technical, meaning it's essentially just price action only. There's very little indicator use. I do have volume on the charts, but that plays a very small part as well. It's essentially price action. And discretionary in that there is some discretion involved. There is some subjectivity. It's not a fixed rule-based system. I don't believe that works, at least not the way retail traders apply them. But and so Basically, if you look at my screens, it's a 3 time frame approach. There's a higher time frame, which for me is the 5-minute chart. That provides the structure to the market through a support and resistance framework. There's the trading time frame, which is the 1-minute chart, and that's where I'm following the price action as it flows within the higher time frame structure. So looking at the trend and looking within that trend for areas of trade opportunity. And then there's a lower time frame. I actually operate with 2 of them right now. There's a 15-second chart and a 2-range chart. They both give a different perspective, but the lower time frame is just for fine-tuning that trading time frame analysis and for just timing the entry and exit. So the 3 charts there, and I operate. There's really only 5 trade areas if you want to sort of summarise them all. I'm operating 3 of them on price interaction with support and resistance levels. So it's standard swing trading stuff as breakout failures, there's tests of the support and resistance that haven't quite broken, and breakout pullbacks when it is a successful break. And then within the structure, between the SO levels, I'm looking at different kinds of pullbacks within the trend, just being a simple pullback or a complex pullback. So that's essentially how I would describe it. Short time frame, technical, discretionary price action trader. Beyond that, I go a little different in how I sort of look at price compared with most price action traders, in that we get into I guess you saw that looking through my blog. I'm not really a pattern trader, but more of a looking at the internal nature of price, the strength and weakness of how the price swings show on the chart, and also metagame aspects. Do you want me to get into that?
Yeah, go for it.
All right, how do we do this? The ultimate aim of my approach is to identify, if I want to simplify it, a short-term bias for market movement. Okay, so price, is it the next 2 or 3 price swings going to be bullish, or are they going to be bearish? Okay, and then we're looking for a price movement against that bias. So I'm looking at people pushing the price against that bias. Now, as I'm looking at that pullback against bias to try and time my entry, I'm not looking from a pattern perspective. I'm looking from 2 alternate perspectives. The first is the nature of how price is moving. Is it pulling back? If we take an uptrend, for example, is the bearish pullback sort of occurring with bearish strength, or is it weak? And I'm really looking to fade weakness. If it pulls back with strength, that's information I wasn't expecting. I'm standing aside and waiting. So I'm looking at the internal strength and weakness of the pullbacks, but I'm also looking at a metagame perspective. And this is the people perspective. I'm really trying to get in the mindset of the people who are trading that pullback. Who's getting trapped? Who's in a losing position? When are they feeling fear? When are they praying to the market gods that, come on, please, just once, give me a winning trade? And I'm trying to feel that fear, and I use that to time my entry. Basically, I'm looking to identify the point where these people know they've got it absolutely wrong, and then profit from their exit order flow by entering at or before that point of their failure. So while I'm a price action trader, it's a little different to most. I'm not looking at heads and shoulder patterns and triangles, etc., etc. It's really looking at the internal way that price is moving and the people aspect. The idea, metagaming, for people not familiar with that term, it's really, to put it simply, it's just the game hidden behind the game. And for me, most people are stuck in the game of price. Just they look at price moving, and they're trying to identify, when do we buy, when do we sell, based on these chart patterns. And for me, I recognise that that's not actually the real game, because the price itself and the price movement comes from order flow, and that order flow comes from traders making trading decisions. So in trying to identify the cause of a price move, you really need to be getting down into sort of analysing what the traders are thinking who are making these price patterns occur. And so that's the metagame. That's where I operate in timing my trades.
Yeah, and I think that ties in very well with something I read on your site yesterday, actually. And you mentioned the aim of analysis is to identify where you know others will buy after you, and identify where others will sell after you.
Yeah, absolutely correct. And that's the metagame approach. And actually, I think the article that comes from was the rock, paper, scissors one. Is that correct?
Quite possibly.
Yeah, the rock paper scissors is a good analogy for what a metagame is, and there's a Simpsons episode which I mentioned in that article where Bart and Lisa they're disagreeing over something, and so Lisa says, "Well, Bart, there's only one way we can solve this, and that's rock paper scissors." And then they go to Lisa's thoughts process, and she's thinking, "Poor predictable Bart always chooses rock," and Bart is thinking, "Good old rock, rock never fails." So he throws rock, Lisa throws paper, Lisa wins. Lisa was playing the metagame. She's not playing the rules of rock, paper, scissors, which is basically that, hey, it's all random. You've got a 30% chance of winning, 33% chance of losing, 33% chance of draw. She is actually playing the game of thinking, getting inside the thought processes of her opponent and using that to her advantage. And that's what I'm trying to do in the charts. When you break it down to first principles and go back to sort of what is price, how does price move, what causes price to move, and I think that was a critical part in my development when I actually stopped to look at cause and effect. I realised that it's all trader decisions, and it doesn't matter what technical patterns or indicators you use for entry. If you buy in the market and no one buys after you, they're not going to drive price further. So you lose. So really the game comes down to sort of identifying the places on the chart where people are going to buy that after you. You're getting in before them. Or if you're short, people are going to sell after you have already sold. And that is essential for driving price in your direction. It's essential for profit. And so I think if you're not looking at the market from that perspective, you're doing yourself a disservice. So, that's essentially it.
Yeah, that's really good. I like that that analogy there. So we'll try and dig that article up and we'll put a link to it in the show notes.
Cool, yeah. I've done like 380 articles on that site, and of them, that's my favourite by far.
Nice.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with 0 locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
So what sort of markets are you mainly sort of trading in?
Yeah, it's been interesting. Like the evolution of my trading over the 15 years now. Gone from equities on a weekly time frame down to equities on daily, options on daily time frame, down to CFDs on daily time frame, there's contracts for difference, across to Forex on 15-minute charts, Forex on 5-minute charts. So it's a gradual process of getting shorter and shorter. Then to, where were we, 2009, we went to futures, dropped down to 3-minute charts, and then futures on the 1-minute chart. And I'm really comfortable where I am now and absolutely loving it. So the primary market I trade right now is crude oil markets, crude oil futures market. with a little bit of dabbling in the E-minis as well, sort of E-mini Dow or E-mini Russell. I would absolutely love to trade the S&P, but I just cannot get in sync with that. It's just a slow, frustrating, boring market. I kind of need directional stuff that's got a bit of action and a bit of feedback on how the market's moving. And so I go for the more directional ones. Crude oil, and E-mini Russell are just perfect. Unfortunately, there's nothing in my time zone for that. I'm living same as you, Aaron, living on the east coast of Australia, which is just, it's got to be the most awesome place to live on the planet, unless you're a trader. And so for me, my trading work starts pretty late. I'm almost permanently night shift, which is not good at all. Actually, yesterday I was happiest going on the planet because US daylight savings kicked off, and means my trading session starts at 11 p.m. rather than midnight. So that was cool.
Oh, nice. Very good.
Yeah, it's only an hour, but it makes a big difference.
It does, yeah. From what I gather, you like to keep your stops fairly tight on your positions, but you've also got no problem re-entering a trade if you get bumped out. And you mentioned many people struggle with this. So where do you draw the line about sort of how many attempts and losses you're generally willing to take before you step aside and just let the trade go?
Yeah, cool. That's absolutely correct. I am, one of my things, I'm very risk averse, or risk aware perhaps is the better term. I hate big losses, so I keep the stop loss very tight, and I keep small position sizing. And I recognise that I get emails every week from people going, "Oh my God, this trade stopped out before it went on without me, and where did I go wrong?" And it's like, you didn't go wrong. It's just, do you seriously expect that every entry will be perfect and it's going to move to profits straight from the go? It just doesn't happen that way. We're imperfect people just operating in an environment of uncertainty, and so there is some, you're going to get some drawdown. So there's two ways to approach that. Perhaps some people are better just with wider stops. That doesn't work for me, doesn't work for my mindset. So I prefer to operate very tight stops where I'm controlling this risk. I'm entering at the point where I believe it should go very quickly in my favour, and if the trade's going to work, it usually does. But I'm also then managing. If it doesn't do that, I'm very quickly I'm very comfortable scratching and getting out on the sidelines and reassessing. Easier to reassess with no exposure on the sidelines and look at the trade. And, I'll get back in if I think, the premise is still valid. Influenced by a few people in that regard Mike Reed from tradestalker.com was just brilliant. He really put the final touches on the way I operate with regards to risk and with an active trade management strategy. Larry Williams was good as well. He says in some of his books that when he enters his trades, he expects every time that's going to be a loser, and he manages it appropriately. So it's a really aggressive way of controlling that risk. When I get in a trade, it's going to move in my favour really quick. Otherwise, I'm going to reassess. Whether that's just scale out a little, take partial profits and reassess, or scale fully out and reassess, will depend on the circumstances. But I'm quite comfortable scratching a trade and reassess and get back in. I'm quite comfortable as well, because of small position sizing, to take that first loss if it does go fully against me, and then reassess and get back in. And I think it's not easy. It takes exposure to it, to get on a sim and just practice and play with it, but reduce position sizes as well. And I think, people will know pretty quick whether that style suits them or whether they need the wider stops. But, it suits me, and I'm quite comfortable getting a scratch or two and re-entering, scratch again, re-enter, or even a full loss. Now, I think you asked at what point do I go enough is enough. I'm wrong. Really, if I hit two full-size losses in one setup area, I'm not in flow with the market. I'm not reading it well, and that's when I will really step back and usually just let that one go, and we'll wait for a totally new setup area. On a 1 minute time frame, they come along quick enough anyway. So sometimes you get it wrong, and rather than trapping the other traders in a losing position, I find I'm the one getting trapped, and you just let that go. It's part of the game. Yeah, so I think that's a problem a lot of new traders have is their relationship with risk or with loss. And this takes time and exposure to markets. Everyone, they understand the probabilistic nature of this game, that not every trade is going to win, and that if you've got, say, a 55% win rate, that you're going to get a hell of a lot of losers as well. And yet their actions don't show that they really get that. They're emailing saying, oh, this one lost, where did it go wrong? And it's like, well, where you went wrong is you didn't get back in after you got stopped out. So, it's not the only way to trade. It's just how I do it. It's what fits me really well.
Yeah, I think you said that really well. So appreciate you breaking that down, Lance. One of the other things, I'm sort of just going to quote this from the website, and you said the real damage is often psychological and not financial. So what do you mean by this statement?
Yeah, I don't recall where that was written or the context, but essentially, I think any extended losses or extended drawdown that we do, the real damage is to your mindset, because you're losing your confidence, you're losing your belief in yourself, to make money in this game. The money doesn't matter so much. I mean, if someone with no cash could. If you can trade, you will find the money. Others will provide it if necessary. So the money's not a big deal. For me, it's all mindset. You don't want to damage your mindset. You've got to nurture that and protect it. So that's part of why I trade quite aggressively with the risk management, at least in the early parts of the trade, because I don't want those large drawdowns. So very risk averse, and I manage my losses. The profits take care of themselves largely. So I guess that's it. Look after your mindset. If you damage that, it's game over. It's. You look at people who have lost all confidence, and they've got to step back and take a couple of months out of the markets and reevaluate whether this is the right thing for them. And if it is, they come back and you've got to start again. But starting again is so hard. Like after the 2004 experience, just getting back into the market was just incredibly difficult, because every trade, was fear. It's not about the loss of money. Every trade, I'm putting my whole future and my wife and my kids' future on the line and gambling it. You've got to have a clear mind, and you've got to have self-belief. So protect that more than the money.
Yeah, it's a big responsibility, especially when you put it in perspective like that.
Yeah, I so wish I got into this game as a young guy, sort of, before family and everything, but it would be so much easier. But it wasn't to be, we all have our own path. Look, protect your money, but more than that, protect your mindset.
Yeah, no doubt. So how extensively do you record and sort of reevaluate your trades, maybe from the past day or week, or however you do that?
Yeah, this has changed over the years, but it is fairly extensive, and it frustrates people because I say, here's the process I use for my pre-session preparation. Here's the process I use for my post-session review. And you get people say, I can't fit that into my life, and it's too much. And that's fine. You do what you can. But I do review the session. I review the session from a structural perspective. Did I assess it right in terms of ranging or trending? Did I pick the transition from one to the other? I also review the trades. Now, there was a time when I was longer time frames, I'd review every trade. When you're on a 1 minute time frame, if you get, say, a dozen trades I'm trading a 3-hour session at the moment, but if you pick up 10 or 12 trades in that session, I don't have time to go through them all, except for just a cursory glance. What was that a valid trade? Did I pick the structure correctly? Did I time the entry in good wholesale areas? The only ones I'll look at in depth now, because there's so many trades, those I assess that significantly underperformed what was available, or those that significantly outperformed. You sometimes get market conditions where, I had no right taking a profit out of that, but I did. So I'll look at that and see what I did, trying to get the lessons out of that. So really looking at trades, those that underperformed, those that outperformed. Those that were just like a normal trade, I let them go now. In terms of tracking, I used to track stats for every trade. A few years back, I went off that and moved to a different approach where I was just tracking daily stats, just looking at daily results, win percentage, win-loss size ratio. I did that for a while. I'm now back to sort of tracking every trade. I mean, it's pretty simple when your platform gives you a spreadsheet. You can export all your trades and you can just plug it straight into your trading spreadsheet. So I put all trades, but I monitor them from a group perspective. What I think, actually, I'm getting a little off track here, but I think a good exercise for people to do is to start tracking their trades in small groups. Chatting by email with a trader yesterday who was talking about his long-term stats that he's got. I won't give his win percent, but let's say 55% win rate across the last 1,000 trades or so, and I think a lot of people track their business in that way, and I think such a long time frame perspective there does them a bit of disservice because you don't get any sort of indication as to short-term current performance levels. And so what I recommend people do is track their results in small groups, whether that's 20 trades or 50 trades or 100 trades or just weekly results. But look at your business reviews from the perspective of your group results rather than individual trade results. For each group, let's say 20 trades, what's we're tracking the win percentage and the win-loss size ratio of that group. And looking at what runs of winners did we get, what runs of losers, what's the largest winner, largest loser, etc. So you're looking at group results rather than individual results, individual trades, and rather than decade-long 1,000 trade results. And by looking at small groups, they come around often enough that you get some context that you can examine them against. You're looking to compare that 20-trade grouping against your expectations of what you should normally get across 20 trades, and you're looking to compare it against previous groups to look at some degree of consistency. And so that way you'll pretty quickly see if you're going off track and current sort of performance is deviating from recent performance in quite a way. So I think it's a bit off track there. But to answer your question, I'm pretty thorough. I do hours each day of review and preparation.
Yeah, I really like that idea how you sort of explained it of grouping your trades together. I think that's really cool and, obviously quite important.
Yeah, it is. And it's something that just everyone gets it. Everyone understands it when I say it, but they're not doing it, and they're still looking from an individual trade perspective. And your individual trades don't matter. If you're comfortable with the risk and you're appropriately position size, you should take a loss without any stress. If you've taken just a single 1R loss, 1 times risk, it shouldn't be any drama. If that's causing you stress, you're trading with too much position size, so cut it back a bit. But you need to be not concerned so much with individual results, but looking at group results. It's a very different game if I say, Aaron, you've got a profit on this next trade. That's very different from, Aaron, show me a profit over the next 20 trades. Suddenly a single loss is not so much of a big deal, and you're looking to sort of manage your wins and losses to get, you might just get 50% of them right, 50% wrong, but you're looking to sort of develop your win-loss size ratio so that gives you a positive expectancy over 20 trades. And by taking that 20 trade perspective rather than individual trade, it's a very different game, and I think much better for the mindset.
Yeah, that's really good. Thanks for really breaking that down. That's awesome. This is probably one of my favorite questions to ask, and that is, from your experience, what is it that you believe prevents the majority of traders from ever reaching a high level of success?
Man, there's just so many things. The first one we've just been talking about is their relationship with loss. Okay, people come from different backgrounds and jobs and whatever, where income is pretty secure. In this game, you eat what you kill, is what they say. If you don't perform today and get some kills, you don't eat, you don't get money. So it's a performance activity, but it's one in an environment of uncertainty. So you need to expect losses. You need to learn how to. That's just part of the game, and manage them. And that is something that people don't get, and you can't get until you've got experience. So it takes time. But what else are people doing wrong? They don't have a proper process of growth and development. They're looking at this game, a lot of people, not all, but a lot of them are looking at it from a systems perspective. And that's why there's a whole industry geared around this, because it makes the easiest way to make $1 million in trading, I reckon, is to sell systems. But there's a whole industry geared around it. And the forums are just filled with systems full of mediocre advice and failed traders just sharing their systems, and so they get stuck in this systems mindset. And I make fun of it, but that's where I was for many years with the gambling stuff, and it's where I was early days with trading as well. So I've been there. We've all been there. They're looking at it as a systems game instead of one of a process of growth and development. There's been a lot of good material. A lot of people write about this. SMB Capital write about it. Mike Bellafiore quite a bit about deliberate practice and effective methods of growth and development. So I think that's important. They're approaching it from the wrong perspective. I think as well, by looking for that shortcut, people just aren't immersing themselves in the game, in the study of price action. They're not building, a great term I heard the other week was deep domain knowledge. So you've got to hit the books and study this game, and you've got to hit the charts, and all the answers, everything you need is in the charts. They've got to get in there and study them. And so I think people just aren't using the right process for learning. They're looking for the quick buck, the systems, and not treating it as a process of skill development. So that's probably the main thing. But there's heaps more. There's heaps more traps and shortcuts. It's not an easy game.
No, you're right there. It's a very tough game. But let's move along into the closing bell. So this is just a few questions which will take us out, and these are fairly generic. I asked them to most of the guests. So the first one: is there one piece of advice that has really stuck with you ever since you originally heard it or perhaps read it somewhere?
Yeah, cool. One piece of advice, probably forgive yourself again and again and again, because you are going to stuff this game up big time over and over again. It's going to be frustrating. So you need to take time out just to laugh at yourself and the stupid things you do, and just forgive yourself and learn from it and move on. So, yeah, if people could just forgive themselves a bit more than they do, it would be fantastic.
Okay, that's great. So you mentioned sort of getting involved in books throughout the interview. So is there one book that you strongly recommend as a must-read for any new to intermediate trader?
Not one book. Not beginner either. If we go technical analysis, let me put a few in different categories. Technical analysis, more for the intermediate rather than beginner. Go for The Art and Science of Technical Analysis by Adam Grimes. Trading Psychology, which is massive field. Absolutely love it. Read everything by Brett Steenbarger, all of his books. Same with Steve Ward. For general read, just general trading stuff. Just looking at my bookshelf here. Mike Bellafiore, who I mentioned before from SMB Capital, has two great books, One Good Trade and The Playbook, so you've got to read those. There are probably so many others, but actually the one best book is not one that you get from the bookstore or Amazon.com, but one that you make yourself, and that's something I talk quite a bit about on the website, is a market structure and price action journal. So get a folder every day, print out the charts from the session and go through and examine the structure. Look at, was it ranging? Was it trending? How could you have picked that early in the range or the trend? What price action features show that that was the structure of the market? Look at the transition from one structural environment to another as well. Look at the price action. How does it move as it interacts with support and resistance? How does it move when it is overextended to the upside or downside? How does it move when it pulls back to the day's opening range? So build your own book, your own market structure, price action journal. A couple of chart printouts every day. It takes maybe 10 minutes, and it's just invaluable. Do that over the next year and you'll thank me. You're going to have just a massive resource that's a hell of a lot better than any book you're going to buy. So if it's one book, market structure journal, make it yourself.
That's awesome. Yeah, I saw you wrote about that quite extensively on your website. So again, I'll put a link to that in the show notes, and anyone who's interested can check it out.
I do, but it's amazing. So, people sort of contact me and they're struggling, and it's like, well, you show me your market structure journal. It's like, oh, I don't do that. It's like, well, come on, I've been beating my head here against the wall for like last 5 or 6 years writing about this stuff, and you've got to do it. It's just so important. In terms of immersing yourself in price action, there's nothing better than a daily review of structure and the price and how it moves, and ongoing reviews. Do it on OneNote or Evernote if you prefer, but I've tried that, didn't work for me. I don't make use of it. I don't refer back to it, so it's hard copy folders.
Okay, and knowing everything you do now, is there anything you would have done differently come day one again to shorten your learning curve?
Ooh, two ways I could answer that. One is to say no, absolutely nothing difficult, because all the struggle has led to exactly who I am now, and I'm pretty comfortable with where I am right now. So let's go through those struggles again. But I guess if I had to say a few things, I'd like to, if I could go back and talk to myself 15 years ago, it would be more patient. Do not go full time until I have other income streams set in place to cover all living expenses. And forget the indicators. Start with basic principles. What is price? How does it move? How do we profit from that movement? How do we identify the cause of the price movement on a chart in real time? How do I identify traders who are trapped and struggling and stressed out and fearful? And just immerse myself in the chart. The answer's in the charts. Everything is in the charts that you need, Aaron. It's not on a forum or in a book. And the other thing is get into trading psychology. Read up more on that. I've got trading psychology is a massive part of my game. Just keeping in the right mindset, keeping in the right state, and keeping focus on process. So get into the mindset side of the game more.
All right, awesome. Well, that pretty much brings us to the end of the interview, and I must give a special mention to Jonathan, who put me onto you and introduced me to your site. Jonathan suggested I try to get you on for an interview, and I'm pleased he did, because your answers have been outstanding. So thanks again for coming on.
Awesome. Thanks, Aaron. Thanks, Jonathan.
And to learn more about Lance, make sure you go and check out his website. It's yourtradingcoach.com.
Yeah, come to the site, check it out, yourtradingcoach.com. It's mostly just an archive for all my blog articles and posts. It's years and years of them. It's just crazy. So come and check it out if you like it. Sign up and you can get them each week. If you don't like it, that's cool. Good luck with your journey. But also Facebook, yourtradingcoach.com. I'm on Twitter, YTC Trading, or also at Lance Beggs. You should find me pretty easy.
Very good. All right. Well, all those links will be in the show notes. And this has been awesome again, Lance. So thanks a lot for coming on. And take care, and we'll speak to you soon.
Cool. Thanks, Aaron. It's great to be here, man. If anyone has any questions, I believe there is a comment section on your page that you post this. So put them in there. I'll monitor that for a few weeks and be sure to answer anything if anyone has questions.
Absolutely. So, yeah, just go to chatwithtraders.com. You'll find Lance's episode there. And if you just scroll down to the bottom, there will be a comment section. So, yeah, that's really cool. Thanks for offering that up, Lance. That's really good.
Awesome. Thanks, man. It's been great.
All right. Talk soon.
Cool. Bye.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
What's going on, guys? Hope you're all doing great. I've got an interesting interview lined up for you this week. But first of all, I just want to say real quick, a massive thank you to everybody who's left a rating or review in iTunes. We're almost at that 100 point in the US iTunes store, so that's really cool. iTunes is sort of like a numbers game. The more ratings and reviews that I receive, the better the show will rank and the more listeners I can reach. So thanks so much to anyone who's already left a review. Also, a big thank you to everyone who has been sending in emails with some really great feedback. And it's also really cool to hear where you guys are all sort of at with your journey. We're all in sort of various states, and it's just cool to connect. And also, get an awesome response on Twitter. So if you don't follow me on Twitter, the Twitter handle is just @chatwithtraders. And yeah, really cool to sort of engage with you guys on that sort of things as well. So let's talk a little bit about this week's guest. His involvement in trading started in his early 20s, and he's got a background in mathematics and computer programming. So it was really a natural progression that he would adapt a completely algorithmic trading approach. My friends, I would like you to meet Ilan Aizbil. Ilan joins us to discuss algorithmic trading and share some insights on a side of trading that is unfamiliar territory to many, especially in the retail space. While we spoke for close to an hour, in the scheme of things, we only just managed to scratch the surface. But all in all, I think you'll find this really interesting and enough to get you curious and maybe even excited about the possibilities of algorithmic trading. Here is this week's interview with Ilan Aizbil. Hey Ilan, how's it going?
Good, thank you, Aaron. Thank you. How are you?
I'm very well. How's your week been?
Yeah, it's been an interesting week with all the volatility in the markets, but good. Yeah.
Yeah, very cool. So thanks a lot for coming on. I mean, I know you're pretty flat out between your trading and running a hedge fund and your own companies and that sort of thing. So I'm glad you could squeeze it in. So really appreciate you coming on.
No, it's my pleasure. You're doing some good work. So I'm happy to be involved.
All right, good stuff. So we've spoken in the past and we discussed some fairly interesting topics. So that's sort of the reason why I was eager to get you on the show and share with the listeners some of your insights. So in addition to that, I'm really keen to dig into your knowledge on automated and algorithmic trading as well. But before we do, let's start this off by giving us an overview of who you are, your background, and then lead us into how you got started trading.
I guess I started trading when I was pretty young, around in my early 20s. I think it was about 23 or 24 years old. I was, lucky enough to run into a little bit of money, not crazy, ridiculous money, but a little bit of money, enough certainly, to give a 23-year-old the guts to go out and mess around on the markets. And I did that for quite a few years, actually, on the Johannesburg Stock Exchange. And I built some of my own little tools and gadgets, because my background is actually in computer science and mathematics out of university. And so I used that knowledge to program a few of my own tools to trade. And then, one thing led to another, and I guess my life diverged in two different paths. One is continuing to trade. Another is running a company that sells certain trading software. So that's pretty much how my life has been since my early 20s is running a company as well as trading on my own book.
Okay, so what would you say initially sort of sparked your interest in trading?
I guess I have to say greed. I mean, like any young guy who's got a lot of zest in him and thinks he can take on the world. I think that was a big factor in it. And knowing what I know now about the markets, I'm not sure whether I would have chosen the same path. I'm glad I did, but certainly it's been intellectually very challenging in all respects. So. I think it's a lot of the youthful energy that got me into it, and a bit of greed, I guess.
Yeah, right. So I guess that probably led into what you called your gambling stage when you first sort of got started. So what were some of your early experiences?
It's interesting. People talk about a gambling stage. I don't really classify myself I never did classify myself as a gambler. I think I was always pretty analytical about the markets. I certainly did learn my lessons from a financial perspective, but I think I didn't do too badly. I approached the market in using my mathematics and statistical kind of background and looking at the numbers rather than simply trading according to my gut feel. So I guess my learning lesson could have been much worse. But I am pretty analytical.
I'm really keen to get into that side of your trading. I'm really eager to get into that. But before we do, what sort of markets are you predominantly sort of trading in at the moment?
Right. So I was predominantly trading the Johannesburg Stock Exchange. That's obviously, as you can hear by my accent, I'm originally from Johannesburg, South Africa. Now I live in the US, and I trade now predominantly foreign currencies. I have lost touch a little bit with the South African stock market, not living in the country anymore. And to be honest with you, I've only been in the US for about 2.5 years, and I find the markets here a little bit overwhelming. I think in South Africa there was 20 or 40 stocks that were liquid enough to trade. In the US there's thousands of stocks which are liquid enough to trade, and so I think any trader taking on the stock market in the US has a big job ahead of him. Just to have the computational power, certainly the way I look at the markets, to have the computational power to find the opportunities, the good opportunities in the market. I mean, it's an enormous task, and I haven't wrapped my mind around it as yet completely. I've kind of set myself a 5-year goal that within 5 years, that means in kind of 2.5 years or so, I'll start trading US markets, but I'm guessing that it'll only be in the form of trading ETFs or some type of index derivatives, and not actually the underlying stocks. That's kind of where my thinking is right now. But in general, right now, my exposure is primarily in foreign currencies.
Okay, sure. So what is it that sort of really attracts you to foreign currencies?
I guess there's a number of things that do. I think firstly, the margin levels are very attractive. So for a person that's analytical in the market like me and is able to write systems which are emotionless, it's quite attractive to have those high margin levels, obviously, because you can get a lot of exposure on the market with putting less capital down. I think many people burn themselves because obviously getting more exposure is obviously also giving you more risk. So if you're trading, manually, then I think you're prone to making those kind of errors and letting your emotions take hold of you. But I guess I suffer from that to a lesser degree because of the way, I trade through an automated fashion. So that's one thing, I guess, is the margin level. Obviously, the next thing is obviously the extremely cost-effective way of trading. I mean, the margins in the FX space are extremely so not the margin, the spread is extremely low, and you can, certainly at the level that I'm trading, it's not small, but certainly even at the amount of capital I'm trading, you can get in and out of the market pretty much at any time. There's almost always a counterparty to the trades. So I think those two things really fit in with my style of trading.
Okay, that's great. How much of your trading is systematic or algorithmic versus discretionary for screen trading?
I would say my personal book that I actually trade is almost 100% algorithmic. In fact, not almost, it is 100% algorithmic. I do certain manual trades, actually not on my own book, but in the company, in my company, where we have foreign currency income, and so I have to hedge certain positions against fluctuations in foreign currency, obviously, because in a business it's not about making money but rather preserving cash flow. So I do trade a little bit manually, but it's more kind of longer term 3-month hedging positions rather than speculative trade. But all my speculative trades are algorithmic.
Okay, that makes sense. So what do you believe are some of the key pros and cons of both approaches?
Between algorithmic trading and manual trading, is that right, Aaron?
Exactly, yeah.
Well, a big pro, obviously, for algo trading is the fact that emotions don't get in the way, right? I think that's one of the big pros. I guess one of the major cons for me is it takes a long time to see, I guess, a return on the work that you've done. If you sit in front of a trading terminal and just push buy and sell, you're immediately making money or losing money. So you're in the market, you're active, right? So you're there immediately. Whereas in automated trading, the investment comes up front. So you do less thinking while you're actually trading, but you make an absolutely huge investment up front, right? So you're talking about months and potentially years of time invested before you even see a cent, before you're even opening trades on the market. Mostly it's sitting behind back testing engines and things like that, and before you place a single dollar on the market. So in that sense, it is pretty frustrating, and even taking a new algo and a new strategy to market really takes a long time. If you think about taking all the time that you've spent manually trading and evaluating when to exit, when to enter, if you take all that time and literally shift it to the front of your trading process, that's how much time you need to invest in building your strategies. And then of course many people have a kind of a incorrect perception about algorithmic trading. They think that you build something and you're done, then you go sit on the beach in the Bahamas, right, counting the money. But in fact that's not true, because any knowledgeable trader will tell you that market conditions change, and no strategy will work for more than 3 to 6 months at best, maybe a year at best, certainly in kind of highly volatile markets like the FX market. So you're continuously working, except it's not real time while you're trading, right? I mean, it's not within the trading process, it's outside of the trading process. So it's a different type of investment in time. And I guess I'm not sure if that's a pro or a con, but you end up in the algorithmic trading world. There's always work to be done, even if there's no trades to be taken, because the markets maybe aren't open, or the market, there's low volatility in the markets when you should be kind of avoiding trading. There's always work to be done. There's always new strategies to think about, new indicators, new statistical methods to try and add into your strategies. There's so you can literally roll out of bed and do work and then roll back into bed. So it takes a lot of discipline to run in an algo trading environment. I think it's quite difficult to run a well balanced lifestyle. If you've got kids or family or whatever it is, because there's always an excuse to go and work.
Yeah, I think you put that really well. That's great. So you touched on something interesting there, which I was going to bring up. And, you often hear people say the problem with algorithms and systems is they work well in certain market conditions or for a limited amount of time, and then they become out of sync with the markets. So how do you deal with this? Like, what's your experiences around this?
My experience is that I almost never trade a single type of strategy at any one time. Firstly, I like to be in multiple instruments. You'll never find me trading one instrument or two instruments. I'm always in 5 or 6 different instruments, because I think although some instruments are highly correlated, I think it's, there's a higher chance of being in different market modes when you're in different instruments, right? So I think that's the one way that I circumvent the problem that you're talking about. The second way is that I trade multiple strategies. So if you look at my basket of strategies, I have some mean reversion strategies, trend following strategies. I have only one, I guess, kind of, I would call a statistical arbitrage system, but I'm not really into that because I'm not really into high frequency trading, like high frequency, like thousands of trades a minute. I'm not into that kind of stuff. I am obviously an intraday trader, but I think to do real statistical arbitrage, you need to be in and out of the market pretty quickly, and that's not really where I am. I guess it's not my style. But I'm running, trend following and mean reversion systems simultaneously and across multiple instruments.
Okay, so do you just want to expand a little bit on what you mean by mean reversion there?
Is described as an instrument always going back to some type of middle ground, so let's say it's really the theory of saying that something, I guess in layman's terms, people call it overbought and oversold, right? So if you think of a share going, or any financial instrument going to an overbought state and then up to down to an oversold state, so overbought, oversold, so that's what we call mean reversion, where it's kind of bouncing between these two extremes. So that's what we call the mean, right? The mean is somewhere in the middle, right? So it goes up too much, then it comes back down. I think in kind of simple terms, if I put in simple terms, maybe, some of the mean reversion indicators more commonly found in the kind of the simpler trading consoles are like an RSI or a stochastic, right? Where where the indicator is basically telling you, you've gone up too much, it's time to come down again, or you've gone down too much, it's time to go up again. So that's what I mean by mean reversion.
Okay, cool. So do things like news have any sort of impact on how your systems or algorithms operate, or are they strictly just focusing on the price?
So news is, in my mind, quite a contentious issue. The first thing I have to say is that I find, obviously, dealing with a lot of retail customers in my trading business, in my software business, I hear a lot of people saying, avoid trading the news. But if you actually take the calendar of news events and actually, plot them on your graph to see where they actually happen, I'm pretty confident to say that it's almost impossible not to trade news. You're consistently trading news, whether it's low impact news or high impact news. There's always something happening in the markets, and so people ask, do you avoid trading news or do you trade the news? What I normally do is I try avoid trading the very high impact news events. So I would trade through normal news events, assuming that they're normal market conditions, and then through like very high impact events I would avoid. Like, for example, a few weeks ago, Yellen was speaking, or something like that, something that would, where I know definitively it would significantly move the market. I normally kind of push the big red button, get out the market, and see where it goes. I'm not a gambler. I don't really want to place a red or black kind of a bet. So I trade news, not specifically news events, but I trade through the news as if it's like normal market conditions, but I avoid the very, very high impactful events.
Okay, that's great. That's really cool. So do you do any back testing on your algorithms and systems? Because I've heard it's often tough to back test these effectively. So how do you manage that?
Yes, I think you hit the nail on the head. I think that many people struggle with effective or with accurate backtesting. I don't really want to advertise any companies or any software specifically in this talk. I don't think that's the purpose of this talk. But I think certainly if we're talking about retail traders, they're really using retail quality software, out there. Certainly in the FX market and some of the equities platforms I've seen as well. The kind of software that retail traders use is not used by professionals to backtest. Professional traders use backtesting engines that are event-driven, that are portfolio, that can do portfolio backtesting, that can actually simulate real spreads in the market for certain times of day, and so I think that people say that it's difficult to effectively backtest. I think have a limited view of the kind of high-end software that's available. So if you're prepared to spend $5,000 a month on a piece of software like I do, then you certainly can backtest very effectively. If you're getting a backtesting engine for free from your forex broker, then you have to you get what you pay for, right? You get something which is mediocre and can only test a limited amount. So I've seen some scary stuff in my life. I've seen some retail traders take equity curves, put them in Excel, and then try combine equity curves and seeing how well their system has performed. Whereas an equity curve is actually meaningless. Professional traders look at mark-to-market curves, right? So they can see what their real drawdowns are throughout the history of their system. So not only when they actually kind of open or close the trade, but actually throughout the lifespan of the open trades, open positions. So I think you need a different level of software. I think you need a lot of data. You can backtest easily on 1 hourly data or 30-minute data, but when you're really doing serious backtesting, when you're ready to launch already, right? Not kind of broad testing, but when you're really doing the final kind of QA on your systems, you're backtesting on 1 minute data or even tick data. I personally don't really backtest on tick data. I don't think it's necessary, but I know guys that do backtest on tick data. So I think it depends on who you're speaking to. That'll tell you how effectively you can. I mean, I guess it's not perfect, to backtest, but I think you can get 95% of the way there. At the end of the day, you have to put your money down and run the thing forward. And when it stops performing, you have to push the big red button and say stop. Right, and relook at things, and hopefully by then you've got some more strategies in your pocket that you can go ahead and deploy to replace an older model that's not working that well anymore.
Okay, great. So recently, I believe machine learning has been a big thing in the markets. Do you apply this at all to your trading, or what are your views on this?
Yeah, it's actually interesting that you asked that. I have quite a bit of academic knowledge in machine learning, a little bit of practical experience. I wouldn't say I'm an expert, but I know enough to understand what people are saying and to have a meaningful conversation about it. My view is that of machine learning in general, and please, this is just my personal view, is that I feel uncomfortable with a model in which you put something in and you get something out and you don't actually understand what's going on in the middle. I have applied machine learning concepts, but using traditional statistical methods. So what you'll find is that a lot of machine learning tools, like multi-layer perceptrons, are really just classification tools, right? And there are other ways of doing classification tools, from very simple k-means clustering all the way through to, high-end clustering. I'm not against it. I just feel a little bit uncomfortable with them, and I prefer to use the equivalent statistical methods to achieve pretty much the same thing. But then at least I understand the input, I understand the processing part of it, and I understand the output, which is more than what machine learning gives me, which is just an input and an output and some unknown stuff in the middle.
Right. So that's really good. So just broadly speaking right now, how would you say the industry has changed over the last 10 years as a result of the technology? Like, what's the sort of impact that you have felt yourself?
Yeah, I mean, I think certainly there's a lot of companies out there that are still doing, a lot of price arb, and I'm not at that level. Certainly I don't claim to be, and I don't think I will ever be. These are, multi-billion-dollar funds that can invest millions of dollars into infrastructure, next to the exchanges. I'm not at that level. I think those have been the primary drivers of the large swings in the market. But I think that certainly those kind of companies that are investing these massive amounts of money in these low latency trading environments actually help. They help in increasing volume. They help in reducing costs for the brokers because they're seeing a lot more volume. I think in general, the more volume you see on a market, the better for everyone, because at the end of the day, you need a counterparty to your trades, right? Whether you're trading OTC FX, Forex, and the counterparty is your broker, or your broker takes your trade and takes it all the way up to an ECN or up to a bank liquidity provider. At the end of the day, there has to be a counterparty to your trade, right? And so I think the more volume there is, the better for everyone, because the spreads reduced, the costs reduced, the entries and exits in and out of the market are almost instantaneous and at the price you expect them to be, which is a huge thing. If you think about your backtesting question earlier, how do you, one of the difficulties in backtesting exchange traded markets is like you can easily say, I'm going to buy 1,000 Apple shares, but what if at that time there wasn't 1,000 Apple shares to sell? No one was selling it. So when you talk about these guys that are doing high frequency trading and pushing a lot of volume through the markets, they're almost guaranteeing small or kind of relatively professional guys like myself. They're almost guaranteeing us a counterparty, and I think it's making trading a lot easier and a lot more accessible for everybody. So I think it's a great thing.
Yeah, that's really interesting.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with 0 locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Something else I wanted to bring up, and because you're so involved in the space of algorithmic trading, do you feel there are certain things that your average retail trader is just really in the dark about? Like things which perhaps impact their day-to-day trading that they're just oblivious to?
Wow. I guess the answer to this question is actually maybe driven by my exposure to retail customers through my software business. I think in general, I see a few characteristics of retail traders. Firstly, they're lazy. They don't want to apply themselves. They don't want to apply the time. You're applying the time in an interesting way, which is, talking to traders and finding out what works for them, what doesn't work for them. But I see so many people, not trying to understand the markets, just going in there blind and trading. So I think the first thing is laziness, which is a huge problem for retail investors. I think the second thing that I see is actually more fundamental than actual trading technique. I think people don't understand the game. It's almost make the analogy like someone inviting you to a game of Texas Hold'em, right? But you actually don't know whether 3 of a kind is better than a royal flush, right? It comes down to people actually not understanding the rules, not understanding the game. I see people trading FX that don't understand what margin means, right? They don't understand what a pip is and how much a pip is worth to them. You can ask them a simple question, like if a price of euro dollar goes up by 5 pips, how much is that worth to you? Like they wouldn't be able to answer that question. And I think if retail traders actually just spent the time understanding, but really understanding, I'm not talking about sitting through some online video where you're checking your emails while you're while you're watching the training video. I'm talking about really applying yourself with a piece of paper and a pen and make sure you understand all the concepts. I think that would be an absolutely huge step forward for most retail traders. And the second thing I think people don't spend enough time doing is actually understanding the dynamics of the market. I see people trading, I'm specifically talking about Forex here, but I see traders trading, euro dollar in the afternoon in the US. No one trades euro dollar in the afternoon in the US. There's no volatility. People trade it during the London session or very early in the morning in the US, New York time. It's, again, it just shows the ignorance of people going into a game where they actually don't understand the rules and the strategy around like certain basic principles. So I think that people really do need to try and understand. They need to, if they're not trading FX, if they're trading futures or they're trading, let's say futures, for example, you need to know what a futures closeout means, right? You need to understand what impact that has on you. You can't just trade a futures closeout day the way you would normally trade, a future during any normal day. And similarly with stocks, you have to understand, the seasonality of the stocks. When are retail stocks moving a lot, during Christmas time and, shopping periods. And so there's a lot of interesting dynamics that people, just completely ignore, and I think that's very, very important. And I guess that's, makes me think about coming back to the question why Forex at this stage is because I find it manageable. The 5 or 6 pairs that I focus on, I understand how they move. I understand the dynamics. I understand the seasonality. I understand, the high impact events. I understand all the stuff around the instrument before I actually go and, start building strategies and trading the instrument. I just try and get an understanding of the beast that I'm actually dealing with.
Yeah, that's really good, Alan. So thanks for really expanding on that point. This kind of brings me to another interesting topic while we're talking about, retail traders in particular, and something we've spoken about in the past a little bit, and you've got some strong views on, and that's education. So what do you believe are the main flaws in, some of the education and the material that gets taught to new traders?
Well, I think there's different levels of education, right? So education, like, what does it mean when something moves a basis point? What does the word margin mean? What is a stop loss? What is a take profit? What is a trailing stop? That is one level of education. That is what we call, what I would call kind of fundamental market education, right? Just understanding the terminology and the basic concepts. And then, I do have strong views about people that go out and tell you that they're gurus. I hear so many people at dinner parties, people ask me, oh, I heard this guy talking on CNBC. He sounded like he knew what he was doing and he's so knowledgeable. I say to those people, man, if that's what you want to listen to, you can listen to, but that guy's a talking head, and similarly, many educators, are not real traders. I think there are certain certain educators that are real traders, that really actually do trade the market and have their own book. When I say their own book, not a written book, I mean like their own book, like their own funds that they trade, right? But there are many, people out there that are selling education to traders that is going to make them into millionaires, and and people just go there with false hope, right? Hoping that they learn some kind of secret in the market. I can tell you right now that if someone had the secret sauce in the market, they would not be selling you a trading course telling you how to trade the market, right? They'd be trading it themselves. That's how prop shops work. Proprietary trading shops. They have a group of traders who know what they're doing. They're out there trading. They're out pounding the markets. They're not out there selling educational tools, wasting their time talking to traders, because every hour they spend talking to traders and educating someone, they're losing out on back testing. I hate to sound like doom and gloom, but I am pretty skeptical. I mean, I know how much time that I've invested into building algos and building strategies. And Aaron, even before this conversation, I said to you, whatever you do, don't ask me about what my strategy is, because I'm not going to tell you, right? So in the same way, you can't expect. I mean, you can't expect someone who knows a good strategy to go out and just tell it to you, for free, for $100, whatever the course costs you. So, certainly I hold that kind of stuff very close to my chest, and I expect most professional traders, real professional traders, also do. They keep it very, very close to themselves.
Yeah, that's really interesting. So in that case, how should someone who is new avoid the fluff and the nonsense and really equip themselves with a solid knowledge base for their trading career?
It's actually a really, really interesting question, and I kind of have I'm not sure if it's a different view, but I do have a view on what you're saying. Firstly, I think that before you even get into trading, you need to make a commitment to learn how to trade, right? If you're not going to firstly make that commitment to actually say, I'm going to understand the markets, I'm going to understand the terminology, I'm going to understand how things are priced, I'm going to understand the news events, I'm going to understand the seasonality, the volatility, I'm actually going to understand. If you are too lazy to do that, then you should not even be pursuing any kind of career path in the markets, because then what you should do is you just take your $10,000 or $100,000, whatever it is that you're trading, and place it with an asset manager, or someone who can actually trade. So that's I think the first thing. And I think from what I've seen in retail traders, I think 90% of people who like to think they're traders should actually just take it on the chin, walk away and say, you know what, I'm actually not prepared to put in the time, because I have, a wife, 2 babies at home, and I can't spend more than an hour a day trading or learning the market. So you need to be realistic and walk away when it's not for you. If, however, you've made the commitment and you've taken that step to say, you know what, I'm actually going to commit the next few years of my life to actually learning and to understanding, I think the first step, the first step before you place a trade is to understand the dynamics, to understand how things move, to understand which instrument moves at what time of day, to understand what, from a macroeconomic perspective, what are the drivers of that instrument, right? If you're trading REITs, then you need to look at interest rates, right? If you're trading FX, then you need to look at, also interest rate, money flow, a whole bunch of other stuff. You need to try and understand, what are the drivers that are macroeconomic drivers that are influencing the instruments that you're actually going to trade. Once you got your head around that, and it's never an answer, right? But you have to understand, the game. Then you can start looking at actually trying to figure out what I would call like the cyclicality of the instrument you're trading. Does it go, simply put, does it go up 5 candles and down 5 candles and up 5 candles and down 5 candles? Is there any kind of cycles that you can see in the market, right? Are they, how is the market moving? Segment the market by hour of day. Many people look at the market in this kind of continuous line, but actually, let's just talk about FX for now. I almost completely discount anything that's out of the London time session. For me, it's almost irrelevant what the instrument does outside of the London time session, because I know the entire movement of most forex pairs happens during London, right? So I focus on the dynamics during London. If I pollute my mind and look at what euro dollar does, at the afternoon of the US of New York time, then I'll see like little slow upward movements, and I think, oh wow, it's going to be great to trade euro dollar in a trend following manner, but actually that's complete rubbish, right? Because when it's really moving, it's not moving in a straight line, right? It's moving up and down and up and down. So maybe I'm kind of giving you how I think about things, but I think about things in a big picture, macroeconomic, political, then I move down into, what are the drivers, then I move even deeper into what is the cyclicality, when does the action actually happen on this instrument, and then I start building ideas around that. I can see that there's always a few ups and then a few downs, or there's this kind of pattern, or whatever it is. Then I start formulating in my mind the possibilities, and I write them down. Many people don't write stuff down. You wouldn't believe that. Then I write things down and I say, this is what I observed. I look at the same time yesterday, the same time before that. I start putting some ideas together to actually find some pattern, something that I'm going to exploit in the market, right? And then I start thinking about how to actually build a model around that. And that, I think, for me, is like the last step. The last step is actually building the model. So much, research has to go into it.
For people who are, sort of in that retail space right now, let's say they've got an interest in algorithmic trading and systematic trading. Is that something they should be considering?
They can consider it. I mean, most people don't have the ability to program, but I think there's a lot of programmers out there that'll program your idea for you. But I think the problem that people face is the fact that they're not willing to spend money on it, right? They're actually not willing to learn lessons, because if you come up with a model, then the reason why you're getting it automated is so that you can actually test whether the model works over a certain period of time, right? And people say like, oh, I had this idea for a model, and then I gave it to a programmer and it didn't work. What a waste of money. I can't believe I just spent like $2,000 or $3,000 developing this model. Now I'm so upset. I'm not going to build a model ever again. I don't want to waste money. I say the opposite to people. I say, well, thank goodness that you spent your $2,000-$3,000 building that model, because now you've just saved yourself tens of thousands of dollars of losses, in the market, right? Trading that stuff manually, So I have a different view. I think that everyone should be automating their trading. Even if you decide to execute it manually, you should be going out and spending a few $1,000s, getting a programmer to develop it, backtest it for you, and showing you that either the thing, yes, it's feasible, it works, which is great, go ahead and trade the thing, or no, it doesn't work, it's rubbish. In which case you should be delighted that all you did was, pay some school fees, right, to actually learn your lesson. So in an ideal world, I think every retail trader should actually have a programmer buddy that actually, that they can communicate and say, hey, I want to test when, this moving average crosses that moving average, what happens, and, try it out, even if it's not detailed backtesting, just in general, whether there's even a vague possibility that there's an opportunity to make money using that strategy. So I think it's very accessible. I mean, you can go to all these well-known websites, I don't know, Freelancer, Odesk, all these different websites that have got outsourced programming. Find yourself a programmer, spend the money, spend a few $100s or a few $1,000s, to prove yourself wrong, that your model doesn't work, before you go and lose your cash on the market and get really despondent and walk away. set yourself a budget. If you have $100,000 to spend or to invest in the market, you need to be able to budget, $5,000 to $10,000, to get your model right, in hard cash, because then you'll get the payout in the long term. So I think everyone should be getting into at least testing their ideas in an automated fashion. You might decide to execute manually, but you have to test.
Yeah, that's a really good perspective. What were some of the things that you first started automating?
Yeah, I first started automating what you read in every technical analysis textbook out there, which is like moving averages, RSIs, MACD, all that kind of stuff. I won't tell you what my formula is, but I can tell you that all that stuff is rubbish. It works for a bit, doesn't work for a bit. It all really depends on what parameter you put into them. If you want a reason to go long, you can put a 200 bar moving average. If you want a reason to go short, you take the same price graph and put a 5 candle moving average. You'll get a short signal. So in terms of technical indicators, I think traditional technical indicators, I have found them to be, it is a bit extreme for me to say they're rubbish, but pretty much, I don't trade any of that stuff. I just think people are lying to themselves unless you're prepared to re-optimize, every day, every few days, to try and get the parameters to fit exactly the market conditions that you're in. So if you're prepared to do that, in terms of optimization, then that's fine. But if you're planning to say, a 15 or 14 candle RSI works for me, then I think you're lying to yourself. And that's what I kind of, the hard lessons that I learned initially in my career is almost having to pay to disprove that these technical indicators, is certainly, even in the medium term or definitely not long term, don't offer, or they offer very, very little value. So that's how I started.
Okay, no, that's really interesting. That's excellent. Well, this has been really cool. I mean, we've touched on a lot of subjects that I have sort of never really brought up in previous interviews. So before we let you go, do you want to share with listeners where they can perhaps learn more about you and connect?
Sure. You can just Google my name on LinkedIn. You can connect, and I'm always around. I'm happy to chat. I'll never give you the secret sauce, but I'm always happy to chat. Just Google me on LinkedIn, and I think that's the best way.
Well, this has been really good. So thanks a lot for coming on, and we will touch base soon.
Thank you, Aaron. Thanks for the time.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Traders, what's going on? I hope you've been having an awesome week. This episode is actually a first for Chat with Traders because I'm telling you, I've actually run out of fingers and toes to count the number of emails I've received in the past month or so requesting an interview with a Forex trader. Initially, I was avoiding this area because my knowledge on Forex is pretty much non-existent. To be honest, it's just something I've never really traded. But when I was introduced to this week's guest, I knew he would be a great fit to fill the demand of having a Forex trader on the show. Joel Kruger has been involved with foreign exchange since the very beginning of his career in investment banking as a currency strategist. This was after he came to the realization that he just wasn't cut out for law school. But nowadays, Joel is in the trenches as a self-funded Forex trader who has pushed on through many failures and created a tremendous lifestyle for himself and his family. It's also worth mentioning, even if you're not a Forex trader, Joel has a bunch of really good psychology tips that he shares throughout this interview. I also want to give a special thanks to the guys who submitted questions over Twitter before this interview. Joel does a great job of answering these, so keep listening. I'm sure you'll pick a lot up. Enjoy, guys. Speak to you soon. Hey, Joel.
Hey, Aaron.
How's your day going, man?
So far, so good.
Good stuff. Good stuff. Thanks a lot for coming on.
No, it's great. I'm glad to be on.
Yeah, it's great to have you here. You're actually the first Forex trader I've had on the show.
Ah, very exciting.
Yeah. So I've actually had a few listeners who have sort of reached out and say they'd like me to interview a few Forex traders in the mix. So here we are.
Yeah, that's exciting. I mean, Ryan, who I guess reached out to you, had heard some of your stuff and he was excited about trying to get us to connect. So I'm very glad to be the first FX trader. And have you had any exposure to the space a little bit, or?
Yeah, so I mean, Forex is definitely not my playing field. I've never taken a foreign exchange trade.
Yeah.
So my knowledge in the field is a little bit limited.
Yeah.
So what I did this morning is I posted a tweet. And I said if anybody had any questions that they wanted answered around, Forex, because you were coming on the show.
Yeah.
And we got a pretty good response. So we'll be sure to run through those.
Sounds good.
All right. Well, let's get this underway by taking us back to the very beginning of your career. So we're keen to hear how you got started.
So I guess I had a bit of an unconventional start into the market. I sort of, I was going way back to my college years. I had, I'm always surprised. I don't know where you were at, but I'm always surprised at how so many people have such a very strong idea of, their direction out of university or college, and they know exactly what they're going to do. I had no idea what I was going to do, and so I defaulted to going to law school. And I had no intention of practicing law. I realized that very early on. Most lawyers realize that after a couple of years of practicing. I knew right away I didn't want to practice, but it was a few years to get a little bit of experience. And then out of law school, I went into investment banking. I sort of got introduced to the world of finance, and I thought that this was an exciting thing, not knowing much about it. I was a history major in college, and I went to law school. But I started out in investment banking, working in an area called debt capital markets. And then when I was in banking, I got exposed to the different areas of banking, and one of those areas was, I remember one day I was working on a floor in the bank, working in this debt capital markets group, sort of behind the scenes, preparing deals, putting together books, and going out and trying to raise money for companies. that needed loans to do deals, and I had to go downstairs to another floor, and this was the trading floor. And I was like, why am I not down here? I mean, this is a lot more exciting. I mean, what the heck am I doing upstairs on this other floor? And that was my introduction to the trading floor. And then I was exposed to the different groups, and I was just immediately intrigued to the FX desk and all that it had to offer, and the fact that it was exposed to this global macro desk that was gave you exposure to different countries and the politics of different countries, the economies of different countries, and I just found it to be fascinating. So that's kind of how I got into FX, and from there it was just off to the races.
Okay, so were you actually trading while you were working in investment banking?
Yeah, so I was working in investment banking, and then when I transitioned to an FX, it was not in a trading capacity. It was in a research and strategy capacity. And so my career, the breadth of my career, and a good portion of my career then was devoted to working on the FX currency research and strategy side. Before then, years later, getting into the trading.
Okay, right. So at what sort of point did you decide to leave those firms and become a full-time trader, sort of playing with your own money? And what was sort of your motive behind that?
Well, I was always attracted to, I remember, even going back to my elementary school years, I was always attracted to markets and the idea of speculation. So, that was what, got my juices flowing. And so when I was exposed to the FX desk and to this market, I was drawn to the idea of being able to speculate on markets that I knew that were very difficult, and that probably one of the toughest things to do out there was trying to beat the market over time. And so I was drawn to that. So when I got pulled into this market and into the world of trading, it was always because I had this idea of wanting to go off on my own. I knew that this was a very lucrative career, or could be, and there was intense challenge. I'd come up in sports, and so I think that athletes find a lot of similarities between trading and sports, and so I wanted to sort of get to that point. But I knew that to jump right in for me, at that time wasn't going to make sense. I wanted to sort of learn about the market a little bit and cover the market and sort of be able to sort of figure out who I was and what my methodologies and strategies were and what made sense to me. Because, and we could talk about this, but a lot of your trading is a reflective of your approach to trading should be reflective of your personality as a trader. So one strategy that might be good for me, I for example have developed a more of a counter trend type of a trading approach, and then that's maybe good for my personality, as I'm a bit more of a contrarian in life, and I sort of like to go against the grain. And so you need to find strategies that complement your personality. And so that's basically was a path for me to find out who I was before, taking that saying, okay, now I'm ready to get out there and put some real money to work.
Yeah. Okay. No, that's really good. So when you did make that transition, did you find it easier or harder than what you had sort of originally anticipated to trade your own money?
I think that's a great question. I think that there's no way that I'm going to stand here and tell you that once you jump into that water that maybe there are certain areas where I think it helped me a little bit, but you're never going to really learn or feel what it's like to be a trader until you actually, step into those shoes. So while I did have experience and an understanding of the market, as far as trading was concerned, you really only learn once you get your feet wet. And so, when I stepped in, there was still a nice learning curve before, finding my stride.
Yeah, okay. I'm keen to hear about that learning curve. So what would you say were some of the difficulties you experienced early on?
I think the difficulty that I experienced early on, that's something that, you need to figure out, quickly or sooner than later, that just surprisingly takes so long. It's, with trading, it's the thing about trading is that it's we make it more complicated than it is. And some of those things are just, we have this built-in sense of, wanting to be right, intuitively we want to be right. And especially, maybe coming from the strategy side, you get into the market and you have an idea, and you want that idea, you believe in that idea, and you take the position, and you're committed to that idea. And so sometimes your stubbornness and inability to sort of understand that being wrong is a part of it is a tremendous obstacle, and it can be destructive. And so that's something that you really need to get your ego in check. And with trading, it's always this big paradox, because to trade, you need to have a tremendous amount of self-confidence, and you need to be able to be decisive and make decisions, and almost have an arrogance about your opinion. But at the same time, you have to have a humility and be able to say, okay, this is not working out, I'm wrong, I need to move on to the next one. And so these are things that I'm sure you've discussed with a lot of other traders that you've met. But the idea of sort of understanding how to take a loss is just there's nothing. I'd say that's the biggest first step of getting on your way to trading is knowing how to take a loss. And for some reason, and just because of our nature, it takes a lot longer for us to for people to get over that. I don't know if you've heard this, but intuitively, traders are fearful in a winning position, and they're hopeful in a losing position. This is the way that we're built in. This is how we're wired. So if a position is going in our favor, right, we're fearful. We see the money and we want to take it. And if a position is going against us for some reason, the way we're wired, we're hopeful. We want that position to work out. And so it goes against us and it goes against us. And inevitably, that leads to a path of disaster. And so what you need to do as a trader is you need to be able to flip that around. You need to be hopeful in a winning position and fearful in a losing position, so that you see a position going your way. You don't want to take the money off the table. You want to let the position run. And if a position is going against, you need to be fearful. You need to say, I need to protect my capital and preserve my capital at all costs. And so these are things that take, for many people, take a lot of time. And the funny thing is that so many people spend too much time reading books and focusing on strategies, and really these are the obstacles that need to be you need to be handled first. And if you overcome these, then you're 90% of the way there.
Yeah, so that's sort of borderline on the psychology of trading, which I'm really keen to get into that a little bit more with you later in the interview. So I think you have some good points to share on that. But how long would you say it was before you sort of found yourself to be consistently profitable with your trading?
Oh, for me, it took many years. I mean, I would say, for me, it took, I'd say, 5 to 6 years before I was, feeling comfortable, with my trading, and a lot of that had to do with, developing a methodology that made sense, an approach to market that made sense, and just sort of fine tuning my strategy and what I was comfortable with, and getting to know the markets that I was looking at. So it took me, I'd say, about, there were a couple of years where, I struggled, and I'd say into my third year started to things started to come together a little bit, and then by, I guess, 5 years out for me, it was when I started to start to really feel like I was you never want to be too comfortable. That's for sure. And I don't want to say that I'm comfortable to this day, because, the market will knock anybody down. But, I guess as comfortable as I can be at this point, it took it into my 5th year, I'd say. For some reason, people feel like they can jump into trading and be making money within a couple of months. But people need to understand that, this requires a tremendous amount of commitment and devotion, like any other, profession that you're going to, that you want to be involved in, and that you need to be. Then it requires the same amount of passion and interest. And so these things, you're never going to jump into. You don't jump in and you're not performing surgery on the first day you go to medical school. And so these things take time, like anything else. And people need to understand that. And it's a process. And if you have the passion and you're committed to it, then you'll get there. But it takes time, like anything else. And people seem to forget that, given the instant gratification part of the business. But, it's something that shouldn't be overlooked.
That's a really valid point. So thanks for adding that in. I mean, I agree with you 100% on that. So let's run through some of these questions from the listeners. So we've got one here, and that's from John. And he says, were you successful in equities or futures? So I think what he's asking here is, had you traded in other markets before actually zooming in on Forex, and did you see any success in these areas?
I had not. My first exposure outside of, a retirement fund and trading, in that capacity, which wasn't really trading, it was just, sort of long-term investing. My first exposure to the world of trading was through the FX market. And, for me, that was where, I'd come from a background where I didn't come from a finance background. And so the first market that I got my hands on was where my focus was. So there was no experience on the equity side for me or on the commodity side, was right into the world of FX.
Yeah, right. Okay, cool. So he's got another question here, and that is, I think this is a really good one. So in your view, what are the different dynamics and forces that separate FX markets from other instruments?
That's a good question. And so FX is, I love FX, and you learn to discover this as you get into the market. The beautiful thing about FX from a trading standpoint is that there's no bigger market in the world. And so when you want to trade a market, you're looking for two major things when you're trading a market. You want to see liquidity and you want to see volatility. So you want to see the market is deep, and you want to see that it moves quite a bit. And so these are two things that a large market is going to give you. And so FX is the largest market in the world. And so when you're trading it, it gives you certain advantages of, for example, you look at in other markets, you get gapping. So a market will, close at a certain, time one day and then open up at a different time the next day at whenever it opens. And you see there's a large gap in the price. In equities, you have earnings and things that come out pre-market. And so, with those types of trades, when you're trading those markets, there's a lot more of that. So there's a lot more of sort of, I'm in a position, but I'm stressing overnight because the market's closed about, what's going to happen, earnings. And, with FX, the market that never closes. So, you open in Asia or New Zealand, you open up on Sunday and the market closes on the New York close on Friday. And so, you're always there. You always can see what's going on. The market's always trading. And so even though you have these events that are coming up that can, inspire volatility, the market is so deep that you're not getting these, penny stock like moves, and you're able to be there ahead of it. And, the other great thing about FX that I find, extremely attractive is how accessible it is and how available it is at all times. So it's a fantastic market in that you can be anywhere in the world. And basically from the same hours, if you want to, work from 8 a.m. to 5 p.m., well, you can do that anywhere in the world and trade FX. Obviously you're trading different markets depending on where you are in the world, but, no matter where you are and what you're doing, you always, can sort of, provided it's not the weekend or Christmas or New Year's, you're always, you're looking at the market. So I think those are the key standouts for me.
Okay. No, that's really well said. So those were sort of mainly benefits in the favor of Forex. Would you say there are any disadvantages to it?
Yeah, I mean, one of the biggest disadvantages is really not a function of FX. The biggest disadvantage is more regulation side, and so FX or Forex gets a bad name. Not because of the market itself. People get confused. It's more because of the lack of regulation in the market and the amount of leverage that retail traders are given and are afforded. And that's a big problem because when you ask somebody to step into a game where they have no experience and they need to put so little up on the table and they're basically margining all that up, and they're using they're 100 to 1 or 200 to 1, or even people are crazy that brokerages have had to now come down to 50 to 1, but that's crazy. And so if I give you $10,000 to trade and you're taking $1 million position, one move in the market is going to wipe out your account. So that's not reflective, or it's not a function of the FX market, but it's a function of the leverage that's afforded to the trader. And that's been the killer, and that's been what's caused so many problems. It's brokers taking advantage of and preying on the new trader that comes in that doesn't know what he's doing, that wants to, a lot of them are misguided and they just want to they think they have that casino mentality, and the leverage, lets them take advantage of that. If I told you that, FX now only had, maximum 3-to-1 or 4-to-1 leverage, well, it wouldn't be the same market. It wouldn't have the same attention, and it would be no different than any other market. You'd be putting your position down. You take a $100,000 position, and you'd have to, put up $100,000 or $50,000 to trade that position. And so a movement of 1 or 2% really means 1 or 2% of your entire equity. So you take a $100,000 position, you put $100,000 up like you would in the stock market, and the market goes against you 1%, and you lose $1,000. So, that's the biggest problem is the leverage. So if traders could just, I can't stress enough, the biggest, thing that I can recommend anybody that's listening, that's starting out, is instead of taking 10 years to keep blowing up and trying to figure this out, or taking 1 year to blow up your entire account and walk away, take 6 months or a year and trade your account unleveraged. So whatever you put into that account, if you put $10,000 into the account, your position sizes should be $10,000 position sizes, so that if the market moves against you 1 or 2%, that's how much of your equity you're losing. And if you do that, then you'll be way ahead of the game.
Yeah, those are really valid points. So we've got another question here, and that came through from Brad, and he's asking, what timeframes are you working on, and how do you handle high volatility around news? So pretty much two separate questions there.
All right. So the first question, the time frame. So I consider myself to be a short-term trader, but I'm certainly not a high-frequency trader. I'm short-term in the sense that I'll take a couple of positions a week, and I'll sort of sit on them. I tend to focus in on really the four major time frames for me are hourly, daily, weekly, and monthly. I don't generally look at anything shorter time frame than hourly. And for my positions, I tend to sort of start with the bigger picture. So I'll look at a monthly and a weekly and a daily chart, and I'll try to get the bigger picture to determine, what my views are. And I also like to, I consider myself to be techno fundamental. So, I try to sort of look at everything and sort of have a fundamental view. So if I feel that right now the euro has broken to a fresh 11-year low against the dollar, trading down below 110, I feel fundamentally, clearly the trend fundamentally has been in the dollar's favor, given the Fed's, impending rate rise and the differentials between the central banks, between the Fed and the rest of the world. Fundamentally, the dollar's been benefiting tremendously. But maybe fundamentally, I believe that, today's employment report out of the U.S. there's a risk that it might, come in lower than expected. So maybe I believe that maybe there's a risk for the dollar to come off. So that sort of starts there. And I look at the chart and I see that the euro is dramatically overextended on the monthly chart and on the weekly chart and on the daily chart. So now I understand this big picture. And then now intraday, I start to look at the hourly chart. And once I see the hourly chart is sort of looking at a point where, I feel there's a good entry. So I try to isolate my entries based on the short time frame, but I formulate my ideas on the larger time frames. I don't tend to look at anything below an hourly chart or shorter time frame than an hourly chart.
Okay. How do you handle high volatility around news?
So with this, I would recommend, personally, I think whatever you do, you need to be consistent. So people always ask me these questions. Do I trade around news? Do I not trade around news? If you have a strategy that is sort of, purely technical, but you have to deal with these things, then I think the best thing to do is to sort of commit one way or the other. You say, okay, there's a big news event today, and I have this strategy that tells me to buy, and I don't know what to do because, there's this news event. I think you need to decide whether you're going to, not trade around large news events, or you are going to, and then just let it be. And so if you're, as long as you're consistent, you'll again, it goes back to psychology. You need to make sure that your head is on right. So if you're consistent, now you'll know that you'll benefit just as much from the strategy in those times as you will not benefit from it. But at least you'll know that that you sort of eliminated that doubt in your mind. I personally don't. I'll trade at any time, with exception, of course, But I actually welcome the volatility from the fundamental event risk. I welcome it because it's just an opportunity to sort of act as a trigger for the trade that I'm expecting. So if technically I think there's going to be a rebound in the euro today, maybe I'm excited about the non-farm payroll number in the U.S. because that could be that spark that gets that volatility going. So for me, I trade no matter what, but my recommendation to the fellow who asks is just to try and be consistent. So if you want to trade news, if you want to trade around news, or then be consistent and always trade around news, and if not, then don't.
Okay, that's really great. So yeah, thanks for sharing on that. And another question here came in from Glenn, and he's asking more specifically around what do you look at for entries and exits?
Okay, so for me, I use so exits is the hardest part for traders to exit when you say stop loss, I'm assuming, is the hardest part for a trader to initially overcome and to get over it, being able to take a loss. But it's so easy to do. So from strategically, it's very easy to say, okay, I'm looking at this market, and if it doesn't work out, I'm going to get out here. That's very easy to do. And so taking a loss or understanding that, if I lose more than 1% of my equity or whatever it is that you do, that's the easy part. The hard part is and I'm still learning to this day, is the risk management once you're making money in a trade. But specifically, I use two indicators as a contrarian. I like to use two indicators. One is called RSI, Relative Strength Index, which is well known across all markets, which gauges how the market's performing relative to recent price action, and it's an oscillator, which basically means that the indicator it goes from 0 to 100. Anything when the indicator is showing above 70 is considered to be technically overbought, while the indicator shows below 30 is considered to be technically oversold. So that's sort of a starting point for me. So I'll only look at markets, really. I go well on both extremes. I go well above 70. I look at only and well below 30. But that's where I start to look for entries. Sort of when an RSI shows that the market's deviating from its mean, and the market's sort of moving a little bit out of control. That's when I first sort of get that light goes on. I also use something called ATR, which is average true range. It's an indicator that many know, but a lot don't, and it's for some reason it's not used as much. And I think it's a very easy to use indicator, simple. There's nothing to it, and it's so valuable. And it basically just tells you, based on the last several days, what the average range of the market you're looking at what the average range of the market that you're looking at is. So if for the euro, if it's 100 points a day or 100 pips, that's the average range a day. So when you're in the middle of it, and if something's going on, and the market shoots up 100 points, from high to low within the middle of the day, well, you can at least find comfort in the probability that, okay, the market's already now matched its average daily range, so maybe it's not going to move much more. So these are tools that give you, that help give you confidence. And so these two things I use to help with my entries and my exits as well. So for example, I might use an RSI to tell me that the market's oversold. It looks like it's bottoming here, and so I might use that to get in, looking at a high or a low, and I might use that as an entry. And then maybe I'll use the ATR for an exit, knowing that, okay, I got in, now the market's moved to its, so its average range high for the day. It's moved within that range, so I'll use that as an idea to exit the position. But generally speaking, from a risk reward standpoint, you always want to be at more than 1-to-1 risk reward. A lot of people will tell you 3-to-1, 4-to-1. It depends on your strategy, but you should always be thinking, I want to make more than I'm risking.
Yeah, no doubt.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
So, Joel, we've got another question here that's come in, and I think a few people sort of probably share this viewpoint. And this guy says, we know Forex is where fortunes are made, but in most cases lost. In truth, is Forex best left to the pros? What's your take on this one?
My take on this goes right back to that question we talked about when we talked about the disadvantage of FX. It really is nothing to do. It's there's no better market in the world to trade than the FX market. The problem is that when you open up a market to people that are just getting in and you give them excessive leverage, that is why these people are having a hard time. So certainly engage in the FX market. You're not going when you trade, you need liquidity and you need volatility, and these markets are open all the time, and they're efficient, and there's no more efficient market than the FX market. So it's a fantastic market to trade. The problem is that people just get sucked in and they're victim to the leverage, and they don't know what's going on and they don't understand. If you would just make sure that your account ask your broker, or make sure to set your settings at leverage of maximum 5 to 1, then you'll be fine. And you'll find that it's no different than any other market, except for the fact that you might have a little more volatility, which is great, which is, giving you opportunity.
Okay, cool. That's really good. So we'll take one more listener's question, and that's from Phil. And his question's pretty much around, do you have sort of like a daily routine that you follow each day before getting ready for the market?
Yeah. So I tend to follow a routine. I never really left the research side. That's still a part of me, and it's a great part of my process. So I recommend to everybody. I am constantly. I get up in the morning. And I scan. I'm not gonna lie. I mean, it's I am constantly watching the market. I find myself getting up in the middle of the night, not because I'm stressed about the market, but just because I'm excited about it. So I have my monitor or next to my bed. Or I have my rates, so I check. But when I get up, I generally take a quick look and see what's going on. And then I start the process of scanning through the markets and looking for where I think there might be opportunities, but not looking to force anything. And then, I have a process of writing. So for me, it's a wonderful process. I try to sort of get out and formulate my ideas, just not necessarily about a trade, but just what I'm thinking that day, how I'm feeling that day, what I think about the market. And it allows me to maybe take on a little bit more of an objective approach, or, it's maybe a bit of a therapeutic process. And it helps me because I find that, one of the big problems with traders is also that traders are too impulsive. And so if you're able to sort of, pen down your ideas or pen down what you're thinking and take it, then it keeps you honest. So for me, it's about, going through that process and sort of, figuring out what it is that I'm thinking and sort of, keeping myself, allowing myself to stick to that. I think that in life in general, when you want to do something, there's no better way of being able to sort of follow through than telling yourself repeatedly that you're going to do that, and reminding yourself repeatedly that you're going to do that, because it becomes you, and you can't prevent that from happening. So if you want to take a trip to Hawaii and this is what you're committed to, then get that picture up, talk about it every day, and the more you do it, the more it sort of becomes a reality. And that's very important in life as it is in trading. So you need to be able to get that out. So for me, it's about putting things down on paper and writing them. And then the biggest, really, this might be a surprise to a lot of you, but the biggest luxury that you have when you're trading on your own is, and something that's really necessary, and something that people that are trading professionally at banks and hedge funds don't have, is the ability to walk away. So I'm a lot of the time during the day, I'm completely away from the market. I'm completely removed, and I have my alert set up, which is critical to me. I get them by my phone if something's moving. Otherwise, I just sort of step away, and I look into other things that I'm doing in life. And if the market comes to me, that's great. Then it comes to me. But don't force your positions. Let the market come to you. So a lot of the day is just going around, going for a run, doing some shopping, looking at other things. I do some consulting work, and waiting for the market to come to me. And so that's pretty much it. I mean, as far as my routine is concerned.
That's really cool. So let's now's probably a good point to sort of roll into a bit more on the psychology of trading. And I believe you recently spoke with, I hope I pronounced this right, a psychotherapist about how to reduce trading stress. So what were some of the best pointers you took away from this?
Yeah, I mean, I think that, it's again, there's nothing more important than psychology as far, when you're trading. So again, I can't stress enough, I find that too many people focus in on, going out and buying books on what strategies to take and what risk management they should apply, without really understanding that, intuitively, if you just look at a chart and you sort of pick out, what you think is going to go on, just start like that, and don't worry as much about that side. I'm not saying that that's not important, but you need to have a sound mind, and you need to have a healthy mind. And if you feel good about yourself and you feel confident, then that is what's going to help you along the way. And so that's the most important thing. And so some of the takeaways, from this were just, there's a lot of this, when you're trading, unfortunately, a lot of what trading brings is, there's this world of, this mentality of, being impulsive and this casino-like mentality where I want to win and I want to make a lot of money. And so you need to figure out who you are and what your motivations are when you get into this. And so if your motivations are right and you want to be in this for the long term, and you see that and you realize this is not an overnight thing, that's what's going to help your process. And so I guess the biggest takeaway is really understanding yourself, knowing who you are, and knowing what your limitations are, and what risks there are to your own personality, what things might cause you trouble, and being able to know how to handle those things in life, not in trading, but in life. Knowing that if you're an impulsive person, try to figure out things that might, tips that might help you be less impulsive. If you find that you're taking too big risk, well, there's obviously something inherent into you, built into your personality that is making you want to do that, and that extends to the way you are in life. So it's understanding who you are as a person, and trying to have some sort of a mechanism that you set up to sort of explore within and understand how you're going to overcome those setbacks in your personality. And then once you understand, and you have a strategy with that in life, and then you approach the markets, you'll find that it makes a world of difference. So it's really just, figuring out who you are as a person in life, and figuring out what your drawbacks and limitations are, and who you are as a person, and then working on those things and bettering yourself as a person, and then that will help in your trading. So if that helps at all, I hope that makes sense.
Yeah, definitely. That's great. So how do you handle a run of losing trades? And what would you suggest to other traders who might find this hard to deal with?
So the first thing I would ask, and we keep going back to this, is, the first thing you need to make sure of is it's a lot easier to swallow a round of losing trades that are with little leverage than it is with a round of losing trades where you're leveraged up at 100-1. So that's the first thing. So that's easier said. That just make sure that you're not trading on excessive leverage, because if you're doing that, then 3 or 4 losses is going to be life threatening as far as your trading is concerned, as career is concerned, versus 3 or 4 losses where you're unleveraged and taking a 1% hit on each, or 2% hit on each trade. So that's the first thing. The second thing is you need to go again. This all ties into the psychology of trading. You need to understand that that's a part of the process. You're going to go through periods where you're going to take hits on trades. And so if you understand and you believe and you know that this is a part of the process, that there are these periods, just like if you have a regular job or another job, you're going to have, bad weeks, and that's going to happen. And you're going to go into the office and you're going to have stretches where things are, you're not hitting it. You're not on your game. And that's fine when you're in, another job, which many of you are out there, you know that you have these periods, but you don't get too down. You know that you're having a bad day or a bad week, but also confidently that, things are going to turn around the next week, and you don't even stress about it because that you have that confidence. It's the same thing with trading. I mean, you're going to go through these periods and you need to be able to be positioned right so that you don't take huge hits on each trade. But other than that, you just understand that that's a part of the process, and I think that helps tremendously with that. Now, I will say one other thing, people try to quantify how they should trade and what strategies they take. There are a couple of rules, or there's one of the best things that I've applied in a qualitative way, not quantitatively, but is just if you just say, I'm going to make sure that I love every trade that I take, love, not like, but love every trade that I take, you'll find that that's an amazing risk management tool, because there's so many trades that you'll take where you just like them. You say, okay, this looks good, I'm going to take it. I kind of want action, and I want to get in. So I like it. So I'm going to take it. And then it doesn't work out. But what happens when you do that is when you take trades that you like, you find that you're taking them a lot more often, right? And you find that when they don't work out, you're kicking yourself. You're saying, oh, why did I take that trade? But if you take a trade that you love, then they come around less frequently, which is great because they still come around a lot. And when they don't work out, when they don't work out, you're not looking back and saying, oh, maybe I shouldn't have taken that. You know that you should have taken the trade and that it just didn't work out because that's the way the markets are. So that's, I think, a very big secret for me. It's helped me a lot in my process where I don't force anything, and I only take trades that I know that if they don't work out, that I'm not going to regret.
Yeah, that's great. I really like that one. And I read this kind of leads into it, and I read this on your site, and I think it would be great if you could expand on it just a little bit. And that was a line that read, failure is a stop on the path to success. So would you like to share with us sort of the importance of understanding this statement?
Yeah. So that comes from, I believe, you're pulling something from one of my favorite quotes. It's from a Bob Dylan song. But basically, the path to success is rooted in failure. And, you need to understand that. And so if anybody, it's like, when you look at the world of, sex and glamour and supermodels, people get this supermodel idea where, right away you look at a supermodel and you're like, this is what my idea of a woman, the perfect woman is. And when you look closer, you realize that that's not a reality, that's not life. That's not the way things are. And so, things don't just happen. There's maybe, the lottery ticket person or the super brilliant person who, hits his stride right away. But, certainly from my point, that didn't happen. And things take time, and there's a lot of failure along the way, and failure in a good way. It's you can't learn without failing. And if you're afraid to fail, then you're not going to be able to succeed. And so this is, and failure, it's such a harsh word, and there should be another word for failure in a positive way, but it's just a part of the process. And if you can't fail, then you're not going to learn where the mistakes are and how to correct them are. And It's so important to be able to go through the process and say, I know that I'm not going to I'm probably not going to succeed right away. And if you have that, then it just all of a sudden it opens you up to success if you're willing to embrace that. And not only that, but I'd like to think that, the harder you struggle, the more you can sort of look back and say, wow, look what I went through. And you could feel better about your achievements and feel better about yourself as a person, that you worked really hard. I mean, who wants something that's going to come easy in life? It just doesn't, we all say we do, but is there anything to that? I mean, what kind of person are you if things just go your way all the time? You're not interesting. And, you probably develop a pretty, warped perspective of the world around you. It's not fun. I mean, so we need to struggle. And it's certainly been a part of my process and something that I embrace. And you come through so much stronger from the losses than you do the wins. I mean, you come out on, if you can get through that other side of a loss. I know many of you out there have probably traded and you've blown up your account, but that's fine. That's good. That's part of the process. If you can get through that and get up and say, okay, I screwed up and I made a mistake, but that's fine. That was supposed to happen. Then you're going to come out so much stronger.
Yeah, that's a great piece of advice right there. All right, Joel, well, this sort of brings us towards the end of the interview, but it's been awesome having you on. So before we go, we'll just go to the closing bell, which is just a short lot of questions that I ask to all the guests. So the first one would be, is there any piece of advice that has really stuck with you ever since you originally read it or perhaps even heard it?
I think the best piece of advice that I've had over the years is just to keep it simple. I think that, if you keep it simple and you don't overwhelm yourself with people are always asking me about, when should I take profit? When should I get in a position? If I'm, 5% within my profit, should I take the profit or should I wait? You need to trust yourself and you need to keep it simple. And, a lot of the problems that traders have are not on anything complicated. They're simple, silly things. So if you keep your strategy simple and you focus on, the psychology and just understanding, what it is that you have within your capacity, you'll be fine. So just don't try to overcomplicate things. Simplicity is genius, and keep it simple, and you'll be fine.
Okay, great. I like it. Knowing everything you do now, would you have done anything different come day one again?
Ooh, looking back, if I had perhaps, these questions are always difficult because, you look at your life and you sort of try to look back and say that this is, how I guess I would have, if I could do anything differently, I would have, not gone to law school, I guess, and just gotten right into the market right away and got maybe a bit of an earlier jump, on in trading, but you never know what it is that you're going to do until you figure it out. So I can't feel too bad about that, and maybe just maybe getting in and not wanting to if I could go back, not wanting to sort of feel rushed about needing to succeed. I think that's a big problem for traders that are younger and they're starting out. You feel you need to hit your stride quickly, and maybe because I came over from the strategy side, I felt that I needed to accelerate that process and get there quicker, or I deserved to, and maybe I was trading a little bit more aggressively. So one of the things that and so I was maybe using a little bit more leverage than I should have. So I guess one of the things that I've for my people that I've said over the last couple of years is I posed this something called the unleveraged challenge, which is specifically for FX, given the leverage that people are afforded, is to take 1 year, like I talked about a little bit earlier, take 1 year and forget about making money. Don't focus on the dollars and cents. Focus on the percentages and trying to succeed, and don't worry about the money. And so open up a small account of, a few $1,000s or whatever, even a few $100s you can do. And, you need to feel like you have skin in the game, but open up a small account and trade that account unleveraged for 1 year. Give yourself 1 year where you are completely removing yourself from the idea that you're going to hit it out of the park and make a ton of money. Forget about that. just try and focus on and enjoy the process of trading without the money, worrying about the money and the losses and the wins, and just focusing on, say, if I can trade unleveraged for 1 year and generate 10% returns, or even in my first year, if I can generate positive returns, then I will know that going forward, that if I leverage myself up, because you can in this market, a wonderful thing about FX is that you can leverage yourself up tremendously, that you can scale yourself up, so you don't have to worry about that. So do that for 1 year, and then you'll find that you'll be on your path to success much quicker.
Good one. I'm just going to throw another question in there. And when it all boils down, what would you say motivates you to trade? Would it be, the money, the lifestyle, the freedom? Like, what would you put it down to?
I think if I'm going to be completely honest, at the end of the day, for me, it's the challenge of it. It's the challenge. It's knowing that so many people fail at this, knowing that it's been this impossible obstacle for so many people to overcome, and knowing that the rewards, if you can get it right, are so tremendous. And so that is, I think, it's just getting up every day and knowing that you're trying to tackle something that is just so difficult for so many people. And it's like, I'm never going to be a professional athlete. I never will be. I don't have the build or the skill to be a professional athlete. But with this, I know that if I dedicate myself and I devote myself to, trying to overcome these things that are, again, a lot of them are rooted in psychology. If I can overcome, and they're simple, but yet they're so difficult. If I can overcome these things, then I can get to a level just like anybody else out there that's sort of, succeeding in this business. And so the idea that I know that with this, I can reach that highest level, and I have the capability of doing so, and yet it's so difficult and challenging, is probably at the top of the list. Obviously, the lifestyle is tremendous. If you can do it, then having that time to sort of be able to focus on other things and not having a boss above you that is stressing you out about things is tremendous. But at the end of the day, for me, it's just being attracted to that challenge of something, and speculating something where it's so exciting and it's so difficult, is I guess what draws me the most.
All right, that's great. I mean, Joel, this has been awesome having you on, and I really appreciate you going into so much depth in the answers. It's been really good. So, before we go, do you want to share with listeners where they can find out more about you?
Sure. I mean, if anybody wants to, reach out, I have a blog that I write on every day. It's called JK on FX, JKONFX. Come over and check us out, and all the information's there. And always feel free to reach out to me. I love engaging with traders, and anything I can do to help. I always try to get back to people as soon as I can, and that's another great thing about this market. It's a global market, and probably one of the best parts of my career is when you're trading FX, you meet so many people from around the world, and that's amazing. I mean, you get to meet people from Australia and New Zealand and South Africa and South America and Asia, and so it's just been amazing. So reach out, come over to the blog if you want, and happy to help you in any way I can.
Awesome, I appreciate that, Joel. Are you also on Twitter?
Oh, I am. Yes, I'm at Joel Kruger on Twitter. So feel free to come over and check me out there as well.
Awesome. All right. Well, all those links will be in the show notes at chatwithtraders.com as per usual.
Thanks, Aaron. It's great. It's great. I really appreciated being on, and it was a pleasure.
Not a problem. All right. Thanks a lot, Joel. Let's keep in touch, and we'll speak soon.
Okay. Have a good one out there. Take care.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Alright guys, welcome back. Hope you've been having an awesome week. You know, if you think back, it's almost unfathomable to think that there was a time when it would take a couple minutes to execute an order. Nowadays, we have traders taking extreme measures just to get filled a nanosecond quicker than the next participant. But for this week's guest, Tim Bigham, that was the reality when he first entered the world of trading during 1985. And that entrance was straight onto the floor of the CBOE. Just a couple years into his journey, Tim experienced the full force of the infamous 1987 crash. While he survived and was still in good shape to trade the following day, this gave him a true appreciation for the importance of correct position sizing after seeing so many traders get wiped out. Tim really goes into the topic of position sizing and why it is absolutely vital to get it right during the later part of this interview, so make sure you stay tuned in. Additionally, Tim does a great job of explaining some of the terminology associated with options, how he uses scanning technology to generate trade ideas, and a whole lot more. I also want to point out that Tim will be keeping a close eye on the comments, so be sure to leave a question you'd like him to answer. Just go to chatwithtraders.com/Tim, scroll down to the bottom of the page and you'll see the comments section. Drop a question in there and Tim will be sure to get back to you with an answer. Alright guys, enjoy the interview and I will catch you soon. Tim, what's going on, man? How are you?
I am doing fabulous, Aaron. Thank you. We finally got some warm weather here in Chicago, so enjoying 60 degrees and won't last long. Tomorrow maybe snow again. So kind of like the market where, one day it certainly looks good, the next day not so good. So the ups and downs are kind of the things that keep life interesting in a way as well.
Absolutely. I think last time we were speaking, it was actually snowing where you are as well.
Yeah, it was definitely winter last time we talked, Aaron, and we're in spring, but it's not been much of a spring so far. So kind of like the market too, a good analogy. Again, we haven't had, much of a market this year, pretty flat across the U.S., equities year to date. So certainly struggling to, make any kind of headway. And I think, given where valuations are at and the fact that the free money, parade may be coming to not a complete end, but certainly has been ongoing for a long time now. It may be a struggle going forward here, in my opinion, to kind of grind higher. Might be kind of range bound for the next, several months, certainly.
Okay. Well, that could be a little bit boring for the people who are a little bit more long term.
Yeah, so and there's strategies, and we might delve into that a little bit. Using options where you can actually make money if nothing happens, which is a nice use of options that I focus on. But in a sideways market, if you're just flat out long stocks, a lot of times nothing happening, you tend to lose interest. But there's ways to take advantage of that as well, and hopefully we can get some people interested in some option strategies that are fairly easy to.
Good one. You'll ask that a little bit later. So, Tim, you're a true market veteran. You're incredibly passionate about trading, especially options. And, I'll be speaking with you today. So thanks for coming on.
No problem at all. A true veteran means I'm an old guy. I guess it's a nice way of saying that, but I certainly have the scars to prove. I am, as you mentioned, absolutely passionate in the game. It's what gets me, keeps me going throughout the day. And, scars and being able to, I think, is thing on, what you trade or just starting off. I know, when I started off in the mid 1980s, a bunch of guys who I learned from passed on their knowledge to me. And a lot of that was just, stuff you couldn't even put a price tag on, how useful it was. It was, real, useful, kind of through the war information. And, you can read books, you can read everything else, but until you've actually been in the trenches and gotten beat up a little, you really don't get the true flavor. So talking to the veterans who've been there around and having them pass it along, I think is invaluable. And I look to do that, with anyone new to trading or especially new to option trading. And I love doing shows like this to, kind of get that, if you will, new generation of traders, people interested in trading, excited about it, and pass along what I know to maybe, help guide them. So they might miss a few of the landmines. You're going to get blown up a little bit, believe me. As long as you keep all your limbs and everything, getting blown up not too bad is the key to trading. As we find out, if you can take away your 2 or 3 worst trades, if you look back, usually those are the ones that wreck people. It's not being wrong, it's being wrong in a big way.
Yeah, absolutely. And I mean, we really appreciate taking in your insights. So, it's great to have you on. But let's kick this off by taking us back to sort of, I think it was around 1985 where you sort of first got started in trading. So tell us how you got into it, and then we'll sort of go from there.
Yeah, absolutely. Actually, I was finishing up getting my undergraduate college degree at DePaul University in Chicago, and a friend of my dad's was a trader on the Chicago Board Options Exchange. So I basically, in between classes, would go over and kind of hang out with him, help him out, basically, be his errand boy, if you will, take out orders, do whatever needed. And, within probably a half hour of being on the trading floor, I instantly knew this is a place I wanted to be. It was just a, world that I'd never seen before, and the excitement level and what was going on there, I just found, intriguing. And, from really day one, I kind of was hooked on it. I really love the environment of trading and the culture of trading and being a trader too. It embodies a lot even off the trading floor. So I actually started then. I got a job as a runner on the trading floor. They don't have those anymore, but that would literally, call up on the phone. They'd tear off a piece of paper. You'd walk it out. You couldn't run, but you were called a runner. Walk it out to wherever that particular option was trading at. I was on the options floor, so if it was, say, IBM, you would walk it out to the IBM trading pit, hand it to the broker there, wait, and then bring it back, and that's how they reported the fills. Hard to believe in this day of electronics where, a half a second is an eternity. Back then it was, 2, 3, 4 minutes many times before the client knew if he got it or not. So, and then as a runner, kind of worked my way up the ladder, and then got my own seat in June of 1987, which was, just a few months before the crash of 1987. And the one thing I learned is, take care of your risk, and everything else will take care of itself. As long as you have an edge and make sure that your risk is defined, that's really all you can do as a trader. Just take every trade. It's kind of like almost being the casino in Vegas, right? You just want to make sure you do have a slight edge, and you want to make sure that not one particular trade or one particular gambler, if you're in Vegas, right, is going to take you out. So surviving the crash of 1987, being able to trade the day after, that day after, Aaron, was by far my best trading day of my career because I was, number one, able to trade. Probably 30 to 40% of the traders were being taken out by the risk managers. So I'm trading against the risk managers, and they don't care what price they pay or sell. And, if you were able to trade, if you had taken care of your risk and didn't get hurt by the crash, you were able to make back everything and then some the following day. So that really taught me the lesson that I live with to this day, which is, make sure you, number one, have an edge in whatever trade you have. And number two, make sure you have your risk defined and, get out when it's time to get out. So from there, I moved upstairs as kind of the world changed to more electronic. Started managing some money, had a little volatility arbitrage hedge fund. And now I still manage some separate accounts, more trading on my own now, and employing a lot more of the technology that's just come aboard recently. The other thing in this market is you absolutely have to, change. Paul Tudor Jones, who actually made a ton of money in the crash, and that was his claim to fame. But, one of his saying is evolve or die. And he certainly is, a trader that I try to, embody. Another saying of his is losers average losers, which means, don't, just because it's a bad trade, don't add to it to dollar cost average. Getting out of a losing trade for a manageable loss is the key to long-term survival as well. So again, it's not, being wrong, it's staying wrong that gets you hurt. And that's, what I've certainly learned along the way. So, that's kind of been my road till now. So I am, managing some separately managed accounts, the fund post Bernie Madoff. Hedge funds certainly aren't performing like they were. And being in a hedge fund with the inability to, have that transparency, most people prefer what's called a separately managed account, where you trade the same style, but you're able to see your account every day, get your hands on it, look at it. So you won't have that kind of Bernie Madoff scenario where, they can make up the reporting and so forth. So I've, evolved as we go along. So I just love going in, and I like the fact that, every trading day is new and you are judged every day by the market. It's very easy to tell how you did, right? It's not like a regular job. There's no politics. At the end of the day, if you're, in the green, that's a good day. If you're in the red, it's a bad day. I like that with the market. It has, no mercy. And there's no BS, so to speak, in the market. So, and I still love the culture of the market, even though it's changed. And the mentality of the people who tend to gravitate towards the market tend to be more, I guess, entrepreneurial, risk takers, okay with making mistakes. And, I think that's another thing probably for all the, people out there is make sure you can handle being wrong a lot if you want to start trading, especially if you want to start trading for a living, because you're going to be wrong probably more than you're right. And if you're not okay with that from a psyche standpoint, it's something, you truly want to maybe reconsider going into trading as a career.
Yeah, no doubt. The numbers don't lie, do they? So I'm keen to just sort of take that back a notch and talk a little bit more about how you were sort of learning. So what was it like learning how to trade sort of from the heat of the pit? Because the majority of us sort of learn by the means of the internet now in sort of one way or another. So how did that work for you?
Yeah, absolutely. And it was invaluable being actually on the trading floor and kind of getting my feet wet, not as a trader to start, and I got to learn kind of how the trading floor worked without having, money at risk, without really trading, but just getting a feel and knowing how things operate. And I did see right before the crash of 1987, a lot of people coming in because the market was red hot, very akin to, the late 90s, when the internet craze kind of hit, where, hey, this is easy to do, where they came in and they couldn't even look at a screen and tell you what all the numbers on there meant, but yet they were risking a lot of their money without even having an idea on how things work. So number one, it's changed because, as you mentioned, Aaron, now it's electronic and there really isn't a trading floor. I do some TV spots on the Chicago Board Options Exchange every Thursday, and I mean, there are 2 trading pits left on the floor. There's probably hundreds of guys instead of thousands down there now. And it really has become a pseudo ghost town. Kind of sad to see, but, it is what it is. So, but in the old days, the trading pits was as much about, being physical as it was about being, if you will, intellectual or trading ability. I mean, a lot of it was, yelling the loudest, getting the attention and so forth. It's kind of what you see in the movies, where people are screaming and yelling. Most of the time, I will be honest with you, I think trading is 90% boredom, 10% sheer terror without much in between. So a lot of the times you're just sitting around screwing around, to be honest. Making stupid bets, doing, it's basically daycare for adults a lot of the times. But when the market does start to move, you have to be ready and you have to be prepared. The other thing is we have gone from, using fractions in stock and option trading to using decimals. And it's much easier using decimals, I'll tell you that. I mean, it's, there were more cases than I care to admit where guys using fractions, because we are using in options especially, we are using 16ths and 30 seconds, right? And trying to figure out what 5/30 seconds, right, plus a quarter equals, right? A lot of guys would mess up the math and, end up basically screwing up the trade because they weren't mathematically inclined. So there was a little different edge to having, a fractional kind of mind. Now with decimals, it's, very easy. Everything's much easier to add. It's almost like, the cash register at McDonald's that spits back the change to you, or trying to figure it out in your head. So, but, the one thing, being a trader on the floor versus being, a trader, if you will, upstairs, or a retail trader, a regular trader, let's call it, completely different environment. A trader on the floor is just looking to make money by buying on the bid, which, is the lower price, selling on the offer at the higher price. So if, for example, the stock is 112 bid offered at 113, right? They're just hoping to buy at 112, sell at 113 all day long as orders come in and make that dollar spread, to use that analogy. Whereas from a retail standpoint, usually you tend to, be directional in nature. You're saying, I'm buying at 113 because I think it's going to 114. So most retail investors tend to need to have an opinion to make money, whereas most floor traders, it's almost better not to have an opinion. You really want to be hedged. It's almost like being a, bookmaker, where you want to make sure that you don't have too much lean on one side or the other.
Okay, that's really interesting. Just on that sort of that learning process still, I just had another question around that. And I sort of feel like there's kind of an assumption that if you're a pit trader, you make money. But would you say you sort of experience the same struggles that many other traders go through when first starting out?
Oh, absolutely. I mean, the attrition rate for traders is probably, about 80% don't make it. Either they blow out in a bad way, right? And I saw a lot of guys blow out, believe me. Some of them deserves to be. Other guys just happen to be caught with, too big a position at the absolute worst time. A lot of guys just kind of eroded out where, they didn't really lose or make a lot, but it wasn't working out for them. So, being a pit trader, doesn't ensure success. You have to know what you're doing down there. You have to know basically, how to identify the edge and then lay off your risk, right? And you're really looking to just capture little edges throughout the day. That's kind of what I'm doing upstairs now. The world has changed. Most of, the market makers it's called upstairs, in an office off the floor now. And because of the technology that's available, you can really, run a very similar operation, upstairs as you do downstairs and capture that same kind of edge. So, but there again, you do have to know what you're doing. And, when the market moves against you, you have to act quickly. I think that's really what it comes down to, Aaron, is, a lot of guys, when they start to have it move against them, are refusing to just cover for a small loss. And then that's where it gets to be a, big loss and then that unmanageable loss. Or they'll add to the position saying it's got to come back. I'm right, the market's wrong. I've always expressed the opinion the market's the market, and I'm, just trying to figure out what the market's doing. I don't know if I'm right or wrong. All I know is that, if I do this over the long haul, I probably will make money because there's an edge to what it's doing. How the market moves, I can't control. How I move is the only thing I can control. So a lot of market makers who don't make it is because they are, again, have that, hubris, that psychology, as I talked about in the first place, where you have to be okay, with being wrong a lot of the time, because, like I said, it's almost a, coin toss, but if your winners weigh your losers, you make 20 cents and you lose only a dime, you can be right, only one out of, 1.3 times, right? You can lose a little bit more than you win, but because your win's bigger than your loss, you end up making money in the end. And that's really the mentality you got to espouse if you're going to be a market maker on the floor.
Yeah, that's really well said. And I just want to make sure everyone listening is clear on this term, because I'm positive it'll come up again. Could you just give us an in-depth explanation of who is a market maker and what is their role?
Yeah, and it's changed. Back when I was on the trading floor in the options markets, right, I would literally quote markets, right, and if someone came in who wanted to buy or sell at those prices, I would have to facilitate that. So basically, I would set the market, and if someone wanted to trade at the price, so I would say I would buy it at $1, sell it at $2 to keep it simplistic. If someone came in and said, I'll pay $2, I was obligated, right, to sell at $2 because I'm making a market in that particular option. Same thing with stocks, same thing with futures, whatever in the trading world, they make a market, they will give a bid, a price where they'll buy at, right? And an ask or offer a price where you will sell at, and you're obligated to buy or sell at that price. How much, again, is dependent. You can quote for a certain amount of shares, certain amount of contracts, whatever it may be. But that's what a market maker does. And usually the fair value price lies in between where you're willing to buy and you're willing to sell. So basically, if someone comes in and pays $2, right, you can sell it there. It's only theoretically worth $1.50. You go out and hedge it, and then you've captured that little bit of edge. You've sold something that's worth $1.50 theoretically for $2, and then you've hedged it off, and then you just keep doing that day in and day out. Of course, the problem can arise if someone comes in and buys it at $2 and you can't get your hedge on because the market starts moving against you. So in this day and age with electronic trading and how fast things can move, I will tell you, being a market maker is a much different and much dangerous and really less financially beneficial game than it used to be. I think there's a big advantage to being a market taker, if you will, being a trader who can just wait and, not be obligated to be on the bid and ask spreads. So I think the market's really changed and the structure has changed. It's a great time for, the retail guys here because, you don't have to trade. Whereas if you're making a market, if someone wants to trade with you, you're obligated because you've set a price on it.
Yeah, okay. That's really great. So thanks for breaking that down, Tim. And it kind of leads into another point about change. So if I was to ask you, say, 25 years ago, what was your edge? I'm presuming you would say something like it was the fact that you were sort of in the pit and just sort of amongst the action. But as we've recently seen the pit action sort of fading out and technology slowly taking over, where would you say you can now find an edge in the market?
Yeah, edge is actually basically in the same manner, but not in the same place. Being an upstairs trader now, we have technology that allows us to identify, either unusual activity or, bids and offers that are worth more or less than the theoretical price. And then we're able to view those and quickly act and say, do we want to take advantage of that or not? So, with the option scanning that I use at RB Trader, we're able to identify a lot of stuff, coming in out there that will give us, a look at what's going on, very similar to being on the trading floor, right? So it's almost like bringing the pit upstairs. And they have a great web-based scanner, too, that does the thing, for the retail guys, that allows you to, jump in and kind of level the playing field as well. So the thing about technology is, it really does really give almost everyone the same kind of advantage. Obviously, the speed differential, the guys who are willing to, build a, microwave tower on the top of a mountain to, be able to be quicker by, a nanosecond, right? You're never going to compete in that game, the real high frequency guys, the latency guys. But as far as getting, information and stuff, it really is becoming more and more readily available as we move on here. Certainly news has become, more available. Almost everyone gets the news at the same time because in this world, everything is, out there in a matter of seconds. So it used to be, you got the news, many times hours before the public did, and you're able to act on it. Now the news, if it's, a second or two, that's a long period of time. So everything is quick now, and everything really has favored, the retail traders, the guys newer to trading. It's really a great time, I think, to get into trading from a level playing field aspect. The high frequency where they're saying, hey, they're, making, half a penny on you. Who cares, right? We're not going to beat that game. But the benefits have so outweighed that. The pit trading is a game of the past. It's gone upstairs. But, the idea of being able to take advantage of order flow will always be there.
Yeah, that's really interesting, Tim. So you talked about sort of scanning for trades there. So do you want to give us some insight on how you're actually scanning for your trades, sort of currently?
Yeah, absolutely. I use rb-trader.com. It's basically an option scanning tool. And you can go on the web and, get a trial of that for free, but it will come up with what's called unusual option activity. It will have size activity. It'll have volume activity. So it basically takes all the trading that's going on at that very moment and populates it with something that's, let's call it interesting, actionable, something that's, unusual, out of the norm. So you get big size, right? You get unusual, something that normally doesn't trade a lot, trading a lot. So it provides, the idea for, trade generation, and it provides that kind of edge that you're looking for. You can also see what, the big guys are doing out there in the marketplace in options. And the nice thing about options, and I'm sure, a lot of the listeners might not be that familiar with it, but the options market is really starting to be a place where, the big funds and the big players are starting to express their market viewpoints in a way they really hadn't done until just recently. Carl Icahn probably is a name familiar to most listeners out there. but a lot of his, plays that he's done recently has actually been with options. They were over-the-counter options for the most part, but those bleed through to the listed option market. So I think, the option trading kind of uses is getting more and more predominant. So it's, I think, the last kind of growing field out there. So if anyone's, interested, certainly they can get a hold of me, and shoot me an email if you want any, more information. But it is a way to, express your viewpoint by the big guys out there. And it really sometimes is a tell. Kraft Foods just had a recent merger, Heinz, right? And about a week and a half before that deal was announced, there was huge volume in the options market. Guys were buying calls that these things normally didn't trade, and sure enough, a week and a half later, boom, here comes the deal. That's happening more often than not. I have no idea if it was, insider buying, right? But all I'm saying is that a lot of times you'll see big volume come into the options marketplace, unusual volume, and then a move foul in the stock. So it's a way you can kind of take a look and see, hey, this is getting a little bit interesting out here. Maybe we want to take a look at. So it's a great way to generate trade ideas. And it's also a great way if you trade, kind of spreads like I do, to take a look at where prices get a little distorted as well. So, and like I said, it's available for the retail guys out there, and it's, really leveled the playing field. Options, even if you don't understand, the minutia of them, looking at the options market to see how the stocks may react is many times a good use of the options market as well.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with 0 locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Sure. So those couple examples you gave in there, is that what you'd call unusual options activity? Because this is a common term in the world of options. So do you want to just explain that a little bit more? Like, what does unusual options activity actually refer to?
Yeah, absolutely. I'd say, our definition precisely is there's a term called open interest, which in essence is, how many of these things have, traded kind of in the past. It's a look at that. So it's kind of, like how many, are out there that people have. And then unusual, if all of a sudden, for example, with Kraft, there was, I think, about 500 open interest, 15,000 of these contracts traded, right? So, that's, definitely unusual. Now, if you had Apple, right, 15,000 contracts would be just a normal day because Apple trades so many options on a daily basis. So it's it really depends on, the normal kind of trading activity. And when you see a big pickup in volume, right, especially in one particular option, and if that buyer of the option is aggressively paying the offer price, paying the higher price, right? That's showing that he really wants to get in. That's even a bigger kind of, interesting look. Here's a, big trade going on, and this guy is just saying, I want in, I'll pay whatever price. So that's what the scanning technology kind of allows us to identify. So, big volume doesn't necessarily mean unusual. If it's big volume and something that normally has big volume, that's just a normal day. And, sometimes even say 1,000 contracts, right, which isn't necessarily a big volume sort of option trade, but 1,000 contracts on something that hardly trades is definitely unusual options. So it's really a comparative. Again, we use the term open interest and compare that to the trade volume. With open interest, again, is a fancy way of saying how many contracts have kind of been out there already in the market that haven't been closed. It kind of gives you an idea on how much activity normally is for that option. And when, that day's volume exceeds that by a, factor of 4 or 5 to 1, that then becomes, kind of unusual options activity, something that doesn't normally happen. And that piques the interest, certainly, to take a look closer to see what's going on out there.
Okay, so once you detect that sort of unusual options activity, how early do you have to be to sort of detect that to be able to actually trade it and then profit from it? Like, is it too late? Like once you recognize the big volume sort of coming in that's out of the normal, are you already too late to it? Do you sort of need to anticipate it building up to that? Or can you just sort of break that down a little bit further?
Sure. There's two ways to play it, and I prefer the second way that I'm going to talk about it. The first way is you basically get into, kind of the game of musical chairs where, everyone rushes in and just keeps buying, right? Hoping in essence to sell to the next person who's paying a slightly higher price for it. So usually how it works, Aaron, is the order will hit, right? It becomes kind of unusual activity. It's kind of, out there now. It becomes general knowledge. And then there's people who think, hey, this is unusual activity, I'll follow along with it. Certainly there's guys on TV and websites who just buy them because they're unusual, right? Blindly just saying, just because someone else is paying a lot for these, I'm going to pay a lot for these because he must know something. That's fine, and that game can work and it can't work, right? But at some point, you're paying a lot for those options. It drives what's called the implied volatility. Implied volatility is a fancy way of saying the price of the option to really an extreme level. So if you're, too late to enter into the early stages, what, we're doing is we are selling those inflated options and we're buying the shares of stock against it. So we'll buy the stock, for example, in Kraft, we would have bought the stock, sold the calls that people were, overpaying, right, to get into, and then basically wait for that buying to subside and, that price will slowly come back in line. We're hedged with the stock and we kind of take the trade off. That would be another way to play it. You can do it certainly with spreads trades, but you're right. I mean, jumping into the, game of I'm just going to jump in because this option's hot. That's a very difficult game to win in the long run because, anytime you're trading kind of a froth, you don't know how high it's going to go before people say enough's enough.
Okay, right. So let's move along a little bit to just sort of some more general advice for traders who are listening, because, I'm sure you've picked up a ton of lessons over the last, however many years. So what would you say to any trader who is perhaps struggling with the psychology of trading? Like, how do you now deal with this aspect and keep emotions under control?
That's a very tough thing. I mean, that is, and I've dealt, I don't care how good a trader you are, you are going to have periods of drawdown. You're going to have periods where, to put it bluntly, it just kind of sucks bad, right? And, it starts to spiral down. And that's a tough thing to, dig out of. But if you trade long enough, you're going to have, hopefully many times that happens, because that means you're going to have many upswings as well. I'm a big golfer, and it's akin to having kind of the yips in golf, right? And the only way to cure it is to start making some, short putts, right? Then your confidence comes back. So, if you start to get beat up, it's number one, it's okay always to take a break, right? The market's open every day. You don't have to trade every day. Two, I would say bring your, position size down. I always use, how my P&L is going to, kind of increase or decrease my position size. Same thing I used to do when I used to play a lot of blackjack and poker, right? When you're up money is when you should increase your bet, if you will. When you're down money is when you should pull back. Most people are exactly the opposite, there's been studies on there as well. Kahneman and Tversky, right, have a great one where, people basically do the exact opposite. When they're up money, they want to hold on to that. When they're down money, they, start to say, I'm, going to be all in, right? So again, just take a step back. It's okay. You're going to have drawdowns, understand that. And, the one thing I think if I had to have to remember from the podcast here is position size, position size, position size. So the way to control your risk, right, is not to be risky when you put the trade on. So position size accordingly, have your stop in place, stick to your stops. Again, the nice thing about options is you can do spread trades that have defined risk, before you even, get going what your maximum loss could be. But if you're trading something like a stock or futures, make sure when it hits your level, you're out. If you can't pull the trigger, make sure you actually put that stop out there. But position size accordingly. So if it does hit your stop level, right, you can live with that kind of loss and just move on to the next trade. And you may have a series of losses. You have to understand that as well. And at some point, stepping away, I think, is key to doing it. But, understand going in, you're going to have losers, you're going to have drawdowns. And again, if you have your position size in place, those losses won't be the ones that really are kind of psyche ruining. If you lose 1 or 2%, I don't think anyone's going to be, fearful of putting on the next trade. But if you lose 10 or 20%, all of a sudden you get much more gun shy. So that's why position size is absolutely vital. And I've seen, people don't blow out, because they're wrong. People blow out because they're wrong in a big way. Long-term capital management, I might be, talking to too young a crowd, but that was certainly one that blew out, not because they were really wrong, but because they were wrong in such a over-levered way. If you look at any of the great blow-ups in trading history, it wasn't being wrong. It was because they were huge positions. The London whale we recently saw, JP Morgan, classic example, right? He was wrong, right? But he was wrong in a massively levered way. So it's that leverage, that too big a position, right, that kills you. It's not being wrong. So again, position size, if you even have to write that down, I have notes all over my trading screen to help me throughout the day. And I've been doing this for, many people say way too long, but I'm not quitting anytime soon either. But I actually have little notes that will help me, remember even after all these years to follow, those rules. And, it's kind of like, once you break it once, it's, you don't want to make sure you break it again. So, that would be my high advice to everyone. Accept the fact you're going to have losers. Accept the fact you're going to have drawdowns, that, it's going to be lousy sometimes. And if you look back over the course of 12 months, usually all your money is made in probably 2 or 3 months. Usually 6 months you're kind of, treading water. Another couple months are probably losers. So, it's inevitable you're going to have periods where you're not doing much. Inevitable you're going to have periods where you're, dropping a little bit. But, the key is not to have those losses, be so big that, even if you have gains, you're not going to get back to break even. So position size is everything, and position size allows you to keep your psyche in place too when you go through the inevitable tough times.
No doubt. I think that's super important. That was really good. So let me ask you one last question, and then we'll probably sort of start to wrap this up. So what is it that you would say motivates you to trade after such a long stint in the game? Is it the challenge? Is it the lifestyle, the money? Like, what would you say?
Well, I mean, the money is kind of, it's nice, obviously, and you do need the money, but the money really is a way of keeping score, and I'm a very competitive person. And I also love the challenge every day. I like the fact that it's really unknown every day that you go in. I love the lifestyle. I love kind of the mentality that traders have, the ability to, if you're wrong, you get out, and guess what? You get a fresh start again. That's rare in this, kind of world, right? Where, you can have 50 or 60 fresh starts, throughout the day, and you just keep on keeping on. And perseverance, I think, is, a key, absolutely trait of great traders, to kind of carry on. And, it's also, I really just love the, kind of the challenge every day of trading and the ability to find that kind of, edge, that trade where you just say, you know what, this thing, worked out exactly as I anticipated. It's, it doesn't happen all the time, believe me, but throughout all the years, it's, again, to use golf as an analogy, it's like hitting that, great drive straight down the middle. That's what keeps you back golfing. You can have a series of not so great shots, a series of lousy ones, but then you have those, shots that you can just sit there and watch. Trading very much the same. And I like the challenge, the fact that it's not, mundane, boring. Every day is a fresh start, a fresh day. And it's really challenging mentally all the time. There certainly is no, drudgery to trading. And, I wake up every morning, looking at the markets and kind of go to bed every night looking at the market. So I do have a life outside of that. It's not all consuming, but it is something that, gets me revved up every day, even after all these years. So again, make sure you're revved up, but not for the reason for excitement, but for the fact that you're kind of passionate about it. There's a difference. If you're looking for excitement, I'd say go to the casino. It's a lot cheaper. Trading is more of a business approach. I think you need to look at it more as a, kind of business approach rather than that excitement level approach.
That's awesome. That's really good. So again, thanks so much for coming on, Tim. It's been an honor to have you on. So I really appreciate you, making the time to, for this interview. So before you go, do you want to tell listeners where they can learn more about RB Trader and also connect with you?
Yeah, absolutely. I mean, it's rb-trader.com. The dash is soon to be gone. From what I understand, I'm not the web guy by any means, but so it's rb-trader.com. And then if you want any information, I've also started a new initiative, deltaderivatives.com. The website will be launched soon. But if you need any information, we're also offering some free research if you want, or just general questions. You can just email marketing@rb-trader.com and just say you heard, me and Aaron talking, and you're interested in, some free research, or if you have an options question, or, anything at all. I love talking options, especially with people who are new and interested in it. So again, marketing@rb-trader.com, and whatever you have, there are no bad questions. And if you have any interest, hopefully you get the fire lit and, have the passion that gets you through the tough times.
Awesome. Yeah, that's really good. We'll put all those links in the show notes, of course, at chatwithtraders.com. Would you be open to, answering questions? Maybe if people just leave a comment on the site, that might be just as easy. Are you open to that?
Oh, absolutely. I love that. And more the merrier. I mean, there are no bad questions. So if you're brand new and you have any question on it, I love to, answer them. Again, it's akin to, I am not a doctor, right? But if I had a medical question, I would ask my doctor, right? If you're interested in options, you don't have to be an options expert, but you would ask a question about options. So, feel free to ask anything. and I will make sure they're all answered, because we all started at the ground floor. I know I did, and I know where it brought me. So hopefully you get the same kind of passion out of it than I did. And if you do, then I consider it a job well done on my part.
Okay, that's awesome. I really appreciate that. So let's make that, if you just go to chatwithtraders.com/Tim, you'll go straight to the page, scroll down the bottom, leave a question in the comments, and Tim will keep an eye on that to sort of answer any questions you might have, especially in regards to options.
Absolutely, and would love to.
All right, awesome. And if you want to check out more, just go to rb-trader.com, and of course those links will be in the show notes as well. So thanks again, Tim, and let's keep in touch, and we'll speak soon.
Appreciate it, Aaron. Take care, and thanks everyone for the time. I really liked doing this the first time and hope to do it again soon.
No doubt. Speak to you soon.
Thank you. Bye-bye now.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey there, what's going on? Welcome to episode number 17. This week, we're swinging price with equities trend trader Jason Levitt. Like many who get into trading, Jason had no formal education in the field. Actually, prior to trading full-time, he was waiting tables in a restaurant as well as bartending. This is where he began swing trading, and to this day, Jason is still primarily a swing trader, riding trends anywhere from a few days or a few weeks. Sometimes it's even a matter of months when his aim is to take out the large chunk of the move. Ultimately, the market environment dictates his holding time. This is somewhat similar to the way I like to trade, so I found many of the answers Jason gives out during this interview to be particularly interesting, and I'm sure you will too, regardless of the time frame you trade. Also, in the later part of this interview, Jason shares a story about the wildly successful independent traders he's met and the one standout trait they all have in common, which is again really insightful. Also, just want to mention that Jason is prepared to take anyone's questions, so if there's something you'd like to ask him, just go to chatwithtraders.com/Jason, scroll to the bottom of the page and drop a comment in the section there, and Jason will get back to you with an answer. All right, guys, enjoy the interview, and I will catch you soon. Hey, Jason, how you going?
Good, Aaron. Good to be on your show. I've listened to a lot of your shows that you've already posted, and I'm happy to be part of the bunch.
Nice, man. I appreciate it. I'm certainly not going to say it's the same, but from what I've seen, I think there are quite a few similarities between how you trade and how I trade, as far as sort of swing trading, the bigger moves. So hopefully I'll have some great questions to ask you, throughout the interview, and listeners will learn a lot from your answers and insights. Let's just kick this off by telling us about your early days when you were just beginning to get into trading, and sort of where did the interest come from?
Okay, so I don't really have a sexy story to tell where I started out on. I wasn't raised in a finance-oriented family. It's not like on Sunday mornings there were, the stock tables were thrown on the kitchen table, and we went over things. I really I didn't know that much about Wall Street. I had no interest, but it was the late '90s. Tech stocks were doing great. I just wanted to make some money. I didn't think it would end up being a career. I actually didn't have that much interest in it. I just saw people making money with tech stocks, and I figured, I want to get involved. I want to make some money. Once I got involved, and I kind of saw the problem-solving aspect of it. My background was as an engineer. When I saw the problem-solving aspect of it, the puzzle aspect, Wall Street was kind of a mystery to me. That kind of drew me in closer. I saw stocks do things that didn't make sense. And while to some that would be confusing, I actually thought it was kind of fascinating. I saw companies come out with earnings and they'd beat and the stock would go up, and I'd see another company come out with earnings and they'd beat and the stock would go down. Or analysts would come out and upgrade or downgrade stocks, and sometimes they go up, sometimes they go down. Sometimes things made sense, other times they didn't. And again, while this to some people would raise a red flag that they would just throw up their hands and say this just doesn't make any sense. It actually was fascinating to me. To me, it was a big problem-solving thing. To me, it was like a puzzle that needed to be put together. So at first, it was the money that kind of pulled me in the door, and then it was like the problem-solving aspect of Wall Street kind of kept me there. Then after watching the market and familiarizing myself with things, just playing around, buy a couple stocks, sell a couple stocks, and just kind of learning a little bit about what's going on, I actually realized that hey, this could be a career. I could make a solid income. I had no big grand illusions on being like a hedge fund manager and managing billions of dollars, but I thought hey, this could be a pretty good career. I could make a solid income. I could trade from anywhere. Literally, I just got back from Costa Rica. I lived in Costa Rica for 18 months, and I would not have been able to do that if I had a normal job. I saw that it potentially can give me freedom, not a ton of freedom because the market opens and closes at the same time every day, but still more freedom than I'd have in a job. But so overall, it was kind of appealing. So I guess you can say the money was initially what kind of drew me to it, and then the problem-solving aspect kind of brought me in closer. And then when I realized that hey, this could be a career, I can make a decent income, I decided to go for it. I decided to dedicate myself to trading and see what I could do. Okay,
that's great. So what was your job sort of at the time when you started to get into trading?
Okay, at the time I got into trading, I was a bartender. I went to college to become an engineer. I have a BS and MS in engineering, but I spent most of my 20s working in restaurants, bartending, waiting tables. So that's what I did at the time, and it actually helped quite a bit because I could work. A lot of traders they start out and they dream, they wish, they're like, man, I wish I could be a full-time trader, and I'd accelerate my learning process if I could actually be in front of the market all day. And to that, I was actually kind of lucky because as a restaurant employee, I'd work nights and weekends a lot, and so my days, at least a couple days a week, I was free to closely monitor the market.
That's cool. So what were some of the first things you started to learn about when you were getting into trading, and where were you actually learning from?
I went to the school of hard knocks. Everything I know about the market, I read from reading books, reading a little bit on the internet. But when I started in the late '90s, early 2000s, it's not like today where you have podcasts and really good blogs and financial websites. I mean, back then it was you go to the Yahoo Finance pages or the Yahoo Finance message boards, and they weren't very good. As you probably have heard. So everything I learned was reading books and just making trades and being very objective and keeping track of what I did, keeping track of what worked and what didn't work, and just kind of slowly iterating my way towards like a solid strategy that I could execute. I wish I had somebody who could put their arm around my shoulder and say, "Let me show you the way." I wish there was like a book or two that I could point to and say, like, that one book really, everything I do, like, I got from that book. But it wasn't like that. It was more like read a book and grab like one little nugget out of it, read another book, grab one little nugget out of it. And over the course of time, reading, 30, 40 books and making hundreds of trades, I literally just iterated my way towards a strategy that I could, that worked for me, and something that I could execute on a pretty regular basis.
Okay, something you mentioned in there, which I'd just like to pick up on, is you said you were tracking your trades and your progress. How'd you go about documenting that and actually tracking it?
Because I wasn't formally trained, I didn't have, it's not like I was handed a spreadsheet and someone said, like, you got to fill this out for every single trade. For me, it was just do a trade, and did it work? Did it not work? Why did it work? Why didn't it work? Did it work because, like, hey, this is a good setup in a good conducive environment. You got in at a good time. You managed it well, and it worked out. Sometimes they were like that, and I could say, like, haha, I'm onto something that works. Other times I do everything right and they didn't work. Sometimes I get in, it would be an average setup and I'd get lucky. Sometimes I was unlucky. So I didn't have an official, way back at the beginning when I didn't really know what I was doing. I didn't have an official record keeping system. But I, generally speaking, just kind of kept track of, like, what was working, what wasn't working, and I was very objective. I would never, if I was lucky, I would admit that, like, all right, you did something stupid, but you got lucky, so don't do that again. And other times I'd make a good trade and it wouldn't work out, and I would say, hey, I did everything right, it didn't work out, that's just the way it goes. Do that 100 times and you're going to win more than you lose. So no official record keeping system, because I didn't know even what one of those would look like. But I generally would just kind of keep track of everything and be as objective as I possibly could.
Okay, that's great. You obviously didn't stay a bartender forever. So how did you transition from being a bartender to becoming a full-time trader? Like, what was the tipping point for you?
Luckily, the tipping point was just like, you go through a period where you just feel like, holy cow, everything is starting to click. Mistakes that you had made in the past, you're not making. Losses that may have gotten away from you in the past, you're not letting that happen again. That was back in the day, like in the early 2000s, where, you'd get an analyst that would go on CNBC and they'd talk up a stock and the stock would gap up and then, like, immediately fall down after the open. And you wouldn't fall for that kind of a trick. You go through a period where it's like, wow, this is actually happening. I'm like, things are starting to click. I'm just more consistent with my methods. I'm not, like, flying by the seat of my pants. Like, I actually have some sort of, like, clear strategy that I can execute, and things are, like, falling into place. Now, for me, luckily, being a restaurant employee, I did not have to just suddenly make the jump. Okay, if you're a regular employee and you work a normal job and you, like, dream about being a full-time trader, at some point in time, you might have to make the jump and actually quit your job and do it, which I don't know if I'd advise, because, there's nothing wrong with being, per my way of trading, there's nothing wrong with having a job. Like, you can actually trade and have a job at the same time, as long as you can have access to the market once in a while during the day. But as a restaurant employee, it was easy for me to transition because I could work nights and weekends and basically be in front of the market on most days. So, like, the very last year that I bartended, I actually worked once a week on a Saturday night. That's all I did, because I was pretty much a full-time trader Monday through Friday, and then I just worked every Saturday night. I made I made whatever money, and that was just the money I had for the month. Luckily for me, I didn't have to just take the plunge. I could just ease into it because of my job.
Something you said in there about sort of how things just started to click. When things weren't clicking for you, was there ever a point when you sort of questioned yourself and maybe thought, maybe trading's not for me? Did you go through a stage like that?
I did not. And that is more of a function of my personality type, that I was young. Risk meant nothing to me. It meant absolutely nothing for me to, take huge positions that were way beyond what I should have taken. It wasn't uncommon. When I had like 50 grand, it wasn't uncommon for me to buy 4,000 shares of a stock and hold it overnight, even though you're not supposed to do that. And the market could open the next day up or down, or that stock can open up or down like 2 points the next day. And I could immediately be up or down $8,000 on a $50,000 account. And it like didn't even faze me. So for just a personality type of mine, like I never doubted it. Even when I had a bad day, bad week, bad month, even when I got, my account got cut in half, which happened numerous times, and I've had some pretty big losses. I never doubted it. Maybe it's a fault of mine, because maybe I'd pursue something someday that I don't have any business pursuing, but it never fazed me to the point of wanting to give it up. But usually if I had a bad day, I was living in Chicago at the time, I can just go for a walk down Lake Michigan, clear my mind for a couple hours. And I usually can come back and kind of give myself a little pep talk and say like, all right, we've done it before. Let's do it again. Let's circle the wagons. Let's start from scratch. Let's do this. Let's not make these mistakes again. So it really didn't faze me that much. I never really had thoughts of giving up, even when I had some tough times early on.
Okay, so you would sort of say that your psychology was in a pretty good place right from the word go?
In regards to my confidence level, yes. It doesn't mean I didn't get pissed off when things wouldn't go my way. But yeah, from a confidence standpoint, and I'll admit that if I was starting to trade right now, it might be harder because I'm older. But back then, at my age, I don't know, I guess there's something good about being really young and slightly naive that actually helps you succeed a little bit.
Yeah, I think that's a really good point. What sort of time period are we talking about from when you sort of started to get into trading to when you actually became full-time and really going for it?
So I started in 99, traded late 99, early 2000. I would say about the fall of 2000 is when I really went like full-time. Not full-time because I could, not full-time because I was making enough money to justify going full-time, but full-time because I finally had enough money in my account to actually, to consider myself kind of a full-time trader. Like up until then, like I started my account with very little, with just a couple thousand. I eventually deposited more and more and eventually got it up to 10,000. And then I traded it up to like 65,000. And I went from there, and I lost money when the dot-com bubble burst, and then I made it back. And then as I started making it back, that's kind of when I went like full time. Again, not because I had enough money or not because I was good enough, but just because like I had enough money that I could actually trade. Like when you first start out and you only have 10 grand, there's not a whole lot you could do. But when you have 50, 60 grand, upwards of 100, which is what I had, that's when I could like, hey, I can actually take like 2 or 3 positions and I could hold them for a little bit, and I can get out of one position and move into another position if I wanted. So that's about it. So about a year after I started, I like started acting like a full-time trader, even though I wasn't good enough. And then I would say like it was probably another year to a year and a half before I was like really, like I said before, where I really like kind of crossed the threshold and said like, wow, things are clicking, and I'm really like, this is actually happening. I'm actually doing it. I'm actually, no more hoping that it'll work, and no more having to rescue myself after getting my account cut in half. So the total amount of time was probably about 2.5 years between when I started and when I actually got to the point where I could go full time and actually live off my trading.
Okay. And when you made that transition, did you sort of notice any difference in your actual trading? Did you sort of experience new challenges when you were solely relying on your trading for an income than what you had in sort of the 2 years prior?
Yeah. Well, first of all, like I said, like the last year I was only working like once a week at the restaurant, so I had a little bit of an introduction. Like I didn't make enough at the restaurant to actually fully support me. I mean, I was young. I just had like a small studio apartment in Chicago. My bills were really low. I was very accustomed to living well below my means. So I made almost enough to cover my expenses, but not quite. So I had a little bit of an introduction. It wasn't like, boom, your job just got cut off and you're relying 100%. But yeah, at the beginning, there's definitely some, you wake up in the morning, you're like, holy cow, this is like, there's no more paycheck. There's nothing else to rely on. It's like you it's all you. There's nothing else. There's no safety net here. Well, there's a safety net. You can go get a job again, but there definitely was a couple months where it like felt really weird that like, wow, I'm truly on my own here.
Like I mentioned at the start, I'm keen to dig into more about your methods of trading. So firstly, how would you best define your style or approach to the markets?
I would describe myself as a trend trader. I mostly zero in on chart patterns, but the bigger picture is I am a trend trader. And within the trends, and like I'll keep knowledge of like what the big picture trend is, and then within the trends there are going to be minor trends. So if I were to sum it up in one sentence, I would say like I trade chart patterns within the major trends.
Okay, 2 questions. What markets are you most active in, and what would you say is your average holding time on any given trade?
Okay, so I trade U.S. stocks. That's pretty much it. I've done futures, and I still do them occasionally, but I don't focus on them. I've done options, and I've done well with them, but I found that like if I try to do too many things at once, the distraction actually takes away from profits and such. I'm 100% focused on just U.S. stocks. My average holding time is a good question. I would group my trades into 2 broad groups. Okay, trades are either relatively short term, which means I'm in, I'm out within a couple days, maybe a week at the most. I'm only looking for 4, 5, 6%, maybe 10% if I get lucky. It's a good pattern. The market environment is good, but for whatever reason, maybe there's resistance overhead. Maybe there's a lack of support in the group. Maybe the entire market is maybe trading in the big picture might be up, but maybe in the short term it's like trading range bound. Maybe the personality of the stock is such that like, hey, you're only going to get a quick pop for 5% and that's it. So trades fall into that category of like I'm in, I'm out, and I'm not going to bargain. I'm not going to negotiate. I'm not looking for a big move. I just want to make a quick buck in a few days or a week. The other group of trades I have are actual longer term trades where I want to ride a bigger trend. I want to ride a bigger trend, not the market trend, but I'm trying to ride like a trend within a particular group. And those are trades that I want to hold for as long as I can, 6 months, 9 months, 12 months. Okay. So again, I'm either quick. I just want to make a quick buck, or I really want to give stocks time and space to play out because there are like prevailing winds that are going to carry a particular group for several months, and I want to be able to ride that as far as I could. Okay, so it's important. Like before I enter every trade, I literally like tell myself like, is this just a quick trade, or is this the type of trade that you're trying to hold? Because how you manage those is going to be entirely different.
Okay, and when you're analysing the trends, what sort of chart are you looking at? Are you looking at maybe sort of a daily, or maybe even zooming out further to a weekly chart for those?
Yeah, I do almost all my work on a daily chart. Occasionally, I will look at the charting software I use, which is Telechart by Warden Brothers. They have a function where you could, instead of having, you can have a daily chart, which is 1 day, is each candle is a day. They have a thing where you can switch it to like every candle is 2 days, or every candle is 3 days, every candle is 4 days. And then of course the weekly chart is every candle is 5 days. So I find that the weekly is like too far. Like I can't make decisions based on the weekly chart because it covers too much ground. So if I want to take a step up from the daily chart, I'll jump to that 2-day candle. So it gives me a slightly longer term view. But most of the work I do is on the daily.
Okay, and how do I say this? Why do you have the 2 sort of really defined approaches? So you've got your one trade where you might be in it for a couple of days, and then the other you said could be upwards of 6 months. What's your sort of strategy there of having the 2 different approaches instead of maybe just only taking the shorter term trades?
Yeah, I think it just goes back to the beginning. When I was taking a lot of trade, I'd get into a trade, and let's say I'd buy a stock at 30 and I'd get out at like 32 or 33, but then it would go up to 40 or 45, and I'd say like, oh man, why did I sell that? It went up to 33 and it pulled back a little bit, and like there was nothing wrong with the overall trend, and there was no reason to like panic and get out. Like I could hold that and make, it's a lot easier to just nail a 15 or 20 point move one time than it is to nail a 2 or 3 point move 10 times. so then like the next trade I would get in and I'd say, all right, this is it. I'm going to use a loose stop. I'm going to let it go. I'm going to give it some time and space. I want to see if this thing could fully play out. I want to try and nail a big move. And that one would just go against me, and I'd have like a 10% profit turn into like a break-even trade or even a loss. And I did this, I did this like dozens of times over the course of like a long time, like at least a year. And then I kind of came to the conclusion that, like, you know what, you have to categorize trades. They either need to be quick or they need to be longer term, and you can't mix them up, because if like oil stocks last year, like in February, March, April, May, all the way up until the July high, I had a handful of oil stocks that I just held for like 6 months. And like I held a core position, and every time they pull back, I would buy some more. And then when they'd like make a new high and make a higher high, I'd take some off. And then I would trade around a core position and just hold and trade around the core position. But if I would have gotten out like, 3 days later, then I would have watched, 30, 40, 50% gains go without me being in it. But then there's other trades that like, they're not going to go 40, 50%, like a housing stock is, maybe you could pop 5%, but like to sit back and hope that it's going to go 50% over the next 6 months, it's just not going to happen. So, I mean, the reason why I categorize trades like that is simply because I made so many trades early on. I got lucky sometimes. I was unlucky sometimes. I made good decisions, bad decisions, and getting feedback, real-time feedback from trades just made me realize that like you got to be one or the other. Because if you're somewhere in the middle, you're probably gonna lose. Because if you're in the middle, that's where a stock will go up 10% and then pull back, and you panic right at the worst time, and then it keeps going. So just making lots of trades, forced me into this frame of mind where I'm just trying to make a quick buck, or hey, there's a major theme that I'm riding here and I want to give it every opportunity to play out.
Okay, and I think you sort of touched on it there, but just to sort of elaborate a little bit more, how are you defining if this trade is going to be a short-term, or when we say short-term, sort of like a week-long trade, or one of your trades that's going to be a big picture move? Is it just sort of what sector that stock falls into, or is there something more?
It's a combination of what sector it falls into and if there are like prevailing themes. So for example, with oil, and I'll say like solar is somewhat related to oil. So as I said, like at the beginning of last year, I rode several oil stocks up for big gains, and I just held stocks and traded around a big position. But that's because oil was trading up at like 90 and over 100 for many, several consecutive months, and it was a pretty safe place to be. And I mean, it felt safe. Like you could tell that like stocks would gap down and then they'd rally, or they'd pull back and then they'd immediately get bought up. Like you can sense the strength in the market. Oil was high. Everything was kind of hunky dory. There was, everything was good. When things turned down, the entire group went down. So you got to sell. And if you want to go short, you can go short. But yeah, and right now a major theme is the dollar. The US dollar is super strong. Pretty much all the currencies across the world are super weak. So anything that is going to, do well in a strong, well, not much is going to do well in a strong dollar. However, that's not my trade. That's not the trade that I want to get into. But any commodity based stock that is not going to do well because of a strong dollar, such as oil, such as gold and silver, such as other commodities like steel and iron, or like not building materials, but just like industrial metals like copper or aluminum. This would be a major theme. The dollar is strong, therefore any of these commodities that are going to be priced in dollars are going to be weak. And this is a trend that could last for months or much longer. So yes, like to the short answer to your question is yes, it's based on the sector, and it's based on like some sort of prevailing theme or story that's going on at that point in time.
Okay, and just expanding on that a little bit further, how does the overall market sort of impact your trading decisions on individual stocks? So if the Dow or the S&P is sort of in a sideways range, are you hesitant to sort of enter into a big long-term move?
Absolutely. This is one of the things, if you were to ask me, like, what got you over the hump, like, early in my early days, when you cross that threshold, what got me over the hump? I would say the one important thing that like enabled me to cross the hump was when I was trading early on, I would trade in a vacuum. Okay, I would just, if I had a good setup, I would take it and be completely blind to what was going on in the overall market. And when I realized that, like, hey, I need to be somewhat in sync with the market, that's when I started to be more consistent. That's when I started to keep my profits, because I was really good at making money, but then I was really good at giving it back. And when I started to realize that, like, I can't just trade in a vacuum, I have to be synced up with the market, I started doing it much better. So yes, absolutely. If the market's in a range, which it's been, other than the February rally, it's been in a range since like the beginning of November. Without question, I'm telling myself, Jason, this is a short-term trade because the market is in a range, and you can't expect a big move right now. So yes, it's a huge thing. To keep track of what the overall market is doing and what a particular group is doing.
Okay, so if it is sort of in that sideways range, you're just sort of disregarding the long-term positions for sort of 6 months and upwards, and you're just sort of focusing on your shorter-term trades. So that's sort of what helps you decide additionally.
Yeah, like I've had some oil shorts over the last 6 months, which I've been able to hold, for longer than a week. I haven't held them for like 6 months, but I've held them longer than a week. But yes, if the market is range bound, like I immediately shift into like I'm just trying to make a buck. I'm out within a few days. I just want to make 5%, maybe 10% if I'm lucky. I'm not going to force things. I've done that before. If the market's going to be trading a range, then I'm gonna take what it gives me. That's all I could do. It's like I play baseball, and it's like if the pitcher throws you a curveball on the outside corner, like you're probably not going to hit it over the fence. So just try and get a base hit. That's all I do. It's like I can't call the market. I can't tell the market what to do. If it's going to trade in a range, then I have to mentally shift into a frame of mind where like, hey, I'm just trying to make 5 or 10% over and over and over. I'm going to be ahead of the curve taking profits. I'm not going to really use a trailing stop or something like that, because by the time the stop gets hit, I've given back most of my profits. I'm just in and out, quick trades, last a couple days or a week, until the range resolves one way or another, and then maybe I could shift. So I'm more careful. I'll still do longer term trades. For example, like with oil being so weak, and some of the industrial metal and mineral stocks have been pretty weak. But yeah, my focus is definitely like, hey, the market conditions are such that you have to be content and happy with smaller gains, and just go with those. Because you fall into you get yourself in trouble when it's like, hey, here's a great setup, and it moves, and you're like, hey, maybe this could be a long-term trade. And then after it moves, a few points, it comes right back down, and you realize like, well, what I expect, the market's range bound. Of course it's going to happen.
Yeah, that's a really valuable point. I really appreciate you sort of digging into the details there.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
How do you go about scanning stocks for potential setups?
I use Telechart. I think it's called Telechart, TC2000 by Warden Brothers. I've been using it for, almost since day one, since like 2000. The first thing I'll do is Telechart categorizes they have all the indexes already broken out. So you can look at every stock in the NASDAQ 100 and the S&P 100 and the S&P 400 and the Russell and blah, blah, blah. So the first thing I will do is I will just literally visually scan through a bunch of charts. I'll go through all the stocks in the S&P 100, the NASDAQ 100. I'll look at the top volume stocks in the S&P 400, the mid caps. I'll look at the top volume stocks in the Russell 2000 small caps. And I literally, with Telechart, you can just hit your space bar and go click, 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 and you can just go from one chart to the next to the next. And so my first scan through is I'm just visually recognizing patterns that look attractive to me. Okay, so I've done it long enough that I guess I'm pretty good at just pulling out the ones that I like. So once I go through all those, I'll have a list of, if trading is good, I might have 100 stocks on that list. If trading is not so good, it's up, it's down, it's all over the place, and you don't have a really good trend, I may only have 20 or 30. Once I have that list, I like to zero in on the stock I trade stocks. I tend to trade stocks in groups. So once I have that list, if I notice that there are a couple of solar stocks on the list, I immediately pull up the solar list, and I want to look at all the stocks on the solar list, because if one or two or three of the stocks look good, hey, maybe there's more. So that's my second run through. The first run through is I'm just going to visually look at 400, 500, 600 charts and pull out the ones that look the best to me. The second step is I'm going to notice which stocks or which groups are most represented in that list, and I want to look inside those groups, because at any given time there tends to be a handful of groups that are doing either really well or really poorly, and I want to focus on the ones that are doing really well. That was one of the other realizations I made early on. I said, one of the things that got me over the threshold was not trading in a vacuum and actually being aware of what the overall market was doing. Another thing that helped me get over the hump was when I realized that the stocks that tended to do well, the trades that tended to do well, tended to come from groups where the entire group was doing well. It had group strength, and a lot of the trades that didn't do very well, they were just an isolated stock that looked really good, but it didn't have group support. So that's what I'm looking for next, is after I go through the whole thing and I narrow down, then I'm going to go inside the groups and pull out the ones that look best. After that, it just becomes a question of let me go through them and pull out, maybe narrow it down to my top 10 or 15, as I head into the week. And then each particular day, I'll probably narrow it down to 1 or 2 or 3 or maybe 0, just depending on what's going on.
Okay. So if you're swing trading over these periods of time, it's possible that a lot of opportunities could start to sort of come onto your radar and start to trigger. So how many positions could you be into at any given time? And what are your views on diversifying between long and short trades?
Generally speaking, I think diversification is something you do when you don't know what to do. I tend to be weighted in a couple different groups at any given time, and not diversified very much as far as the number of groups that are represented. For example, if I'm in 6 or 7 positions, it's typically three stocks in one group, 2 stocks from another group, and 2 stocks from a third group. I don't, so from that standpoint, I'm not represented as far as the number of groups that I'm in at any given time. I tend to just realize that hey, this particular group is weak or this particular group is strong, so I want to focus on that, and I might have 2 or 3 trades within that group at any given time. As far as number of trades, if they're short term, I'd rather not have more than 4 or 5. I'm not a hedge fund. I'm not trading $1 billion. I'm trading my own account, just trying to make money. And I find if I have too many positions, then I get distracted, and I don't like the feeling of having too many positions open at one time, because I find that it just kind of pulls me in different directions. I end up like hoping something happens because of this one stock, but another stock is doing something else. So, 4, 5, 6 positions is good enough for me as far as like shorter term trades. As far as longer term stuff, I could definitely have, again, like 4 or 5. I'm still not going to have a ton. But those, because I don't follow those as closely, they don't kind of weigh on me. They don't weigh on me mentally, because I'm not actually watching them very closely. I just kind of have them in the corner of my screen, and I kind of glance at them once in a while, but I'm not following them that closely.
Okay, excellent. So as a trend trader, where do you feel is the safest point to enter into a trend? Like, what is your confirmation that you're now sort of potentially out of a consolidation period and actually now sort of starting to break into a trend?
Are you talking about the overall market or for an individual stock?
When you're entering sort of an individual stock, when you're taking a new position.
Okay, so I'm mostly a chart pattern trader, like within the trends. So I tend to have pretty like clearly identified resistance levels that I'm looking to buy. So if the market is on an upswing and a stock moves above resistance, like that's my entry. If I was going to work on something going forward, it would be like, hey, if I can get better at buying dips, that would be great. But for whatever reason, just the way my brain works, it's like I like playing breakouts from patterns. If my favorite setup is probably just a consolidation pattern within an uptrend. If a stock rallies from 23 up to 30 and then consolidates sideways for a month and then breaks out, that's probably my favorite. That's probably my favorite setup, is like a breakout within a trend at the same time the market is acting well. So that's it as far as entries go. One thing I've learned over the years is to not sweat the entries, I guess I can say, is that because if a stock is going to move from 30 to 45, it doesn't really matter if I get in at 30 or 30.1 or 30.2 or even 30.3 or to come up with to stress the entry. That never really made me much money. To me, like the money is made like managing the position once you're already in. I don't know if that answers your question. But to me, entries are less important than the exits, or less important than like the actual plan that you have in place and how you plan on managing the trade, and whether it's going to be like a shorter term or longer term trade. So if I have a strong stock that's acting well and it's like riding a theme, and the market's acting well, then I try not to sweat the entry too much.
Yeah, that does answer the question. And it also sort of leads to another one. And that's sort of, if you are entering around so these breakout levels when the stocks or the price is going through resistance, how do you avoid buying into breakouts? Obviously, we're talking about long trades here. Is that part of your strategy, as in not sweating the entry too much, that you might buy when it's a certain level past resistance? Or are you buying sort of the cent it ticks past?
I'm watching it closely. If it's a stock that I like and I say like, hey, this is a good stock and I really like the story here, and like this could be a 6-month hold, I could buy right as it's breaking out. I could also sometimes I'll buy within the pattern, just because I could just kind of tell that like, hey, this is a really strong stock and it's moving up and it's inevitable that this thing is going to go up, that it's eventually going to break out. So I'll buy in the pattern sometimes, and sometimes it'll go against me a little bit, but if my plan is to hold because I'm riding a major theme, I don't sweat the entry and I give it some space to move around. Now, I would never do that with a short-term trade. With a short-term trade, I'm much more precise. Like I have an exact level that I'm looking to get in at, and I would never let it go against me too much. But with a longer-term trade, with a stock that I think could be held for a longer period of time, I've never made money by sweating the entry. And more times, I should say it a different way, that more times than not, when I pinched pennies on the entry and I was very demanding as far as exactly where I wanted to get in and under what conditions, those conditions never happened, and I ended up not getting in, and then it would move 20, 30, 40%, and I would miss out on a trade simply because I was demanding something that the market wasn't willing to give me. So if I really like the setup and I really like the stock, I don't know if I have a magic entry formula, because it never worked for me.
Okay, so if you are taking one of these sort of longer term trades, would you say you sometimes find yourself working into a position and buying throughout that period or the sideways range, so the accumulation or distribution area, you might be sort of buying up in that period?
I tend to be all in or mostly all in initially, and then if I add to the position, I'm adding to the position at a higher level.
Okay, cool.
Yeah, so if it breaks out and it moves like 2 or 3 points and pulls back a little bit and finds some support and starts moving up again, then I'll buy there. So so if I have like a consolidation pattern that lasts a month, I'm not just, buying every fourth day and just accumulating a position. But I'll add after it breaks out and, maybe rests a little bit and breaks out again, or pulls back to some moving average or previous resistance and starts moving up. Then I'll add to my position. But I tend to only add at a higher level.
Sure. So again, on these longer term trades, we could be in for, a matter of months. Do you give any thought to how the fundamentals might affect your trade on this time frame?
No, none whatsoever. I have no clue what the fundamentals are. Wouldn't even know how to read a balance sheet.
Nice, same here. All right, so let's keep it moving and let's sort of talk a little bit about, some advice, some general sort of advice for other traders out there. So I've heard you say in the past you're not in control over the market, which I thought was a really interesting point. So if that's the case, what can you actually control?
When I judge myself, like how well I'm doing, I don't judge myself based on whether I made money or lost money. I judge myself based on whether I did the right thing, whether I entered a good position for the right reasons, whether I made good decisions, whether I managed the position well, whether I exited well. Those are the things I judge myself, because you can get into a position and get lucky, or you can get into a position and be unlucky, and you could ride an emotional roller coaster whether you made money or not. But you don't always have control over how much money you make, or even if you make money, but you do have control over what you do. So when I'm judging myself, I judge myself based on whether I did the right thing, because over the course of many trades, my P&L is going to be just fine. Okay, to give an analogy, like in baseball, if you judge yourself purely based on whether you got a hit, what if the pitcher fooled you and you threw the bat out and you hit it off the end of the bat and it barely went out into the outfield and you got a hit? Well, that was a bad at bat because you were out on your front foot, you got fooled, you didn't take a good cut, but you got lucky. But you can have another at bat where you work the count, you foul a pitch off, the pitcher makes a mistake, boom, you hit a line drive and you hit it right at someone. Okay, so in that case, you did everything right. It was a good, solid at bat, but you just happened to hit it right at someone. So at the end of the day, I look at that at bat and I'd say, you know what? If you do that every time for the entire season, you're going to have really great stats. And I have the same approach with trading, is that I don't judge myself trade by trade basis based on whether I made money. I judge myself based on, did I do the right thing? Because if the answer to that question is yes, then I know over the course of 20, 30, 50 trades that the money will take care of itself.
Yeah, that's really well said. Is there a common trait you find amongst the successful traders that you've met?
Yeah, I would say there's one thing that stands out. The obvious thing is you can never, ever, ever let a small loss turn into a big loss. That's just the kiss of death for any trader at any level. You just simply can never, ever, ever let a small loss turn into a big loss. But the one thing that is probably most consistent among the really good traders I know is that they specialize in doing one thing really well, and they don't deviate from that whatsoever. And this goes for traders who make millions. I'll tell you a story. It was many years ago. I was actually fairly close to when I was first starting out. I was at a Cubs game with my brother. My brother was a trader on the floor of the Chicago Mercantile Exchange. And so I was at a Cubs game with him and 10 or 12 traders from the Merc. And these guys were really, really good independent traders. They made, anywhere from a couple $100,000 to a couple million a year. Really good traders, not like hedge fund traders. They're not trading billions, but as individual traders, they were as good as you can get. And I'm sitting there next to my brother and he says, "You see that guy over there? He trades just the first 5 minutes of the day. The market opens, he looks for one specific thing. If it happens, he takes a trade. If it doesn't happen, he walks off the floor 5 minutes later." And I was like, "Really?" And he said, you see that next guy? He only trades the unemployment report. That's it. He shows up to work once a month. He knows more about the unemployment numbers than anybody. He knows, he can tell you anything you want to know about them, exactly how the market's going to react. He only shows up to work once a month, trades just that report, and he makes like 300 grand just on that report once a month. And he went down the line and he told me, generally speaking, he didn't know specifics of what each trader's trade was, but he went down the line and he was able to tell me, generally speaking, like what each guy did. And I thought, like, wow, these are really good traders. They're $1 million traders. These are guys who pay $5,000-$6,000 a month in order to lease a seat on the floor of the Merc. Yet they're so specialized and zeroed in on just they found something that works for them. They found something that works. They found something that kind of jives with their personality, something that they're able to execute, and they just do that one thing over and over, and they don't deviate from that whatsoever. And that hit me pretty good. That was like in my first couple of years of trading, and it made me realize that, like, okay, successful traders aren't these brilliant people who could flawlessly float from one trade to the next, because there's a million products out there. You could trade long term and short term. You could day trade. You could trade technicals. You could trade Fibonacci or moving averages. And I mean, when you consider all the different products and all the different ways to slice and dice the market, there's literally a million different ways to trade. And yet these guys who were like really great traders, they had zeroed in on just doing one thing, doing it really well. They didn't deviate from that, and they just stuck with that. And that was reassuring to me, because I was thinking, at the beginning I thought, like, I have to be really smart, I have to be very knowledgeable, I have to like understand all these reports and this and that. And that made me realize that, like, that's kind of a relief. That's actually like a big relief. And I thought to myself, like, wow, like I could just find one simple thing that works and just zero in on that and just do it. And I don't have to have a PhD in finance in order to do this. So that was a huge relief. And so to answer your question, as far as like what is the one common characteristic that I see among successful traders, I would say that's it, is that they're like really specialized in just doing one thing really well, and they just do it over and over. And they don't, one of the problems that newbies have, or like traders that are just starting out, is they do what's called style drift, where they're trading one way and then like 2 weeks later they get exposed to a different strategy, and because what they're doing isn't really working that well, they suddenly change. They're doing stochastic 1 week, and then in a month later they're trading like an MACD crossover system, and then the week after that they're doing Fibonacci retracements and this and that. And like 6 months later, they realized if they would have just stuck with their original plan, they would have done just fine. But by jumping from one thing to the next, they basically just treaded water for 6 months. So that's the biggest common characteristic I see among successful traders, is that they've just kind of honed in on something that works, and they've just ignored everything else.
Yeah, that's a really great story. And, thank you for sharing that, Jason. On the other side, are there any obvious traits that you see amongst traders who don't succeed?
Yeah. So first of all, traders that don't succeed, like, they don't have a plan. They just don't. I don't. They hope, they fantasize, they dream, they want things to do, they want things to go their way, but they don't have a plan. They don't know what they'll do if the market goes up. They don't know what they'll do if the market gaps up. They don't know what they'll do if the market gaps up and then sells off. They pretty much just wing it. They get into a position and they don't know where their stop is. They don't know if it's a shorter term trade or a longer term trade. They don't know if they're going to scale out. They don't know if they're going to add to a position if it breaks out and it pulls back. They literally just fly by the seat of their pants, and they just don't actually have a plan. Think about like a football team here in the United States. Can you imagine if they just showed up and didn't have any sort of game plan? I mean, that would never happen. I mean, they spend an entire week looking at game films and actually practicing certain plays, and based on the type of defense that the opposing team is likely to be playing, they actually work out. They practice many different plays in order to like capitalize on that. And traders have to do the same thing. They have to have like a detailed plan, and even though like 90% of the plan like will never matter, because they'll contemplate like, well, what will I do if the market does this, or what will I do if the market does that? And if they have like 10 different scenarios that they've kind of thought out, like obviously like most of them aren't going to happen. But going through the motions of having a plan is extremely helpful. It's extremely helpful exercise. So that's like a big thing, is that they just don't have a plan. They, like, if you sit down and say, what's your plan today? What are you going to do if this happens? What are you going to do if that happens? Play devil's advocate. They need to do that, but they don't. Another thing they do is, like, as I just explained, is like style drift. They're like constantly jumping from one strategy to the next, to the next, to the next, to the next. One day they're swing trading stocks and they're playing chart patterns, and the next month they saw something on a message board, so they got tempted to do Fibonacci retracements, and now instead of playing breakouts, they're buying pullbacks, and maybe they want to do, slap a technical indicator on there, and they're just constantly shifting from one to the next, which is necessary. You have to do that when you first start out, because in order to zero in on like what works for you, you have to actually kind of experiment with several different things. But once you zero in on what works, you have to stick with it and not be tempted to go elsewhere. So that's another big thing, is like just style drift. They're constantly changing. Another thing is, like, they don't take a loss. They're like afraid, they get in a position that goes against them. They should get out. But they bargain and negotiate with the market. They think like, oh, if it can just go back up, and I'll get out break even, and then it goes against them more. And then they say like, well, if it could just go back up to where it was 2 days ago, then I'll get out with a small loss, and then it keeps going against them. And before they know it, a perfectly normal, no big deal loss turns into a huge loss, and now they're in a big hole. So that's a big problem they have. And not only do they suffer because of the money that they lost, but they also their confidence is shot, their emotions are shot, and it just spirals from there. Another problem they have right now is like information overload. It wasn't a problem when I first started, but it is right now with, like, TV is less prevalent now than probably back then. But with all the websites and the blogs and the services and, Twitter and stock twits, and like, there's no end to the amount of information that you can get. And like, no matter what a trader wants to do or what their opinion is, they could easily go find some support for that opinion. So those are the main things. It's like, they don't have a plan. They constantly changing their strategy. They don't take a loss. They don't know how to zero in on just doing something and kind of ignoring all the information that's out there. So I guess if you flip all that around and you want to know like how to become successful, it's like, hone in on something that works and works for you. Have a plan, have a detailed plan, exactly what you're going to do in different scenarios. Dedicate, make a deal with yourself that you'll never, ever take a big loss, or never, ever let a small loss turn into a big loss. And just hone in and try to ignore like all the information that's out there, because most of it's just noise.
Yeah, that's awesome, Jason. All right, well, that pretty much brings us to the end of the interview. So thanks a lot for coming on and talking about these answers in such great detail. It's really awesome. I think listeners will be able to take a lot away from this one.
You're welcome. Thanks for having me on.
If anyone's got any questions for Jason, just go to chatwithtraders.com/Jason and scroll to the bottom and leave a comment. And post up any question. Jason will be keeping an eye on that and happy to help you out where he can. Before we let you go, Jason, do you just want to share with listeners where they can find out more about you and connect with you?
Yeah, so I have a website where I offer market analysis and trading ideas to hedge funds, independent traders, financial advisors, and that's leverbrothers.com. So you can reach me there. Probably the best way to reach me is to actually just go to leverbrothers.com and just go to the contact us page. Like, I get all the emails that are sent there. I'm on Twitter, but I don't use it that much. So best place to go is just go to leverbrothers.com and contact me through the website.
Awesome. All right. Well, we will put links to your site in the show notes so people can check that out. And again, if you've got any questions, just go chatwithtraders.com/Jason and leave a comment. That'd be awesome. All right. Thanks a lot, Jason. Let's talk soon.
Thanks for having me on, Aaron.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up, guys? Welcome back to another episode of Chat with Traders. This is episode 18. This week's guest is a little different to many of the guests I've had on in the past. Instead of giving very little weight to fundamentals and news releases, these two things actually form the foundation for his trading approach. In fact, he almost disregards charts altogether, and he relates the reason for this to his background in accounting and finance. John Welsh has been a full-time trader for over 10 years, and he's racked up millions of dollars in profits along the way. His trading consists of both intraday and swing trading, and he concentrates mainly on biotech stocks, making roughly 90% of his trades within this sector. But now that I've given you the 1,000-foot view on John's trading journey, here he is to fill in the blanks and give us a lot more depth around his approach. Hey John, how you going?
Not too bad. How's your weekend going?
It's good, man. It's good. It's early Monday morning here, and it looks like a busy week ahead. How's your weekend been?
Excellent. Did a nice little race today, half marathon, my best time ever. Things are going well. I can't wait for trading though tomorrow.
Oh, very cool. Very cool. So I'm keen to have you on the show, and I'm excited to have you here. So, thanks a lot for coming on.
Thanks for the invite.
Yeah, no problem. So let's just get this underway and tell us a little bit about how you started trading. How'd you get into it? What was your background? Just give us a bit of an introduction.
Sure. I didn't really like stocks until the market exploded during my college years in the late 1998, 99 period. That was when the dot-com bubble, took off and you couldn't lose any money and anything when stock splits were going up. And I took a lot of risk of investing my MBA checks in the market while I was going to school. And I instantly got hooked because I was making money all the time. And ever since then, I just been feet first into the market. And I've been trading full-time now for almost 9 years.
Good stuff. So when you first started getting into trading, where were you learning from? So how did you know what you were doing?
Well, I'm old school and I'm 40. So, there was no Twitter, there was no Facebook, and, there was Yahoo message boards, which I still use today. And I had to learn through my own experience and my accounting and finance background. And I learned a lot about companies, what moves stocks, what people pay for in news and pay up in speculation, and all through my own experience. I didn't have any I don't have any trading tools or level 2 or charts or anything like that. I just do it all from what I see on the screen.
Okay, great. So when you were sort of studying and trying to sort of learn and find your feet in the markets, did you have sort of like a regular routine where you were sort of like you would spend a certain amount of hours a day focusing on trading, or like did you have some sort of schedule around that?
Well, when I was trading part-time and working full-time, it was really hard. And that's what a lot of people in today's markets are trying to do. You have a lot of young traders coming on board trying to, make the quick buck by working full-time, and it doesn't really work that way. So basically, for me, when I was trading part-time, I traded a lot in the morning and did research at night. But for the past 10 years, I have the same process that I do every day as a full-time trader. And that is I wake up at 7 o'clock. I kick up my news wire that I use, which is currently tradethenews.com. And I look for news they're moving stocks that has potential to move during the day, or for swing trades, anything that I think that's important. And I have the same pattern from 7 to 8 a.m. in the pre-market and during regular trading hours. And I never trade in after hours. So basically every day I work from 7 to 4:30.
Okay, good stuff. So let's just talk a little bit more about when you were sort of getting into the market. So what were some of the main things that you struggled with early on, would you say?
I didn't really struggle because in 1999 and 98 is when the markets were going up huge, and I didn't know anything about short selling at the time. So my best stock was AOL, and unfortunately, I had a lot of success in the beginning, and that's what hooked me. And even when the market corrected, when I learned about short selling in the following 2000, 2001, I learned how to go the other way. So you can just say my timing was right, but I have, a lot of tendencies that I think are bad that I've learned within myself that I corrected, and which probably affects a lot of traders, such as over trading and trading, trying to make up after a big loss.
Okay, cool. So how do you sort of avoid that type of thing from over trading? Like, do you have some sort of rules you've set for yourself, or how do you go about sort of trying to avoid over trading?
Well, the two main factors that I see with myself that probably affects a lot of traders is, of course, the over trading. And I have 10 rules that I developed over almost 10 years ago, since I started trading part-time, that I have taped on my computer and on my desk. And whenever I get new furniture or a new desk or a new monitor, I tape it right up there to remind me that each day is independent of each other. And I learned that through my own experiences, my own shortcomings. Because truthfully, all traders are fucking gamblers. That's what we really are. And that's my shortcoming, that if I ever was addicted to anything, it would be gambling. So in order to rein that in, what I developed is rules that I follow every day, because when I didn't have them, where my shortcomings is when I did a trade for an unexpected loss, I would then follow it up with a bigger forced loss, trying to make back the money. And that's typical of what a gambler does, and from my observation, and that's what I am. So I try to take those feelings out of trading by following my systems, techniques, and rules.
Okay, yeah, and I saw those rules on your site, and I noticed that number 4 was bolded as though like it really is quite important to you, and that was the more stubborn you are, the more you will lose. So would you like to elaborate on why this one is especially important to you?
Because I learned that one the hard way. And, I love talking about, again, my shortcomings, because what I've learned from losing is a system that I can turn into consistent, profitable trades. And with that one was is that I used to trade biotech stocks into events. And this was before I became a full-time trader. And, if a stock is trending down and there is an event coming, especially with biotechs, technically the stock is going to do bad because someone may know something, and it doesn't matter how much homework you do, the market is always right. So what I've learned in rule number 4 is don't be stubborn and listen to the market is when something goes wrong for me, I immediately sell it. And of course, if you hold overnight and there's bad news and something happens, I still immediately sell the stock. And people don't understand that. And they try to break even on the stock. Well, I save a lot of money by taking my losses quickly, whether I'm wrong on the day or whether it's gapping down on news. You got to listen to the market and get out. And that's what good traders do. They save money by taking their losses quickly.
Yeah, I think those are some really great points you touched on there. So, yeah, really cool. Nowadays, how would you define your sort of trading style? So just tell us a little bit about how you're actually trading sort of right now in today's markets.
It's interesting because it depends. In today's markets, I'm more of a long short trader. And I need to explain why that is because, for, I would say, the past 5 years, I've been mainly known as a short seller. And I'm pretty keen on, spotting stocks that look like potential red flags or frauds in accounting, and especially biotech. And I have a nose for this stuff. But the thing is, what I've noticed, and if you take last year, I attended a conference that I spoke at, and it was mainly the speakers were short sellers. And there was about, 7 to 8 speakers that were short sellers. And I just found it very strange to me that all these people are migrating over to the style that I used to primarily be known for. So what I've been doing in the past 2 years is learning a strategy that's completely different from what I'm known for. People don't understand why, because everybody's making the big dollar short selling. I still do that, but guess what? I think a lot of changes are coming to the short selling industry that people do not expect. And when it occurs, their business could go poof because they did not learn how to do both sides of the trade. So I do long and short, and still I'm slanted 60% short, but I have no problem going long in today's market environment. We're hitting market highs almost every day.
Okay, cool. So you're predominantly day trading, is that right?
I day trade and I also swing trade, mostly swing trade long positions, and I would only swing trade short positions when I'm up for the day and I carry some over for a couple of days because I don't like to swing trade shorts as much as I do longs.
Okay, and is that swing trading? Is that something that's come through from when you were sort of learning trading when you were still when you were still a part-time trader? Is that something that's come through from there?
I wish, but no. Because, 2008, 2009, and 2010, I was so short biased and cleaned up on the market. It was, like taking candy from the baby. And that's, I refined my skills and I became so, biased to shorting that, I did I would say between 2010 and 2012, I was still looking for shorts. And then I said, wait a second, we're in the middle of a turnaround here. I need to learn new techniques to go long and to go long on companies that I'm skeptical of. And I've really picked up my game in the last few years by doing that.
Okay, cool. So when you are taking a swing position, how long would you say you typically hold that for?
Could be as high. I usually never hold for more than 3 to 6 months. I like to keep it for a couple of weeks if I could. I've never held a stock for longer than a year. So I'd definitely say it's short-term oriented.
When you're in those positions, how do you sort of manage those? Like, what's your sort of trigger to get out of those? Is it based on the news and fundamentals, or are you just sort of trailing stops? How do you manage those trades?
I always enter with a max loss in mind, and my position size is always reflecting in it. So I'll talk about a trade this year that I got killed on, and it was my worst trade of the year was a KBIO, which is a biotech that I thought would be a great rebound play for January 2015, because in 2014 it was the worst performing biotechs, and it got halted for data which was supposed to come out later in the month, and I took a nice 5-digit loss on the trade, and I ended up selling it for like 80 cents or something, and it went down to 40 cents. So on something like that, I can't manage my loss expectations, but I can sell it quickly to save money. So when something goes wrong and I don't like what's going on with the company, I immediately sell it.
Okay, good point. So you do factor in quite a lot the news and the fundamentals into your trades. That's something you take on board?
That is my entire trading style, is news and fundamentals, because that's how I learned how to trade. And people laugh and say, well, why don't you learn technicals? I just do not like charts. It's not for me. I definitely think with an accounting and finance background, that's much stronger than looking at lines or pictures on a wall that's going in triangles. I don't know. But I also don't use level 2. So I am a pure tape reader.
Okay, that's really cool. So you don't even use technicals for sort of like timing your entries or anything like that?
Nope. If anything, I'll pull up a 5-day chart. If I had to use a chart, it's a 5-day chart, because 90% of my trades are less than 5 days. So if anything, I'd pull up a 5-day chart, but mostly I keep points in my mind and memorize when stocks hit certain levels. Say, for example, for my big short that I'm doing in May, which is CRMD, which is a biotech, I know that the high for the year is 1040 without even looking at the chart. I mean, I have a keen mind for memorization, and I train my mind for certain things to look for and filter out the noise. So if I'm shorting this stock for next month and it broke over that level, I would instantly be out of it. So that's how I try to control my thinking.
Okay, and where are you pulling that level from? Is that a certain like resistance level?
That's just a 52-week high of where it hit in April. Okay. I believe the shares closed at 860-ish on Friday, and that level, I don't need to look at a chart. I know from watching it, and this is one of the stocks that I heavily watch for last month, that 1040 is a 52-week high. In fact, I should probably check it, but I'm pretty sure that is.
So you've mentioned biotech sort of a few times throughout the interview. Is that sort of a sector that you really like to specialize in? And is that sort of the way you like to trade, by specializing in certain sectors and then sort of ignoring the rest that are out there?
Yeah, I love to concentrate on the biotech sector, probably about 80 to 90% of my trades, because it's pretty simple. The biotechs can be valued at whatever they want to be valued, because they're trading at potential future dollar amounts of income that may never come from FDA sponsored trials. So there's so much room for wiggle room. And plus, there's so many shady, garbage CEOs in the business that it's just too easy to short these things and pick them off. And it's also what I've learned in the past few years. It's a good way to go long biotechs that you think that are shady and corrupt because they want to pump their stock price up. So it's been a great learning experience in biotech, and I love focusing on them because I love beta and volatility, but I also like to manage my risk. So that's why we seem to repeating it, but whenever a stock goes against me, especially in a day trade, more importantly, if the news isn't what I think it should be, I sell immediately because I can always buy it back. People need to understand you do not need to break even on a trade. You could sell for a loss.
Okay. And so if you're relying on the news so heavily, is there certain news topics that, like, how do you determine what news is going to impact the market and what's just sort of not going to impact the market, I guess you could say?
It's hard to determine that, but mainly what I do is, usually my news service spits out the headline. I'll immediately go to the press release and I'll start digging through the details of what they're saying, because a lot of times the headline looks a lot better than what the detail is. And if I think I have something in the detail that the market doesn't know, I'll take a big position size in it and let the market know what it is. I have a large Twitter following. So if I find something that I think that the market doesn't know, I put it out there. So yes, I react to news basically as quick as I possibly can and do research on it.
Okay. And are there certain sources that are probably more reliable than others?
I love the Yahoo message boards. I know I seem like a broken record, but I'm old school, and I still think they have a lot of value. Twitter is a good source for information. I don't particularly like to interact with many people on Twitter because it could distract you. But for quality people and followers, I mean, you can get good information from Twitter, instant information from Twitter that analyze news just as fast as me. So, and it's free too if you follow the right people.
Yeah, awesome. Great tips there. So let's move this along a little bit and let's start talking a little bit about the mental aspect of trading, because we were talking a little bit off air and, this was one of the topics we were going to bring up because I think you've got a lot of good tips to share on it. So what's the best way you find to keep your emotions in check during the trading day? And even outside of hours too, like let's talk about that a little bit.
Well, the thing is, being at it for as long as I have been, I would definitely say that what I've learned is never to overact to a gain or a loss. And people don't really understand that. But, if you have a gain, you can't be jumping up and down, yelling, fucking booyah, something exploded, take a look at me. It doesn't work. And that's what everybody does in today's environment. That's definitely not my style. What I like to do is point out and yell about my losses, because from those losses, I then get to quietly start accumulating my gains. So, mentally, I do not react to a loss or a gain in any way, shape, or form. I completely strip it out. Stock symbols, I don't fall in love with any stock. Simply put, if something's going against me, I sell it. And if something is winning, I move my stop to entry and I let it go. That's it. I mean, it sounds easy, but you would be surprised how many people cannot follow those two steps.
Yeah, that's really cool. So this is something else I wanted to ask you about also, and that's like, when trading, how do you keep a healthy balance between being confident without being over cocky?
Well, that's the thing, and this ties in directly to, the mental aspect of trading, which never gets enough attention in my eyes, which to me, the mental aspect of trading is 90% of trading. And let me explain. Like, I know a lot of successful traders out there, millions of dollars in the stock market. But let me tell you, they do not make a trade unless they check in with my opinion first. And that may seem like a bold statement, but people need to understand that no one knows anything. And people in general are insecure, and they always want a confirmation and support from groups. And that's how the mental aspect of these stocks, of stock trading works, and that's why my style works, is it's contra to the market. So people always try to travel in packs. They're insecure. They need confirmation from other traders, but that's not the style that I do, I know I like to trade against that type of style, that emotion.
Okay, very good, very good. So this is something we were also talking about a little bit off air, and that's traders talking about other traders. So I think you've got some sort of thoughts to share on that statement there.
I do, and what I think is, I left the corporate world 10 years ago, and I don't regret it for 1 second. I hated everything about the corporate world. And what I've noticed is, especially after the past few years, is that, I use Twitter, not a lot, but, I've used it for the past 5 years. And what I noticed is that Twitter traders love to talk about what everybody else is doing, whether they're in a position, whether they're out of position, how much money they're making, what they're saying. It's literally like working at a corporation and hearing the chitter chatter about your coworkers. I mean, I think it's completely bullshit, because if you're concentrating on somebody else and what they're doing, you're never going to make any money. Why do one other person's profit and loss statement makes effect on yours? It makes no sense to me. And why someone would hate on somebody else and troll on somebody else when they make a trade or say something, who cares? I mean, I know this is a business and people sell things on Twitter, but the bickering, I can't take it. Like, I had to cut a lot of traders out of my life because all they do is talk about other traders. I mean, I think it's lame.
Yeah, no doubt, no doubt.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
So, moving along, what do you believe is the main reason why such a large majority of traders never succeed in this game?
Because it all goes back to the mental aspect. People do not understand that people's flaws in life about being insecure or about not being humble and needing confirmation from other people and needing support. People do not understand that applies to trading. And all because the group is thinking one way, that doesn't mean the group is right. So mentally, what happens is that when say a group trade goes wrong and someone loses money, especially a new trader, they always try to then chase the money back and make the money back. It doesn't work that way. So that's why a lot of traders fail, because they're getting confirmation from other people and they're not doing the research themselves and the homework themselves. I mean, the most profitable product on Twitter is alert services. And what that tells you everything you need to know about where trading is going for the next few years. It's been like this for 2 to 3 years now, where people just want to know what to buy, no questions asked. And those people are truthfully not making any money. There's only a few people that are making money even in today's market because they're over trading. They're not doing the research themselves. And, you know, if you want to learn how to fish, I mean, someone needs to teach you how to fish. And in order to do that, you need to do research and homework on why somebody is buying and not just do it and follow someone blindly because they made a good call two months ago. So that's why I think a majority of people fail, because they're too busy in that groupthink and the mental aspect of trading.
Yeah, I think those are some really good points you brought up there. So yeah, thanks for sharing those. Now let's just sort of start to wrap this interview up. So we'll just sort of go to the closing bell, and this is just a few questions that I asked to a majority of the guests. Is there any recommended reading that you would suggest to someone? Perhaps something around the topic of psychology?
I haven't read many trading books myself. I don't know of any good books out there currently. There probably is some good stuff on trading psychology now, but I'm not up to date on the reading of it. I try on my Twitter to put out as many articles as I can about trading psychology, because, you know, I love the world of finance. So I'm always trying to do something free and give back to the world of finance. So that's what I try to cover. But I guarantee you nowadays there's probably some good books out there, but I don't know of any.
Yeah, that's cool. So you've learned most of it from just sort of being in the trenches, right?
That's correct.
Good stuff. So when it all comes down to it, what would you say motivates you to trade after sort of 10 years in the game? Is it the money that you can make from trading? Is it the lifestyle it provides? Is it the freedom? Like, what would you put it down to?
Well, the money's nice. I mean, the money's great. And, you know, obviously we all want to make money. That's why we're in the business for this, why we're in this business. But, I mean, you cannot put a price tag on your freedom from the corporation in a cubicle and having to work for other people that you do not like, and you know, other coworkers that you do not respect. The independence is just such a massive key. I mean, that's all everyone who always reaches out to me for trading advice. They're like, they want to be independent. They want to be free from a corporation. I mean, trading is awesome. I mean, there's days where, you know, especially after tough losses where, you know, trading sucks. But I don't let myself get too down on those days. I try, once again, to keep the steady emotion. I love getting up. It's weird. Like, my family friends and, you know, my son's friends in the neighborhood, they don't know what I do for work. They don't know that I'm a stock trader. A lot of them, I think I'm homeless, because I never talk about what I do. Because when it comes for trading, that's just something that I like to do. I even use a phony name as a trader, because back then I never really wanted to brag about how much money I made. So it's something, if you're independent and you're tired of the corporate world and you do the research and tools, I recommend that trading is for you. I mean, everybody wants to do it, but no one wants to put in the correct time. Or a lot of people don't want to put in the correct time. I should say that.
Yeah, so important, so important. So in there you talked about days that just really suck. So say you have a really bad day one day, how do you treat the next day? Do you just come back to it treat it as a fresh slate, or is there ever a point where you decide not to trade for a day?
Yep. What I've learned is, due to my degenerate gambler tendencies, is that when I have a bad trade, like say like a 5-figure loss in the morning, I shut off my computer and I don't trade anymore. Because the reason why is what I try to do is make trades, or I used to do, the old Welsh 5 to 10 years ago when he was first starting out full-time in his game. I would try to make that money back as quickly as possible. And stats show me, because I keep a personal journal of all my trades and I analyze them. And what that showed me is that whenever I tried to make my money back quickly, I would lose it. I lose more. So the most profitable thing that I can do when I have a losing trade, especially an unexpected one, is turn off the computer, and I honor that. I turn it off, and then I come back the next day like nothing happened. And even that day when I lose money, my wife can't tell whether I make or lose money. Because one, when I'm making money, I sure as hell don't want to tell her because she's going to be spending it. And when I'm losing money, I don't want to bring my family down. I like to keep my business separate than family because I trade in the same house. I don't like the mood to overcome the house.
That's great. That's excellent. So just one other thing that you touched on there, and that was documenting your trades. How do you actually journal those? Is it sort of a written notebook, or do you keep how do you go about that? Is there a file on your computer? How do you journal your trades?
I journal even to this day, I journal I have an Excel spreadsheet. And basically all it is, I put down the day when I make the trade, how much shares that I trade as percentage to my balance, and, whether it's short or long, it's gain or loss. And I do this every day. Either during the day or end of the day, I fill out the spreadsheet, regardless of whether I win or lose. And I put in the correct amounts. And I keep it as my personal, second pair of eyes. Because being a trader, is really a lonely business. I do have trader friends, but, no one, when you're in a bad streak, no one really likes to talk about it. I like to talk about it a lot, but I know when I've lost friends over the last few years that just completely dropped out, probably because they were losing so much money, some trader friends. So I use that Excel spreadsheet as my accountability. If I'm doing things stupid, I want to see it on that Excel spreadsheet. I want to look at it. I want to see it every day when I do something wrong. And guess what? When I'm doing something right, I want to see it. I want to press harder, and I want to go bigger in size, and I want to make money. And that spreadsheet, I mean, it's sad to say, but I need it, and I keep it, and I've been doing it for so long. It's just second nature for me. So that's like my second pair of eyes.
That's really good. I mean, if you find something that works, you just keep doing it, right?
Right. I mean, I love to ditch it, but I'm afraid what would happen if I did?
I think it's more important to be making money. So if it's helping with that, stick with it, I say. So this has been awesome, John. Thanks so much for coming on. I really appreciate you taking the time on a Sunday evening. Before we go, do you want to share with listeners where they can find out more about you and connect?
Yeah, just you can go on Twitter at John Wells Trades. That's it. And some days I hop on, I give some trade ideas and some commentary. I try to do what I can and give back for free, whatever I can for finance. And you can see me there. And I'll try to tweet quality stuff whenever I can.
That link will be in the show note to John's Twitter page. Go along, follow him. And yeah, thanks a lot, John. Let's keep in touch and we'll speak soon.
Aaron, thanks again for the opportunity. Have a good weekend, or in your case, have a good week.
No problem, man. Talk soon.
Take it easy. Bye-bye.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up, team? Welcome back. It's awesome to have you tuned in and listening to episode 19 of the Chat with Traders podcast. Now, I'm not sure how this happened, but this interview somehow slipped through the cracks. I actually had the conversation with this week's guest around November last year, being 2014, and it's been tucked away in a folder ever since. So let me introduce you to this week's guest. His name is Stuart McPhee, and he comes from Melbourne, Australia. He's an equities and forex trader who has been involved with the markets for around about 20 years, and he is also the author of Trading in a Nutshell. Our discussion was heavily based around trading plans. Stuart shares a very simple discipline hack that will help you to follow your trading plan for the long term, not just the next week or so. Even though it's taken a while for this to surface, I'm pleased to finally share the interview with you. All right, this is Chat with Traders. I'm your host, Aaron Fifield, and here is this week's guest, Stuart McPhee. Hey, Stuart, thanks for making time to come on the show today. It's really great to have you here.
Yeah, thanks for having me.
Great. So you just got back from Singapore. What was going on over there?
Yeah, I go over there quite regularly. I've been doing it for a number of years now. Last week, I just did a number of events in the evening talking to aspiring traders, people from all sorts of experience levels, from absolute beginners who have no idea what's ahead of them and all the challenges they have in front, to some that have been trying for a few years and have won some money and lost some and just sort of battling along trying to make their way through the journey. So that's all I was doing last week, and I do that on quite a regular basis.
Awesome. Were you speaking on stage there, or just sort of a bit of networking?
Yeah, no, it was on, not quite on stage, in a room, no doubt, no less, but I do the occasional sort of big Expo Invest Fair is one in particular in Singapore, which is quite popular, and that involves, yes, a very large stage, and last time I was there in August was like 500 people in the audience and standing room only, but last week was just small groups of, 30 or 40 people.
Okay, good one. No, that's really cool. So, Stuart, if you could, give us a rundown on how it all started for you. How did you get into trading, and what was the appeal?
The appeal is obviously money, and I say to people all the time, it's nothing to be ashamed of. It's generally the primary motivation that most people have to get into it, and I just get that out in the open and say, when I talk to groups of people, you're surrounded by people who had a similar motivation, and it's nothing to be ashamed of. So that was my motivation, just like everybody else. Excuse me, that was my motivation. I'm just trying to think of your other part of the question. What sort of sparked my interest? I think,
how did you get started trading? What was your introduction?
Yeah, well, it was having some money. This is before I bought any assets or any property, and it was just having some money saved up and thinking, what am I going to do with this money? So I went and saw a financial planner at a bank, and this is a few years ago now, who just said, why don't you buy some shares? You're young enough and you can afford the risk and ups and downs and the like. And I thought, shares, I've heard of them before. Like, I've heard of buying shares in companies. So I did just that, and I remember buying shares in the actual bank that I was physically sitting in. It just made a lot of sense. You know, there's 2,000 stocks on the ASX thereabouts. So where do you start? You know, do you start with the A's and work your way through to the Z? So I just bought, you know, shares in that particular bank. But then I realised with the ups and downs and that I could probably do more and be a little bit more active. So I was just on the lookout for ways to learn how to do it better and perhaps a little bit more active in trading. So sure enough, newspaper, and I'm just flicking through newspapers and I see advertisements all over the place saying, you know, sit by your breakfast table and, you know, sit in your shorts and T-shirt and make, you know, X thousands of dollars before morning tea, blah, 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 all that sort of rubbish. But that sparked my interest, and sure enough, I went along to a few of these introductory free in bracket sales seminars. And that just really sparked my interest.
Okay, good one. So how did you get started from there? What was the next step? Did you begin paper trading, or you just sort of dived right into it, started putting some money on a few trades and sort of see how you go?
Yeah, the first real probably big step was actually one of these sales seminars lured me in and got my checkbook out, and I paid a lot of money to attend quite a series of, it wasn't a one-off event, it wasn't a weekend course. It was a very structured, ongoing, quite a number of, like the curriculum, the syllabus was actually quite extensive. So I thought I was getting reasonable value for money, and probably in reflection, I probably did get pretty good value for money. So I undertook this course, and it took me probably 6 months of going to evening classes and, on the weekend, Saturday morning for 3 hours. And I did all these classes, and I was learning about what I refer to now as quite simple things, as like charts and candlesticks and drawing support and resistance levels and learning about risk and position sizing. And sure enough, I just started to appreciate how much there was to learn.
Okay, sure. So once you did get started, what were some of the things that you found yourself struggling with? What was sort of the most difficult part for you?
Losing money. Yep, pure and simple. Buying something and it just didn't go where you wanted it to go, and then not knowing what to do. And, you know, it's intuitive to just bury your head in the sand and hope and wait and pray that it comes back up to where you bought it so you can break even. Losing money. Pure and simple, and I think probably that's the case with 95% of the people. I mean, clearly being proven wrong on a regular basis is very humbling, and it's not something that a lot of people are comfortable with or used to because of their character or perhaps what they do for a living in their real life. But all those things with managing risk and losing money and getting it wrong often and not knowing what to do, they're probably more, I could give you specific examples, but they're probably the more general issues that I really struggle with.
Yeah, right. So losing money was certainly the big one. What was the best way you found to overcome losing money, or at least sort of be able to deal with it a little bit better? How did you approach that?
It probably wasn't anything conscious I did. It wasn't anything deliberate I did. What happened was, and I say this a lot to people now, what happened was the more it happened, the more I became desensitized to it. So I think if you have, 50 losing trades, you are able to handle that a little bit better than someone who's just had their first monumental loss. And when you've had 100 losing trades, and intertwined in all of this is the journey of you learning a lot more about what it takes to be a trader, and you're attending the occasional workshop or seminar or reading another book or reading another article. And the more you do that, the more you appreciate that you're not the only one who's losing all this money, and you're not the only one who loses money 1 out of every 2 trades or 2 out of every 3, that it happens to absolutely everybody. So the more you learn that and the more you go through it, I really do believe you become desensitized. So it was nothing, as I said, deliberate that I did, or this is the path that I'm going to take to address this problem. Not knowing really what to do, you just keep ploughing on and keep persevering and just, save up a bit more money and start trading again. And the more that happens, the more chance sometimes you have of pushing through and getting through to the other side. So that's probably what happened in my case.
Yeah, so time and just sort of sticking with it was sort of one of the big ways that you got
time. And I think, yeah, absolutely.
That.
And I think one of the things so many people don't appreciate is how much time it's actually going to take to get some measure of success and consistency and the performance that people actually initially dream of. People don't appreciate that. There's no obvious barrier to entry to set up a trading account. There's nothing you need to do. There's no licensing. There's no exam you have to do. So no barrier. So you go in there with very false expectations and you don't appreciate the time.
Of course, yeah. Okay, Stuart. So now that you've had a lot more experience, how would you define your trading style?
Well, I've got two very distinct, very separate trading styles. One is I address once a week. The other one is every day. So I can talk about both of those. One's purely trading equities in my retirement fund, my self-managed super fund, which I've had for many, many years now. So that really only takes once a week. Very conservative, very medium-term outlook. Stops are very wide. It's not something I need to manage every single day. And for the last 5 years or so, I've been trading currencies a lot more actively. So that's the thing that does take my time every day. But even then, it doesn't take, I don't spend 10 hours looking at a screen, looking at numbers flashing. But my process that I go through, I do every day. Takes a little bit more of my time. But even that's reasonably conservative in currency terms. I'm probably taking maybe 4 or 5 trades per month. That's it. Some will take that every hour. So, but that's nothing right or wrong about that. That's just everyone has to work out an approach that works for them. So 2 very distinct approaches, 2 very distinct financial products.
Absolutely. Okay. So what would you say are some of the key benefits from the account that you trade with the currencies, taking 4 to 5 sort of trades a month? What would you say are some of the key benefits of that trading style you have versus maybe a day trader or someone who's buying and holding? Obviously, that's sort of a little bit different from trading.
Sure.
But what are some of the benefits from that method?
Yeah, I think a key benefit is being a lot more selective. So rather than sometimes taking the best of a bad bunch and just looking for opportunities and actually really sometimes lowering your standards and just trying to find something, I am on the other end of the scale. I'm far more selective. So I think whilst I trade fewer, I think generally speaking, my signals and the setups I take are far higher quality because I'm just being a lot more selective. That I think is one definite benefit. Certainly time. I just have a life right now where I just don't want to be, again, looking at a screen an hour for me looking at a screen is too long. And I don't want to be doing that. That's just personal choice. That's not right or wrong. That's just, I do a lot of other things and, balance that up with other things I do in my life. But I think being far more selective with your opportunities rather than, as I said, sometimes taking the best of a bad bunch, which I don't think is a good thing.
Yeah, okay. So you're sort of saying you're very selective in the trades that you execute. What are you actually looking for to get into a trade? Do you have some favourite signals, some patterns that you like to trade?
Yeah, within currencies, I'm a huge follower of just simple key levels, so support and resistance levels. I don't want to timestamp this particular interview too much. I could talk about current levels with the euro or the Australian dollar or whatever, but in years to come, that'll be miles off the mark or something, and it'll very much date the video. But key levels for me are paramount. I think currencies respond to key levels all the time, and they're a big component of the way I look for opportunities. And the other thing is just pure trend. I know people trade counter trend, and I know currencies probably lend themselves more than stocks do to trading counter trend. But I'm a big trend follower. Currencies can move so far. Admittedly, for a lot of this year, they haven't moved a lot. But just the last 2 or 3 months, they have moved unbelievable amounts. And we're talking about all the majors, and it's all been dominated by the US dollar, but there's been significant moves. So simple trend following strategies can just absolutely clean up.
Okay. So when you talk about key levels, that's much the same as sort of support and resistance levels. So you're just looking for it to sort of break tops or break bottoms?
Yeah, it can be that way, or it can be, if you want to trade the counter trend, is the actual testing of those levels and the levels standing firm. and holding up. And then, of course, when there's two levels involved, then all of a sudden you have a range established. And then people, not myself generally, but others can then take advantage of those ranges because you know the limits and expected outcomes and how far it might move to the upside because that's where the level of resistance is and so forth.
Yeah, great. So it sounds like your trading's predominantly technical based. What are your views on fundamentals and news, and do they have any impact on your trading approach?
They have a massive impact on the markets, but they don't have any impact on me. So there's no doubt currencies are a very news-driven market. Every time a governor or a head of a central bank says something, markets normally respond, and they're saying things often. And they're certainly never been more in the limelight than they are right now. Excuse me. So the currencies markets are very news-driven. For me, I love simplicity, and I love price, and I love price action, and I love technical analysis, and I love the clarity of charts, and I love that price captures everything that everybody is thinking, even if I don't agree with it or not. And I think sometimes fundamentals can be too opinion-driven and can be too story-related, too much sort of like telling a story, and that's just not something that resonates with me, and I just love the clarity of charts.
Okay, good.
Sorry, I should just add on to that. I'm the last person to say, as a technical analyst, I'm the last person to say that fundamentals don't work or are horrible or whatever. No doubt, as I said, currencies are very fundamentally based and very news driven. It's just each person just has to work out what suits them, what works for them, what resonates with them. And for me, and I say this a bit tongue in cheek, I think with fundamentals, there's too much to learn. You just got to know so much about economy and GDP and all these figures and jobs and yields and interest rates, and it's just not something that's ever interested me to be perfectly open.
Yeah, no, I think you put that really well, Stuart. So the point you made there about finding what works for you sort of brings me to the next point I'd like to discuss with you, and that's trading plans. I know you're very big on this, and in fact, I saw your interview with Mark Cook, the market wizard, and it was good to see he's also extremely passionate about trading plans and having a solid
and
one.
More than me, and more so than me. Yeah.
Yeah. So, Stuart, I'd like to ask you, what does a trading plan mean to you, and what should entry-level traders do to create one?
I think it'd be very daunting for beginners to put a trading plan together. You wouldn't believe it. I did a brand new session last week in Singapore, never run it before, and I just was ad-libbing a bit to start with. And I had a room probably of 35 people, and I said, hands up, who here has a trading plan they can present to me right now? Out of those 35 people, you could probably have a fairly educated guess. One person put their hand up, and everyone sort of sniggers and feels a bit uncomfortable and has a bit of a laugh about it. I said, okay, from that then, who here in this room believes that they can make money consistently, not today or tomorrow or just the next week, but consistently over an extended period of time without a trading plan? Who believes they can do that? Not one hand goes up. So I said, well, there's clearly a disconnect here. There's clearly a problem where you all accept that you need one, yet with the exception of one person, no one has one. So clearly that's an issue. I cannot overstate the importance of a plan. Plan is simply a compilation of your rules. Your rules are there to protect you from making silly decisions. And if you don't have a plan and don't have something to base your decisions on, you'll make silly decisions on a routine basis. That's just human nature. I mean, all the things we do intuitively in the markets generally have you losing money. So the plan actually provides you some structure and hopefully assists with some discipline to actually have you moving away from intuition and doing more what's required of you. So what does it mean to me? It's look, to be very open with you, I don't necessarily have it written down anymore, but I do believe in that. I tell people that, and I do believe that. I probably got to a point now where I'd have it maybe somewhere as a Word document, but I've done it. You do it so many times, you see the same setups all the time. You set your stops the same way all the time. You position size the same way all the time. Talk about becoming instinctive and routine and do it in your sleep, because that's what happens when you've done it thousands of times. But yeah, I can't overstate the importance of it.
Yeah, but to get to that level, you obviously did have a trading plan that now you just know it so well that it's just second nature?
Sorry, yes, and I didn't really answer one of your questions. That was, how do we start off? Where do we go? First thing is, don't be daunted by it. Don't think it's a book. It's not 200 pages. Mark Cook, you mentioned before, his was very, very long. And in his, and I saw a copy of one of his, he addressed questions that I never even thought were possible in the market. So, I mean, that's just probably a product of how much experience he has, and he is far more active in the market than I am. But where do we begin out? We just break it down into basic levels, and you need to answer 3 questions at the very basic level. How do you get in? How much do you risk? How do you get out? So under what conditions do you enter a trade? How much do you risk? How many units do you trade? Where do you put your stop position size, etc.? And then how do you get out at a loss or at a profit? So yes, each of those questions takes a bit of time, but just break it down to those 3 basic questions, and that forms the basis of a plan.
Yeah, no, that's really solid information there, Stuart. So after creating a trading plan, I guess the next most important thing would be to follow it. And I've heard you say before, following a trading plan is pretty simple unless it's your own. Could you elaborate on this a little bit and maybe share some tips on how to actually follow your trading plan once you've created it?
I talk to people a lot about discipline, and I've had a number of people come up to me and say, I know I'm undisciplined, whatever the correct wording is. I know I'm undisciplined, yet I know I have to be disciplined, and I don't know what to do about it. And the advice I give to people is to take small steps. So most people know, and I just relate it back to perhaps losing weight. There's no secrets to losing weight. People know about, burning energy or burning calories and activity versus what you put in your mouth. So, there's no secrets to that. So the problem is, though, people say, right, as of 1 Jan or as of 1 July, I'm going to lose weight, I'm going to stop eating all that, and then I'm going to exercise 30 minutes every day, I'm going to go for a walk. That becomes too daunting. People can't follow that. It's all too much, because we are very habitual creatures, and we get into habits, and we are very routine. And, when the sun comes up, shortly after that, we get up. And when it goes down, shortly after that, we go to bed. We're very much habitual creatures. So to change a major behaviour takes a lot more than me saying, 1 July, I'm going to, walk every day for 30 minutes. So what I say to people is take small steps. If I was to say to a group of people, right, tomorrow, all of you need to find 30 minutes and go for a walk, everybody would be able to do that. Easy. But if I said, right, you need to do it for the rest of your life, well, after a period of time, after 5 days, X% will drop out. After 10, more will drop out, and so forth and so forth. So the idea being is just say, for the next 3 days, I'm going to walk every day for 30 minutes, and you'll get a high completion rate. Because the 4th day, I don't care what you do, sleep in all day, eat as much food as you want, but you don't have to do that change of activity. There's a sort of a light at the end of the tunnel, so it's very easy to achieve. Let's relate that to trading. To say, I'm going to cut my losing trades every trade from now on is just not practical. It doesn't work. But you say to someone, just for the next 3 days or the next 3 trades, do that, and then the 4th trade, I don't care what you do. And everybody will be able to do that. And after that, they can say, wow, I actually was able to change my behaviour. Perhaps next time I'll do it for 4 days or for the 4 trades. And then we just slowly but surely change behaviour over time, as opposed to saying, as of tomorrow, I'll completely change. So discipline to stick to the plan is incredibly, again, cannot be overstated. So to me, it's all about changing behaviour, changing habits, and just basically saying to yourself what you believe is important and what it takes to be a good trader, and work out how, professional you want to really be at this.
Yeah, so you're saying that small steps are really the key to being able to follow your trading plan.
To change behaviour, yes, and to become more and more disciplined.
Yeah, and I guess sort of as you do that, you sort of prove to yourself that it does work and it does make you money if you stick to your rules, instead of it's sort of been a bit hypothetical to begin with. It then sort of sinks in, and you soon realise it's the way to do it.
Exactly. The 3rd trade that you sort of cut your loss, a week later you might look back at it and go, wow, had I not cut that, look at the position I would have been in right now. I would have been miles down. Well, this thing may actually work.
Yeah.
So it sort of starts to convince yourself that one, you're capable of doing it, and two, it's the right thing to do.
Yeah. No, I think it's very important. The topic of trading plans.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with 0 locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
Bringing it back to your trading a little bit, are there any trades from your career that you'd like to share with us, either for all the right or wrong reasons?
Definitely the wrong reasons are the right ones to share with you.
Yeah.
I can think of when, and all of a sudden now this is a long time ago, but back in 2000 when the NASDAQ crashed and markets really stumbled, I was very heavily involved, very active for the 12 months leading up to that, and did okay out of it. But then when all that crashed, gave basically all of it back and some. But the lesson I learned was that I had been so conditioned that markets just went up. And they went up incredibly strongly and with real venom, real strength. So as markets started to fall, I had been so conditioned to markets going up. As they fell, I was just all in buying, thinking that this is just a blip. This is just 1 or 2 days, not appreciating the fact that things had turned and markets were about to move very, very strongly lower. And as things just dropped so sharply, I did what was intuitive, and that was, wow, look what a bargain it is. Look how cheap this is. And I just jumped right in to make all that money back. And I just continued to do that. And I was so conditioned to markets going up. So when they didn't, I was just flabbergasted. I had no idea. I'm just trying to think of the right word to describe how I felt. I certainly felt helpless, and I felt like I was just an absolute amateur and that I was being just completely run over. But the thing was that I was so inexperienced and I was so conditioned that just markets go up all the time. And I just vividly remember being at a friend's place in Perth, and I live in Melbourne, but being over in Perth and using their phone line, and I had hooked up the phone cable. I thought I was really smart, dialed into the local ISP phone number, and I logged into my account and was actively trading on their kitchen bench because I was that active. And I just look at that now and just realise how stupid that was. But the thing is, with so many, if you don't know any better, you think you're doing what's right and you think you're doing what makes a lot of sense. And most of what people do, they think is the right thing to do. They don't deliberately sabotage themselves. They think they're doing the right thing. And when you don't know any better, that's what you'll do.
Yeah, no, really good points there. So I believe you've been trading for nearly 20 years now.
all of a sudden.
Was there ever a point when you thought to yourself that I've got this, I know how to trade profitably now? I guess the question would be, was there ever a transition from learning how to trade to now being able to trade? Did it ever just sort of click like that?
It's a great question, and it wasn't a single moment in time. I think it was a 12-month period, though, where slowly but surely I started to feel that way. And it was when after I'd lost all this money, and therefore I had no more money to trade with, and in fact I was then committed to paying back money that I had lost, where I had no choice but to not be involved. But what had happened, fortunately for me, because I could have easily have turned away and never touched the market ever again. Fortunately for me, in that 12 months prior, I'd actually made some decent money. So I saw it was possible. And I still, to this day, have people come up to me just quietly. They will not ask this in front of everybody. They'll come up to me individually and say, is this real? Like, is it actually possible? Because I'm not yet convinced. And I can understand that. I can understand why people would think that. Well, I had been convinced because I actually had made some fair cash. The problem was I gave it all back. But I saw it was possible. I just realised I had to do it a lot better and be a lot more conscious of the other end of the trade, and that's when to get out and managing risk. So when I had no choice but to hit the books and attend more workshops and seminars, and I'm not a big reader, and I probably should be ashamed to admit that, but I'm not. I have not read a lot of books in my life, but I've actually read a lot of trading books because it was a topic that really interested me. So Market Wizards was probably a defining book for me, and I wish I had $1 for every time I've mentioned that book as having a significant impact on me. So the Market Wizards books and a few others I could list off, but I'm reading all these and going, wow, I can relate to that, and that makes a lot of sense, and I can understand where he's coming from here. And all of a sudden then I did a lot of testing, because prior to that I wasn't trading with any consistency. There was no real strategy. It was just, hey, that's going up, I'll buy it. And sure enough, it did well. There was no process. There was no strategy looking for opportunities. So all of a sudden now I started to think more about consistency and having a clear-cut set of rules. And then I had to validate that. So I had to go through this process of testing. And because I had the time, I did most of my testing manually. And the good thing about that was I had confidence in the results because I'd seen them bar by bar. I'd followed all these trades, but I actually learned a lot about technical analysis by following all these trades manually, by studying price action. And I noticed when price did it did this, and then it did this, and all of a sudden I'm learning a lot more about TA. So throughout that 12-month period, I'm starting to think I'm going to be in a far better position to go at this again than I was, say, 2 or 3 years ago.
Okay, and when you say testing manually, are you talking about back testing there?
Correct, yes.
You are? Okay. Yes. Good one. So just sort of proving to yourself that certain patterns, cause this sort of reaction and that type of thing.
Yeah, and I'm quite open about this, and I share this elsewhere, where I thought trading's difficult, you need a complicated solution. So I thought I'll start off with a few basic rules, and I'm just going to add lots and lots of things to it to make it really complicated and complex and everything. And all of a sudden, these simple rules were actually getting results. And I thought, do I need to go any further? Do I need to add complexity to this? Maybe I don't. So that was another learning point, that simple rules actually do work. And whenever I sign my book now, and I sold some books last week, whenever I sign my book now, front cover, I write, keep it simple. Because we have a very natural tendency to complicate things. And yet in trading, I think simple works very well.
Absolutely, yeah. So, that might be relevant to this question here, but where do you often see entry-level traders slipping up, and what would you say to them?
Failing to understand and manage risk. Entries won't kill you as a trader. I'm not saying random entries work well, but certainly your entries won't kill you. It's what you do at the other end of the trade. It's failing to manage risk. It's failing to understand the risk. There's so many products out there now. Many are leveraged. People are attracted to leveraged products, but they don't understand the risk. And they just blow themselves up really, really quickly. They don't understand that leverage is double-edged. They just completely fail to probably realise how difficult trading is. And I've never, ever said trading is easy, ever. And I still don't think it's easy. It's actually a lot more difficult than people realise. So that's probably a big slip up, is entering it thinking give me a weekend course and I'll be okay. I'll be giving up my job and trading full time, not appreciating, you read about competency, 10,000 hours of sort of work to develop a level of competency with a particular skill, and maybe trading is one of those in the 10,000 hour bracket. But risk is one word probably to sum up. Where do beginners slip up? It is absolutely risk.
Okay, very good. So, again, maybe sort of similar question, but what is that? What is it that you believe stops the majority of traders from making a huge success?
Not taking the time to do all the things that need to be done. Not taking the time to study and understand and manage risk. Not taking the time to become more and more disciplined as a person, as a trader. Not taking the time to develop a plan and validate rules and test and prove and disprove different strategies. So not taking the time to become very methodical in the process and structured and organised as a trader. So not treating it as professionally as they should. And I'm going to say the word again, time. Not probably investing the time. Thinking that, I use the analogy, I play a lot of golf, and I talk about not wanting to look at a screen for 10 hours a day. That's one of the reasons. And I'm very lucky I get the opportunity to play a lot of golf. But I'm not a professional golfer. I don't make any money. I don't make 1 cent from playing golf. In fact, it costs me money. I just bought clubs earlier this year. They cost a lot of money. My membership fees cost a lot of money. So I don't make any money playing golf. I'm not a professional. But to me, I love it, and to me, it's a hobby. And for me, too many traders treat trading as a hobby, in that they enjoy it, they spend a lot of time doing it, they're happy to do it, but at the end of the day, it costs them money. They don't take that next step of becoming professional. So to many, trading is a hobby, not a profession. Golf for me is a hobby, but I think trading demands a little bit more of my time and respect.
Yeah, so failing to treat it like a business is probably another way to put that. So another big factor in being successful at trading would be the emotional side of things. How do you manage emotions, and what gives you the confidence to push on after a few losing trades?
Yep, it's again desensitise. So, excuse me, I mentioned this. I can't remember the specific point, but I talked about over a period of time you become more and more desensitised. And I think to myself, a surgeon who might cut the chest open of a human being, the first 10 times they did it, thought. And if you and I walked in there, we'd go, I don't want to look at that, it's uncomfortable. But this guy who's done it 1,010 times has become incredibly desensitised to that. So when it becomes to emotions in trading and having confidence in what you're doing and having a string of losing trades and the like, time, trades, the number of trades, the number of times you've gone through all these emotions and what have you, you become desensitised. So I have no issues taking a losing trade. I haven't for years. But when I started, I had massive issues with taking a losing trade, as does everybody. But over time, you become absolutely desensitised.
No, it's good to hear that. So this has been really good, Stuart. It's been great having you on here, and thanks again for you taking the time to come on. So
it'd be my pleasure.
But before you go, we'll take it to the closing bell. So the closing bell is just a round of questions that we ask to all the guests, just short.
Rapid fire questions?
Pretty much, that's it. So
okay.
First one would be, what's the best piece of advice you've ever received?
Hard to be simple, it's simple to be hard. If you talk about trading, as human beings, it's very difficult. As human beings, it's very easy and simple for us to complicate things. It's actually very difficult for us to simplify things. So realising that it's actually a very conscious, deliberate decision for us to try to simplify what we're doing with our trading. Because if we don't, we'll overly complicate things, because that's what humans do.
I like it. Really good. So what is the number one trading resource you couldn't live without today?
Probably easy, internet.
Internet, that's a good one.
Yeah, I mean, everything is online. It's on my tablet. So I never do things on my phone. I mean, I've got a big screen on my phone, but I don't like it being that small. So laptop, tablet, but all that's, of course, connected somehow. So internet is probably it.
Great. What's one book that you believe is a must-read for any trader just starting out?
Now, Aaron, that's easy. My book, of course. Trading in a Nutshell, 4th edition. But if I can't provide a shameless plug for my own book, I think I've said it already once today, and that's Market Wizards by Jack Schwager. And I think it certainly had the most significant influence on me. I think also with that book, if you've read it before and then you trade for 1 or 2 or 3 years, go and read it again, because you'll actually learn more, because from your experience, you'll be able to relate to other things you didn't pick up the first time.
Yeah.
So that would be it.
No, that's an incredible book, the Market Wizards, and we'll put a link to your book in the show notes for sure.
Oh, thank you.
Knowing everything you do now, what would you have done differently come day one?
Maybe not started. Sorry, you probably haven't got that answer before.
It's a new one.
It was a few times early on were horrible. I mean, after I lost a fair amount of money and then 3 months later lost more trying to win that back, that was an incredibly horrible time for me. So no, that's probably not my final answer. That's just penciled in. But realising that most of the decisions I needed to make were counterintuitive. So I needed to have steps or processes in place to ensure I didn't make decisions intuitively, i.e. have a plan.
Okay. Really good. No, thanks again, Stuart. It's been awesome. So tell us, where can listeners connect with you or find out more about you and more about your book and that type of thing, and then we'll leave it at that.
Sure, thank you. Probably I'll just give you 2 URLs. My book you can find at tradinginanutshell.com. That's all one word, trading in a nutshell. Or my website, yet to be developed, stuartmcphee.com.
Okay, awesome. All right, we'll put those links in the show notes, and we'll keep in touch. Thanks
Terrific.
again, Stuart.
No, you're very welcome. Thanks.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
All right, what's going on, guys? Thanks for listening in. I know I say this nearly every week, but I really mean it. It's great to have you here. So This week, I was thrilled to speak with a well-respected, high-energy, and incredibly insightful trader, and who many of you probably already know as the head honcho at Bulls on Wall Street. His name is Kunal Desai. I've been trying to bring him on as a guest for quite some time now, but it's finally happened, so I'm glad to be sharing this with you. If you're unfamiliar with Kunal, I'm going to give you the super condensed intro because we discuss his journey in great detail for the first part of our interview. So Kunal is essentially an intraday momentum trader. He's been trading since his teens, and just like many of us, he really struggled for many years going into his 20s. Eventually persuading one of the few profitable traders he knew of to show him the ropes, who taught him how to actually work the market like a trader. From there, overall, it's been onwards and upwards. But during our discussion, we cover quite a range of topics. To mention a few that are really interesting, Kunal covers his go-to setups, which he also commonly refers to as slump busters. So that should really prick your interest. We also talk about why it's dead important to master one or two things and understand those really well. I know this is a topic that's come up several times in previous episodes, but it was really interesting to get Kunal's take on this as well. We also discuss some of his rules around risk management and how he applies these to his own trading. We also discuss how to combat FOMO, which is really just a silly word for fear of missing out. But this can be a real issue for traders and has the potential to really mess you up. So that was a really cool topic that we went into quite a bit of detail on. Also, we talk about the reasons why you must have an undeniable passion for trading, as well as trading for the right motivations, both really important. So before we get into this week's interview, I'd just like to mention that over the last few weeks, I reached out to 17 proven traders to ask them, what was the one thing you wish someone would have told you before you ever started trading? So essentially, I asked them to share the single most valuable lesson they've learned to date. From there, I've combined each one of these 17 lessons into an easy-to-read 28-page guide. It's a free download, and you can get your hands on it at chatwithtraders.com/17 lessons, and no spaces, of course. Some of the traders that are featured inside have appeared on the show in the past, as well as there's a few traders that have not appeared on the show too. So hopefully you can take something from their most valuable lessons and use it to avoid similar struggles and condense your own learning curve. Again, you can pick that up for free at chatwithtraders.com/17 lessons. All right, let's get into it. Here is this week's guest, Kunal Desai. Hey Kunal, what's going on, man?
Hey Aaron, how you doing? Thanks for having me on.
I'm pleased to finally get you on. You're hard to get hold of, and I'm glad to have finally locked you in and got you on the show. So thanks so much for coming on.
My apologies. I was on a 1-month hiatus.
Yeah.
And the email is the last thing I like to do when I'm on hiatus.
No doubt. I can't blame you for that. So tell us what's been going on. You've been traveling around. You've just returned from, I think it was St. Martin. Tell us about that. How was it, man?
Yeah, so I went to the Dominican Republic for 2 weeks, and then Las Terrenas, and then St. Martin for 2 weeks. So typically I do, I'm always on the road. So when I have boot camp class, I teach these trading boot camps. I'm at my house in Florida, and I'm just working and trading and running our businesses. And as soon as class is done, I take off for a month and I recharge, and I'm still trading and teaching and doing stuff. But I do it in a different location. And I relax because I don't have the nighttime classes, so I can actually go out. When you teach live classes like ours is 8 o'clock every night, so, you don't have any social life. Like it's, you're just teaching class all night. So I like to get out and about. I have a good friend of mine, Cameron Foose from Foose Alerts. He's one of my best friends. So obviously we're of the same age, and we're in the same business. So I drag him with me, and we go on these trips together. So we've been to Colombia, Costa Rica, St. Martin, Dominican, and after this next boot camp is done, we're going to Spain for a month.
Very cool. Nice. So since you like to travel so much, what would you say is probably one of the coolest locations you've ever traded from?
My favorite place to go is Costa Rica. and it's probably similar to a lot of the spots in Australia. Costa Rica is very like a rugged place. If you like adventure stuff, surfing, kayaking, jumping off bridges, anything that's wild. Costa Rica is like Jurassic Park. There's a lot of that type of stuff going on. There's not like the party scene nightlife that you'd get like in Europe, but if you want to like do some real manly stuff, that's the spot to do it.
Very cool. The fun stuff, eh?
Yes, I've been there last 4 times in the last 2 years. It's one of my favorites.
Nice, man. Well, let's get this rolling. So let's talk about how you got into trading, because from what I hear, your parents weren't too hot on the idea of you being a trader. So tell us about that. Also, tell us about how you funded your first account, because I think that's also an interesting story. So I'll let you take it away.
Sure. So my dad has always been trading. My dad is an engineer. He works at a software company in Michigan. And so he's always dabbled in the stock market. He's just like, we laugh about now, my dad is like the worst trader in the world. Like, he's terrible. Like, I remember so many instances as a young man, my dad having margin calls and having to scrounge for money and stuff like that. He was just bad. But it was always like in the back of my mind, like, what's he doing all day? And then it happened to be, me graduating high school happened to coincide with this incredible life, world-changing events and timeline of the dot-com boom, And so the world was changing. This new thing, the internet is, right, the new hot thing. And so everybody now at this point is trading internet stocks. So you will see, right, the janitor, the guy at McDonald's, everybody has internet stocks. And so that's like the talk of the town. You'll see regular people with all of a sudden these new riches. Like they had E-Trade would have like cafes in New York City where people go to trade, Everybody was a day trader because you just turn on your computer, you buy a bunch of stocks, and the next day you're up a lot of money. And so I was seeing all these people. So like I had a neighbor, Bob, and he was like the biggest jackass. He really was a jackass. I mean, and all of a sudden Bob has like a BMW with like a Yahoo ticker on it. And I'm like, whoa, like, dude, Bob is a jerk. Like, how does he have a BMW? And, I come from a very middle-class background. So the BMW is like the pinnacle of middle-class lifestyle. You get a BMW 3 Series, it means you've made it. So Bob had made it. And so I became very interested in what he was doing. So I started researching all the stocks. And, I couldn't get any info from my dad because, he obviously doesn't want me into this thing that he's caught up in. And so I just started on my own, just going on and trying to figure all this stuff out. So I read a bunch of books by Warren Buffett. And I'm like, okay, I think I figured this out. And so that was it. Like I had to open, an account. And so I had like $500 laying around. And so at that time, there were all these new discount brokerages. So there was one called Buy and Hold Trading where you could open with like $50 and you could never make real-time executions. They had 3 times a day where they would execute your trade. So it's like, the open, the middle of the day, and the end of the day. But, you could only, it was cheap. And so I opened an account with there, and I'd go on MSN Money, which was like the big hot financial site at the time. And I'd always look for ideas. And so what was his name? Gary Jubak. There was a guy with a crazy mustache on MSN Money. Always talk about different small cap stocks. And so I'd always be reading them, and they'd be like, oh, this one is growing and it's cheap, and this one's cheap, and this one's cheap. And so I just started throwing a bunch of money around. And because this is the dot-com boom, a lot of these picks started to work. And then from there, I got into tech stocks, and, you throw the money around and everything works. Like, it was like this amazing thing I discovered that I was like, wow, none of my friends know. They're so stupid. They're in class right now. Like, I've got this. Why would I want to go to class? And so I would sit there and skip class, and I would be trading. And my account started to grow. So once my account got to a couple $1,000, my dad was like, hey, cool. And so my dad floated me like $1,000. And so now I had enough money to get a margin account. And so then I could really start to trade, and so I started just building it up. And I got lucky a couple times with Amazon and a couple other tech stocks, the networking stocks. And so, all of a sudden now I was over the pattern day trade rule and I could day trade. And I just kept going and going, and I built up some cash, and then the dot-com bubble bust, and I lost all my money in just less than a week, basically. When you're holding stocks that are up so much and they all drop 10, 20, 30% in a matter of days, you're basically wiped out, because I didn't really know anything about trading. I was just throwing money at the hot stock of the day or hot stock of the week, but I didn't know anything about trading in terms of risk management, money management, position management. Those are really the key parts of trading. The stock picking is really a very small part of trading, in my personal opinion. So I didn't have any trading skills. So I lost all my money. So I actually went through this cycle a couple different times. I took some time off, and then I started up again, and I built up my account. And I always had a knack for finding the stocks that were about to explode. That was my gift. But, my curse was I didn't know anything about trading. So as soon as I build it up, I'd lose it all. So then the telecom bust happened. I lost all my money in Global Crossing, Nortel Networks, and Lucid Technologies, which is like the three hot, like kind of networking, telecom stocks. And they all went to like under $1. And so, I blew up all my stuff again. And then I had to take some time off. And so I had this spin cycle for quite some time. I wasn't like a lot of the hotshot traders you see that like just make $1 million in their first few years. Like I had years of this up and down, like disappointment. And that helped me really kind of build a lot of the things that make me a really good trader now, that resiliency and, stuff like that, of being able to handle defeat. I think that was really formative. But at some point, I had to stop this spin cycle of losing. And so, at some point later on, and this is like 5 years after I started, when I was starting to really study trading on my own and try to develop myself, because at some point I realized I needed these rules and things that make a trader. I met a gentleman online, Paul Singh, who's my mentor, who actually works with me now on my website. And I used to leave comments on Paul's blog all the time about all his different setups. And I'd be say, Paul, because he's Indian. And so Indian people love trying to like get free stuff from other Indians. That's what we're all about. Indian people, they live for that. Can I get anything free from another Indian person? So I was trying to get some free stuff from Paul and hoping he'd mentor me because, I'm his brown brother. And he was not having it at all. And so I just kept leaving comments, and he was very nice. He'd, answer back, but he was just not going to give me his secret gift or whatever. So finally I said, Paul, I want you to mentor me. I'm going to pay you. And he said, really? And, he had like a little mentorship program, and I was probably one of his first students anyways. And so he said, well, okay, let's do it. And it was like this eye-opening thing because I had all these years of knowledge, but I didn't have like a system or methodology to kind of corral my knowledge into, a set system. So I kind of threw everything I knew at Paul, and he's like, wow. He's like, you know a lot about the stock market. I'm like, no, Paul, I've read 1,000 trading books, and I've made all these trades. And he's like, yeah, I see that. He goes, your problem is that you don't know anything about trading. And I'm like, what do you mean? He's like, well, you got all this knowledge. That's great. You have obviously this knack for picking stocks. That is great. But you actually know nothing about trading. And I'm like, yes, I do. I trade every day. And he's like, no, you don't. He goes, Canal, what happens when you're, when you have a profit on a stock and then it reverses on you? What do you do? Like, what's your system for that? I'm like, I don't know, man. I just do stuff. And then he's like, and Canal, what happens like if you're into this stock and it goes up 20% the next day? Like, what do you do at the open? You wake up and it's up all this money. Like, what's your parameters? What are you going to do? I'm like, I'm going to watch this thing and do what I do. And so, he asked me all these questions, and I didn't really have any set answers for him. He goes, Canal, that is trading. The answers to those questions, that methodology That is trading. He's like, what you got is just a bunch of random knowledge. You might as well just go on Jeopardy. And so that's where we started, was to corral what I had known and put it into a specific methodology, so that, like a cookbook, where when I see something, I know I got to do X, Y, Z, D, and when I see this, I'm going to do 1, 2, 3, 4. And when I wake up in the morning, I turn on my computer, I'm going to do 1, 2, 3, 4. And we start to systematize my knowledge to take a lot of the thinking out of, the stuff that I don't have to think about, and, start building your routines and processes and things of that nature. And, that's really how you kind of build a trader. And so that process I use to this day for my students. We dumb everything down, and we have specific things for every single thing. What do you do when you wake up? What do you do at lunchtime? What do you do at the end of the day? On Sunday nights, how do you review your results from the previous week? Everything is down so that the trader can sit there and they know exactly what they're supposed to do.
Yeah, excellent. So you would say when you were starting out, probably the biggest thing you struggled with was actually sort of knowing how to manage a trade once you were in it.
It's just having a specific methodology for the different variables that you're hit with as a trader. Like, how do you size your position? How do you know when to go in big and when to go in small? I used to just buy 1,000 shares of everything. So you have to have a very specific routine and process for how you determine how much size you're going to have in a stock. And so that's a trading thing. For me, I had very big problems with risk management all these years. I knew how to build up my account, but I didn't know how to keep it when things turned against me, because I'd lose one small trade and I'd be like, oh my gosh, I got to get my money back. And then that would turn into another loss, and it would turn into another loss. And now it would take me 3 months to build up these profits, and then you let it unravel in a few days. And so, you have like a reverse risk management there. It takes you 3 months of work and it's gone in a couple days. Well, that's not very good. So those are the things I had to learn. And I see it with the majority of the students that I coach. I have some students, they'll win, they'll trade 50 times. They'll win 35, 40 of the times. But it's those 10 losses that make them losing traders. They're actually down on all their trades overall, even though they have a very good win ratio, because they don't know how to handle the loss and get out of it when they're supposed to get out of it, right? It snowballs. You hit with the deer in the headlights when you finally get a loss. You freeze a little bit, and then you don't have a very specific methodology to kind of get yourself out of that trouble.
Yeah, no doubt. So when you're still very much learning how to trade, there's always some uncertainty about whether you're going to maybe even make it as a trader. Was there ever a turning point that you experienced when something just sort of started to click and you knew you were onto something good here?
Sure. So all traders at some point will have these aha moments. And where that comes from is it's a matter of competence and then having repetitions behind there. So like people always come to me and they say, part of my problem is I lack confidence. Well, confidence comes from competence of actually knowing what you're doing and then having that practice time and repetitions behind it. And so what I noticed is once I had the knowledge that I actually needed, the right knowledge, I needed a certain amount of screen time, a certain amount of practice time in front of the computer without blowing up my account, where now all of a sudden you have built up the repetitions and you start to have some real confidence. All of a sudden you start to see things a lot more clearly. Every trader needs that screen time. And the problem that happens with traders is they usually blow up their accounts or they give up before that requisite screen time that each person needs before they get there. And so a big part of a new trader has to be doing whatever they can to extend their life cycle. So if you have $10,000 or $20,000 or, you have this much emotional capital and financial capital, You cannot deplete it till you get to that magic aha moment. So that takes thousands of repetitions. Now, the thing is, you can get those thousands of repetitions in a lot of different ways. It doesn't mean you have to make necessarily thousands of good trades, but there has to be thousands of specific things that you have to do, whether it's on a simulator, whether it's live, whether you're reviewing your trades or sharing them with somebody else. Those are all different repetitions, and you literally need thousands of that before you get to those aha moments where you start to connect them and you're really seeing things clearly. It's like a small child. You ever see a small child when they're discovering new things? They have this like wonderment on their faces, like they're seeing something for the first time. But all of a sudden, right, it's starting to connect. Like when they start to understand something or they get something or they do something right, you ever see that big grin on their face because it's like, wow, they just saw something and it makes sense. Traders are the same way. You got to think of a trader as like, right, a small child, and they're learning something that's very difficult. So you got to have that screen time. And it's sad. It's just most people blow out before they get there. And that comes from, a whole multitude of reasons. And number one, they don't even know they have to get there, right? A lot of people just open their accounts. They come in and they think they're going to make $1 million because they see other people do it. And that's not the case. They don't realize how hard it is or the process and road they're going to have to take to get there, which is often difficult.
Yeah. So how long would you say it took you to get there? So from going as an unprofitable trader to someone who's now making sort of consistent profits, how long did it take you to get there?
Years. It took years. Now, the caveat is this, that I did it by trial and error. I didn't really know what I was doing. So I had years of the trial and error, and that didn't work. But once I met Paul and I was able to put things in very specific systems and methodologies, right? You're having a veteran trader pass down his knowledge of what to do. Then it took me a year of really doing it the right way before I was like, okay, I can do this for a living. I've had all these years of knowledge before that. I've been working with Paul for this last year, and I've really made the inroads. And that took, a good year after I met him to make the move and say, you know what? I've got a future in this. So it's no small road. It's no small road, but it's worth it. Because you think about it, I don't know how old you are. I started this in my teens. And then if you're even in your early 20s or 30s, people live till they're 80 years old, right? 90 years old. You could be doing this for 50, 60 years. So what is, spending a year or two to really nail this down? And if you think about what a good day trader makes, well, it's no different than a doctor or a lawyer. This is a job. So how long does a doctor go to school before he ever makes $1? Years. How long does a lawyer go to school before he ever makes $1? And think about the time investment they put in. It's years. And so this is no different. It's a profession. It's a job, and it's going to take that type of time. Sure, you can get all the knowledge you need in a handful of months, your basic course knowledge and stuff like that. But you still got to go out and practice it. And then you've got to get your screen time in and start building up your expertise. And those things take time.
Yeah, I think you said that really well. Like it's definitely helps to put things in perspective when you think of it that way. So let's talk a little bit about your sort of trading method. So how would you best describe your approach that you've adapted?
Sure. So I trade momentum stocks. I'm a trend trader. So throughout my career, I've tried a lot of different things. I have tried the Warren Buffett thing, the value investing. That was the first thing I got into when I was a kid. But that didn't work. Why? Well, I can't sit on 20% returns a year like Warren Buffett because I only had $500, right? That doesn't work. Even if I had $1,000, it's not going to work. And not to mention you just kind of sitting around a lot. And I didn't find that wasn't really trading. That's more of an investing thing. But that's just what most people are subjected to when they're new because he's the most famous investor of all time. So then I tried from there. I'm like, I got to get into trading. So I tried growth investing. it didn't really work. And I tried this and that. And so I tried all these different methods. And none of them suited my personality. And then I started getting into stocks. Like I read a bunch of the books of like the IBD and William O'Neill's, How to Make Money in Stocks, which is more of a trend following techniques. And that made sense to me. It vibed with, how I think and how I look at things. And so that's where I started to focus, my attention. And from there, I realized, okay, that's probably that type of trend following system is not going to be my particular thing. So I took the basis of what I liked out of it, and, I started to adapt it into my own. So now I'm a day trader, but I trade momentum stocks, stocks that are in trend, and stocks that are in play. And I'll trade anything with momentum or anything that's trending, whether it's long or short.
Okay, and is there a difference between, just so we're clear, is there a difference between momentum stocks and stocks that are trending?
Yes. So, stocks that are trending, trending stocks are stocks that have been in a trend for, sometimes months to years, so on and so forth, and so I like to use those for like swing trading. Momentum trading is you'll trade anything, and it could be a trending stock that's coming out of a pattern on a swing trade basis, or it could be a stock that's in play, a stock that has some type of PR out, earnings out, and is exhibiting a momentum burst.
Okay, so in that case, are there any particular types of news and sort of PR events that you like to trade around in particular?
Yeah, so like, for example, when earnings season comes out, earnings breakouts are really the most powerful thing I have seen in trading. When you get a stock, and you always have to have a good daily chart. A good daily chart is the absolute necessity, because without a bigger picture pattern, they don't work as well. So you get a really, really good daily chart. And then you get a stock that has some type of earnings surprise. A surprise is always great, because what that causes people to do is you have to reevaluate the stock. When a surprise means it's out of left field. So what happens is that stock has to be reevaluated. And there's a rush of people that come into these stocks as they're trying to figure out what it all means, this earnings. And so you get this period of price discovery of people trying to figure out what that earnings mean, what that stock is worth. And so these stocks can make these explosive moves while all of this is happening. Now, the good thing is when you're trading these type of stocks, because it's got a fundamental catalyst like in earnings, you have this intensive amount of volume that comes in, that high relative volume. And because it's got that near-term catalyst, your technical patterns will work much better and much cleaner because you're marrying both. You've got that great daily chart, you've got that earnings surprise, and now the different techniques and tactics that you use to enter stocks intraday will work much cleaner, and you're going to have these stocks, they will move independent to what's going on in the market. So, for example, if you just say you go through your scans tonight, okay, I go through my scans and I find 10 stocks I like for tomorrow just based on technical patterns. Well, those technical patterns may or may not work depending on a lot of what happens with the market, right? The market takes a dump tomorrow. A lot of the stocks that you looked at for longs based on just pure technicals, they're probably going to dump with the market, right? The market takes up or down 75% of the stocks with it. That's just always going to be the case. Stocks that are in play that have a PR or earnings breakout, they will have order flow that moves independent to the market because they have that near-term catalyst. And so now, whether the market's up or down, it's chopping around, doesn't matter. Those stocks are going to move, and the chart patterns you trade within them are going to move a lot cleaner, and that makes these things hot.
Okay, that's really good. Thanks for really breaking that down for us, Kunal.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
I often hear you speak about having a go-to setup. So maybe run us through what one of your go-to setups might actually look like.
You bet. So when I talk about go-to setups, guys, what I mean by this is that in trading, you have this inherent need to have a lot of knowledge. Everybody I run into, they want a lot of knowledge. They want to learn about swing trading, day trading, options, futures. They read this book, that book, and it's just this hodgepodge mess of stuff. In trading, being a generalist, having a very solid understanding of a lot of different facets of trading will not make you money. In trading, you have to be the best at something because you are fighting and playing against the smartest people in the world. To be a master of one or two things is a lot more profitable than having knowledge of 20 or 30 things. Now, when you have knowledge of a bunch of things, it makes you feel smart because when you're in a discussion with people, you can talk about anything, right? You got all this knowledge. You're the man. It makes you feel smart. It satisfies your intellectual curiosity, but it doesn't make any money. In trading, you have to be the master of one or two things. And that means that you have to know every single thing about one setup or one pattern, down to the microscopic detail. And when you can do that, at any given moment, when you see that pattern, no matter what market conditions or variables are surrounding it, you know how to extract money out of that thing. And that is very powerful because then when you wake up in the morning, you know, if I see this, I can make money. And that's a powerful thing. It will give you confidence, but it also takes a lot of the thinking out of the trading. See, trading is very emotional. Where people really lose is the mental mistakes. Well, when you have mastery over something and you down to microscopic detail, it takes a lot of the thinking out of the trade, right? Because you've covered all your angles. You know everything about this. And so that's what I believe in, having go-to setups, and so over the years, because I've been doing this now a long time, I have a lot of setups that I have a mastery over. But for my students, I always have them focus on a couple. And then as they nail those down and make money, let's add more to it. Let's add more to it. So for me, for example, I've been talking about these PR earnings breakouts, stocks that are in play. So like, for example, we've been trading this stock PTBI really for the last 5-6 days, and so the stock was at $3. Stock's been sitting around for $3. Some news comes out one day that it has been, I forgot who, George Soros has made an investment into this company. So the stock gaps up 50% the next day and it to $4.50. And during that day, it runs to $7.50. So this stock has that fundamental catalyst. It had a breakout chart, and then it had huge volume come in. And so we're day trading this thing based on, that big picture thesis and the setup. Now, what will happen is as this stock runs, after a few days, if it gets so extended, we'll actually take it and short it the other way. So once it's in play, that it has a chance to really have a huge move. And then if that gets too extended, we can take it back the other way and short it. And so, we played this thing long till almost $11 back and forth as it's going. And then once it got really extended, we've been shorting this thing all the way back down and then so on and so forth. A stock like this, once it's in play, it may be in play for a few weeks. And so, you keep it on your radar every day.
Okay, cool. No, that's really good. So still on the topic of go-to setups, is this something that you perhaps develop over time? Because I'm thinking like someone who is new to trading and still not making regular profits, how are they going to know what is the right go-to setup for them? Or like I mentioned, is this something you discover with time?
So, if you discover with time, you may not last long enough to actually get there. You know what I mean? Because you may take on too many losses trying to figure it out. It's important when you're starting to start narrowing it down. And so part of being a trader is understanding your personality and what makes you comfortable, uncomfortable. Like, for example, in my class, I may teach 30 setups. But some of those setups are not going to fit everybody because they have jobs or they have this. They may not be able to do certain types of things. And certain things just make certain people uncomfortable. Like counter trend trading may fit some people and it makes some people very, very nervous. And so finding out your risk tolerance, what fits your personality is huge. And then there'll be setups within there that kind of fit that. And that's where you want to start honing in, because if you trade something that makes you uncomfortable, you're not going to trade it well, right? So that can't be your go-to setup. So obviously you're crossing one off the board. There's going to be stuff that you just naturally vibe with. And that's where your first focus is going to start being, because people trade, their personalities. You've got to find a style that fits your personality. I'm a momentum person. I'm an excitable person. So trading momentum stocks fits me. For other people, when I talk to some of my students and they're trading these wild, wild stocks, and I say, why'd you make this mistake or that mistake? They said, man, Cadell, the stock was moving so fast, I froze. I said, hey, that happens, but this is probably the type of stock you don't want to trade. We need to find something that's more steady for you. And it doesn't mean you're going to make less money or more money, because if you find something that you vibe with, that you can trade, you're going to make money regardless. Nothing in trading makes you more money or less money. There's no one setup that makes the most money. It's whatever you trade the best that's going to make you the best money.
Yeah, that's very well said. So bring this back to how you trade. Talk to us about how you protect your capital and your rules around risk management. You often speak about how you have sort of max daily losses and that type of thing. So give us some insight into how you effectively manage your risk trading.
So that's a great question. So there's a couple things that happen. When I've thought about risk over my, over the years of my life, managing your risk, like cutting yourself off. So the common trading theme is, if you're not feeling it, walk away. If you're not feeling it, walk away. If you take X amount of losses, walk away. if you're not trading well, walk away. Well, I have this inherent ego of myself that doesn't allow me to walk away. Like I don't have that kind of control. And so for years, I tried to teach myself that type of control, and rehabilitate myself. But I'm just a wild man. And so it's hard to tame myself in that manner, And also when I do that, it takes away my strength, which is that I'm a wild, aggressive man sometimes. And that's where I get my energy. So rather than trying to, psychologically repair my brain and teach myself to walk away, what I sat there and thought about was, why don't we put in a mechanical structure that just says, hey, when I start exhibiting XYZ behaviors, my platform is shut off. And so for me, I put a max loss on my trading account. So I know, okay, if I lose $2,000 in a day, that's not a big deal to me. That's just that's the price you pay to be a trader, and so $3,000, $4,000, whatever it may be. So if I'm just in my normal mode, for example, my max loss is $2,000. So what happens as soon as I hit $2,000 in loss, there's basically a countdown for me to liquidate my positions or get under $2,000. And if I stay over, then I just can't trade the rest of the day. Because there's very rarely am I going to go. So I have hard statistics that say when I'm down 2,000 and I keep trading, it's just going to go to 3, and then it's going to go to 4. It just gets worse and worse. Maybe 1 out of 10 times I'll make the comeback. I'm just that type of trader. So it's better to just cut myself off and come back fresh the next day. And so I put in this type of mechanical loss to keep myself out of trouble, because that's how I lost all my accounts when I was a new trader as, a young man, which is I'd build up my account and then I'd lose it all in a few days. So I have that risk management problem, right? I did that for years. I build up my account and I lose it in a few days. So instead, why not say, okay, I have $100,000 or $50,000. I'm going to give myself a max loss. And so if I lose, I'm going to lose 1/10 of, if I max loss, I'm going to lose 1/20th of my account or 1/50th of my account or whatever you want it to be. But that gives you the opportunity to fight another day. And that's the name of the game, because you're not going to lose 50 days in a row or 30 days in a row. I mean, if you do, you're right, you probably deserve to lose your account. That's not likely for a professional trader. You're going to lose once a week or twice a week. And so that once or twice you lose, you want to make sure that it's just a drop in the bucket compared to what your normal profits are.
Okay, awesome. So let's say you crush it. You have a good profit on your side within the first few hours of the morning. How do you treat this to ensure you don't wind up donating your gains back to the market? Do you knock off at lunchtime and cut the day short, or what do you do here? How do you play this?
So there's a couple different parameters of thought in something like this. Most people will just say walk away. Just leave for the day. You had a good day, so you don't give it back. I'm not under the belief that that's the case, because if you're actually seeing the market well, those are the days you want to push it. You want to push it as long as you're seeing the market well and you're not just starting to gamble, you're actually doing good trades. It's not over trading if you're winning, right? It's over trading when you're trading your P&L, you're making gamble trades, you're trying to win your money back. But when you're winning and taking sound setups, it ain't over trading if you're winning. So you got to keep going. Now, the problem is, at some point, the human brain can only make so many good decisions. What will happen is, as you're winning, if you lose once, you may shrug it off. If you lose twice, now all of a sudden you're going to want to get back to where you were. So if you had 5,000 profit and you lost 1,000, it's going to feel like you're losing for the day, even though you're up 4,000 mentally. You're going to want to get back to the 5. You're going to sit there and say, oh my gosh, I'm a good person. I'm not a gambler. If I can just get back to 5, I'll stop trading. So there's what we do is we have a give back rule. So for me, say I'm at $2,000 in gain. If I give back half my gains, I'm automatically cut off. That way I have some leeway to keep pushing it if I'm actually seeing the market well. But if it does turn and I get in that slippery slope of starting to try to make my money back because I had a couple losses, I'm just out flat when I give back 50%.
Right, that makes sense. So let's flip this to sort of the opposite end of the spectrum. Let's say you miss a few trades that you intended to get on sort of earlier in the day and they run away from you, you miss out. What's going on in your head when this happens, and what conscious decisions are you making to ensure you sort of don't do anything irrational? Because this one thing can really sort of mess you up alone. You know, that fear of missing out.
You talk about the FOMO. Okay, so I do experience FOMO a lot too. And everybody does. Because if you do your homework every day and you actually miss out on some plays, I mean, you feel like crap because, you just did all this homework and you missed the easy play. But you've seen everybody else make money and you're not making money. And that sucks too. So like for me, the fear of missing out is actually more powerful than even taking losses. I don't mind losing $1,000 or $2,000, but I hate seeing stocks just explode without me even in them. It's a recipe for disaster. So, we have just a thing that we always say in the chat room, you chase, you die. So when you get FOMO and you just buy, right? I always have the mantra, you chase, you die, you chase, you die. We always just say it. And so you just kind of have to condition yourself. Like, that if you chase it, you're dead man. Now, the thing that you have to remember with momentum stocks and stocks that explode, they will always give you multiple entries during the day. So just because you missed the first entry doesn't mean anything, because that first entry, that first explosion, at least it got it on the radar for you. Now, the secondary plays will often have less risk and be easier to define and have just as much upside. And so you have to condition your brain to understand, like, hey, I may have missed it, but that doesn't matter because now it's on my radar. And I'm going to, when I get that low risk, high probability entry, the secondary play can be just as powerful as the first one. And the third or fourth ones may be just as powerful too. And if not, like I know with real momentum stocks, when you get the super hot ones, there's always that 1 or 2 p.m. breakout, towards the end of the day too. So I may miss all the setups that it has in the morning, but I'll be watching it for that 2 p.m. breakout. So you got to condition your mind. Okay, I miss one. There will be a next one. We always say on to the next one, on to the next one. And that's so true because that stock will give you more opportunities. The market is a opportunity generating mechanism. It will give you endless amounts of opportunity in the week. You just got to go out and get a few of them and you have made some serious money. So you miss one, so what? No big deal. On to the next one. Each stock is going to give you multiple entries throughout the day.
Yeah, on to the next one. I like it. It's so true as well. This here, I know it's a big one for you, and that is having a true passion for trading. But even more than that, having the right motivations to actually trade in the beginning. But do you mind explaining why it is totally crucial to have a passion for trading? And maybe if you could share with us an example of what the right and wrong motivations to trade could be?
Sure. So they have a saying, right? Skills are cheap. Passion is priceless. Skills are cheap. Passion is priceless. If you're going to get into anything for the money, there's a good shot that you won't be there at the end to get through the trials and tribulations. To be truly great, there is a cost. As people, we were put here to be great. We were put here to be successful. Everybody has it in them, but it comes at a cost. And so if you don't have the passion for this, you will not be there for the ups and downs, the account blow-ups, the amount of screen time you need to put in, the homework, the barking crazy Indian teacher telling you that you're doing everything wrong. You're not going to be able to withstand that, okay? because if you don't have the passion, you're going to give up at the first sign of trouble. In trading, in business, in anything, to be the best, there's a long, rocky road. And so you got to have the passion for it, because you're just not going to be there if you don't. So I always tell my students, in class, I teach them about not just stocks, but about business and being the best you can, because guess what? It may not be this where you make your money, but everybody has a talent. We were meant to be great. We were meant to be special. Everybody has a talent, and you got to go out and find it. Aaron, you can make $1 million doing almost anything, right? People are inventing shit all the time. People are doing stuff all the time. You can make great money doing almost anything, but you have to be one of the best at it. And so the only way you're going to get there is your passion. So don't do trading for the money, because if you want to make money, there are millions of things you can do. You got to find out what you're good at, where your passion is, and that's where you're going to make the money, and you're going to enjoy it and be able to actually make it past that rocky road, because nobody becomes rich in 1 or 2 years. It's a misnomer. People are lying to you when they say it. It takes years and years and years before you really make big, big money. And so how can you do something for that many years if you're miserable? It's probably not going to happen. There's something out there for you, and you got to find it and then become the best at it. But to be the best takes a lot of work, and it comes at a cost, right? To be great always comes at a cost. You look at somebody like me, I've worked so hard for so long, but you can't date. You can't do stuff. You're going to miss weddings and birthday parties and Friday nights outs and date nights and all of these things, because you're in the lab and you're working and you're grinding and you're pushing, and it comes at a cost. Of course, at the end of the day, it's all worth it. But for many of years, right, you're always wondering, like, holy crap, did I just give up all my 20s working? Well, I did, but it was worth it. But it was because I had the passion to do this. I've always wanted to do this. This was my dream. I had a desk job. So because I was so bad at trading for so many years, I had to get a desk job. And I was working, and then I was studying at night, and then trading and juggling my job and all of this stuff. And this was all I wanted to do. This was my passion. And I was obsessed with it. I had to do it. But I don't think that would have happened if I wanted to make money, inventing something or doing something else. I just wouldn't have been able to pull it off because the hours were too long and the cost was too great.
Yeah, that's very well said. I appreciate you sort of really going into that, Kunal. From what you've seen teaching others how to trade, what would you say are some of the key characteristic traits that are common amongst the ones who are most successful, sort of beyond the fact that they've obviously got passion for it and they're trading for the right motivations?
So the thing that I've noticed from the really, really successful students is the resiliency. So I look at like some of my best traders like Skip Rick and Mary Beth and Chris Zielinski and some of these guys, and they're all, because I know them personally, they are all actually of very different levels of intellect in terms of, Chris is like very, very smart, analytical. Mary Beth is not like that, but she's very smart with her intuition. She's got a high emotional IQ. Chris has a high IQ. Skip Rick is just a genius. There's all this different stuff. And so I think that the intellect is probably, it doesn't matter. You have to have a base level of intellect to be a trader, but anything above there is just icing on the cake. It's not needed. The resiliency is what it really comes down to, because all of them, when they start, they're going to be really, really excited. So like I have a class starting in a couple weeks. There's going to be 50 students, 100 students. They're all going to be really, really pumped because they just spent some money. They see me and they're going to think I'm going to take this class and make a bunch of money. Now what happens is as class starts, I'm telling them how hard it is and I'm giving them all this information. They're going to be like, oh shit, this is going to be fucking hard. And so Now, all of a sudden, you'll start to see some people drop off once they realize it's not an icing in the cake. Then what's going to happen is you got this subset of people that kind of make it through class. They do their homework, their quizzes, whatever, and they're going to now try to do this live on a simulator. And they're taking their book knowledge and they're seeing it live for the first time. Everybody's a hot mess those first few weeks. Nobody's good because you're doing something totally different than going to class at night. They're all going to stink. And so you stink for a few weeks. Do you get better every day, or do you kind of get frustrated and give up, right? That's just always a telltale sign. And so then you have that. Then from there, you're going to go live. And so going live trading is completely different than simulating. Simulating will tell you whether you understand trading strategy and can see the patterns. But trading means you have to take that, but then you have the emotional part of, having your hopes and dreams and your hard-earned money on the line. It's a whole different thing. Well, when you start off trading, whether you start off good or bad, at some point that first trading account, you're going to go into some really dark places, some real big slumps. Everybody goes through it. So how do you handle that? How do you make the comeback? The guys that I've seen, they're very, very resilient. They blow up their accounts. Mary Beth took $10,000, turned it into $50,000. She got to $80,000. She got stuck in a halt. One of the stocks she was in, she got stuck in a halt. She lost half her account. Then she did some stuff. She lost some whole money. She blew up one of her accounts. So, she was just at the pinnacle. I mean, for a young woman to have so much money and it all be gone is a very difficult thing to stomach, because you're thinking, oh my gosh, I just blew all this money. There's so many emotions that come into play. So what happens, right? Can you pick yourself off the table? A lot of people just give up. And so having that resiliency is really, really important. And even on your day-to-day basis, we have statistics that we track at our hedge fund that usually when people lose their first 2 or 3 trades in the morning, it always ends up being an endless cycle. They lose the rest of the day. Very few people can lose in the morning. Like today, I made $5,000. My first 4 trades were duds. But I'm a resilient person. I didn't let it shake me. I kept doing the exact same thing that I needed to do, making the right moves and the right decisions, knowing that the numbers would turn out for me in the end. And if they don't, so what? That's where it really comes in, is that people will give up before they really make it. And it's a sad thing to see, and it happens all the time. Some of the people that have so much talent, when they realize how tough it's going to be, or they've been knocked down a couple times, they just can't lift themselves off the ground. They think they can, right? Everybody likes to think they can. Everybody thinks of themselves as a winner. Everybody thinks of themselves as a hard worker. Everybody thinks of themselves as tough. But when it really comes down to it, can you actually do it? You find out that very few people are like that. But the ones that make it, they're very resilient, because they're all going to go, all traders are going to be faced with either blowing up their account or getting damn well close, and they've got a decision to make. Do I change? Do I get better? Do I reach out for help and make something happen? Or do I give up and stay the same? Do I stay who I am and keep making the same mistakes? You find that most people take the easy road.
Yeah, that's on point. So as traders, we all know that we are never ever going to be right all the time, but we need to be mindful not to use that as a cop-out also, and actually recognize that we do make bad decisions from time to time. So what are some of the main reasons that you find lead us into making bad decisions?
So that comes from a few different things. I learned this from Dr. Andrew Miniker, who's a trading psychologist. He's done some work for some of our students in our classes, some webinars. And he told me something when I was talking to him. He said, at some point you're going to know everything there is to know about chart patterns, and it's going to mean nothing. I said, whoa, what do you mean? That's what I teach. He said, Canal, when you step up to the plate, he's like, you are not trading chart patterns. You are trading your hopes and dreams, right? The stock market can give you that, and that's what you're trading. And so when you put it like that, it becomes a very, very difficult thing because you're not just seeing a stock, right? You are seeing your hopes and dreams, your future. People want to take care of their kids and their families and do good things. You know, people are inherently like that. And so when you start trading your hopes and dreams, things can fall apart and it becomes very, very tough. And that's where a lot of people get into a big mess. You know, as traders, Aaron, our biggest advantage against the computers and the funds and everybody is, as retail traders, we have the ability and the opportunity to be opportunistic. We only need so many good trades in a week or a day, right? We have the ability to be opportunistic and wait for that perfect moment. We don't always have to be in the market. We don't have to do anything. But when you lose that ability to be opportunistic because you need the market to do something, because you got to pay your rent, or you got to pay for your kid's thing, or you got to do this. As soon as you need the market or the stock to do something and you're forcing yourself on it, then you've lost that ability and opportunity to be opportunistic, to lie in the weeds and wait for the right moment. And that's when it all falls apart. You know, that's when it becomes huge. So in the beginning, you know, if you think you're just going to trade for income, it's going to be too hard, right? It's always best to learn trading while you have your job, because if you're doing this and you got to make your mortgage payment the next day and you need a stock to do something, it's never going to do it.
Yeah, that's awesome. So everything we've discussed so far has pretty much been based around what goes on inside of sort of market hours. Let's talk about after hours for a minute, because trading can be pretty intense and requires a ton of focus. I mean, especially if you're trading intraday. So I'm keen to know, is there anything you do outside of market hours to sort of recollect yourself, de-stress, and make sure you're, you know, good and ready for the following day?
For me, I'm always working. So, I mean, this is a 24/7 thing. As traders, the one thing you probably all have to do, almost every good trader I know is in pretty good shape. You very rarely these days see any fatty traders. So you're going to have to go out and get your pump on. You know, that's for sure. But, you know, after that, you're back to the grind. I mean, this is a full-time job. It's no different than anything else. You can only de-stress so much. You know, for me, I make sure I'm always by the beach. I find that, you know, being by the ocean is probably really good for me. So I live on the beach. I vacation at the beach. Wherever I go, I trade with the view of ocean, beach, you know, so on and so forth. That keeps me in a good perspective. Like, holy crap, you know, I'm a really lucky guy. But, you know, other than that, I'm always on the attack. And, you know, one of the things, Aaron, always remembered this too for you guys is everybody has their own internal problems or whatever, but whoever you are, it will manifest in your trading. So that's what you have to work on. So for example, Aaron, if you're an anxious person in general, you're going to be an anxious trader. And if you are a habitually late person, that will show up in your trading. And so all those things that are happening, if you have money problems, girl problems, whatever, those type of things, they manifest in your trading. So oftentimes, if you're finding that you have certain things that keep showing up in your trading, you got to go straight to the root of that and carve that out before you can really fix what's going on in your trading. So like always remember that when you're thinking about recharging and you're looking at your trades and say, boy, I really fucked up today, you got to go back to the real root of the problem. Very rarely is it because of trading strategy. Everybody knows how to draw a silly flag pattern. I mean, right? Everybody knows what it looks like. Everybody knows what to do. Yet, maybe 1% of people trade them successfully.
Yeah, that's such a valid point. So thanks for bringing that up, Kunal. And again, this has been awesome and really incredible. So thank you so much for coming on. I really appreciate all your answers and going into so much detail. It's been really good.
My man. Thank you for having me. Appreciate it.
No, my pleasure. So before you go, do you want to share with listeners where they can connect with you and find out more about Bulls on Wall Street?
You bet. So I'm the CEO, head janitor of bullsonwallstreet.com. I've had this website since 2008. We run trading boot camps every other month. I have a 60-day class, that takes people from A to Z. We have 1 month of coursework. Then we put our students on simulators, homework, quizzes. We have them do business plans, the works. It's a 360-degree program. My personal belief, after seeing and talking to thousands of traders, over my career, you cannot learn trading from a 2-day seminar or some DVDs. You need a mentor, a coach, a community. We put all our students in a community where they work together. You need all of that to really give yourself a shot. And even then, trading's a tough thing. The odds are stacked against you because of many of the things that we talked about today. But having that type of program is your best shot to really take in everything you need to, including the support and mentorship that you need.
Okay, so that's bullsonwallstreet.com, and you're on Twitter?
Yes, Kunal00, Kunal 00.
Sweet. All right, we'll put those links in the show notes. And again, Kunal, absolute pleasure speaking with you. Take care, man, and let's talk soon.
My man, take care.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
I just want to point out that your book, The Art and Science of Technical Analysis, was also strongly recommended as a must-read by Lance Beggs, who was an awesome guest on, I think it was episode number 13. So,
thank you, yes.
Yeah, all right. Well, this has been incredible speaking with you, Adam. And so, again, thanks so much for coming on. So take care, and let's talk soon.
Thanks for having me. A lot of fun.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade. Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Okay, and we're back for episode 22. Hope you've all been having an awesome week, and as always, thanks a lot for tuning in. This week, I have great pleasure in saying my guest on the show is Mike Bellafiore. Mike is the co-founder of SMB Capital, a proprietary trading firm in New York City, as well as the co-founder of SMB University, which is the arm for trader education. He's also the author of 2 very popular trading books, One Good Trade and The Playbook. Additionally, Mike is a regular contributor to Yahoo Finance and often appears on CNBC's Fast Money, CNN Money, Bloomberg, and Fox Business. But even with all of this going on, Mike is still a very active and very successful trader. During our interview, Mike delivers some great insight about traders often confusing psychology for a lack of edge, and an overview for one of his favorite setups, which has been labeled the money trade. Plus, he shares the development program new traders go through when joining SMB Capital and a few top-level pointers on how to achieve a sustainable trading style. And I just want to point out, this interview was recorded on the 20th of May, 2015, and the only reason I say this is because Mike mentions a few market events during this interview. Alright guys, I'm your host Aaron Fifield, this is Chat with Traders, and here is this week's guest, Mike Bellafiore. Alright, hey Mike, how are you?
Good, thanks Aaron.
It's awesome to have you on, so how's trading been for you this week?
Good. We had a little bit of some fun in our markets with Yahoo and Baba at the end of the day, particularly with Yahoo, where somebody from the IRS spoke about some changes that they potentially may be making, and Yahoo went down a good 7% in 15 minutes or less, which is fun. I don't think everyone around the world gets to see markets move like that, but one of our big cap stocks, certainly one that lots of people own, just took a little bit of a dive, and we had some fun playing that.
Yeah, awesome. That's a pretty big move. So, look, Mike, I'm thrilled to have you on the podcast. So again, thanks so much for coming on. I really do appreciate it. And with your answers, feel free to go into as much depth as you like. I mean, it's impossible to talk too much on this podcast, and we're just keen to hear anything you're willing to share with us. So let's get this started by sort of taking us right back before the days of SMB, and tell us where it all began for you and how you discovered trading.
So I was in law school, and I had an epiphany that I did not want to be a lawyer, and I don't mean to be disrespectful at all about the law or lawyers. I actually have a lot of respect for them, and many of them are my really good friends. I just recognized that, A, I didn't want to be a lawyer. I was in law school, and B, I was going to be probably a pretty bad lawyer if it's not what I wanted to do. And so my third year of law school, I started looking around, thinking about some other things that I might do. And one night, by chance, I took a train into the city to visit some friends, 2 of whom were electronic trading. They were day trading. And I don't like to use that word day trading, and maybe we'll talk about that a little bit later, but they were short-term trading. And one of them was my best friend from home, Steve Spencer, and the other was his roommate from Wharton, Jared, who actually are both my partners to this day at SMB. and the two of them cornered me at a birthday party for Jared and told me what they were doing and how I would make north of $180,000 real fast, and that each day would be fun and new and interesting. And that sounded pretty neat to me. So I'm not one of those people who has wanted to be a trader since the age of 8. I think my partner, Steve Spencer, is one of those people. But I was just one of those people that kind of was looking for something interesting to do and had some friends that were doing it, and was lucky enough to have some good friends point me in the right direction.
Okay, excellent. So take us through your learning process of how you actually learned to trade from that point onwards.
So the way it worked was you came into the firm, and for 5 days you kind of learned the trading system. So I started working at a firm, and that firm is still in existence. It's in a derivative form, meaning it's much smaller than it was, but it's still a pretty big firm in terms of intraday trading. And the way it worked is you sat next to an experienced trader. You learned how to use the software by trading on a demo for 5 days, and then they turned you on and you traded live. And so I didn't know what I was doing. And I think it was sort of trial by fire. There certainly wasn't an organized training program that we have at SMB. There certainly wasn't there weren't organized mentoring sessions that we provide for our new traders here. There certainly wasn't coaching arrangements that are structured as we have at SMB here today. This was the beginning of short-term trading. I was at a firm that was busting the doors down, competing with Goldman Sachs and Morgan Stanley and Lehman and all of the people that had a monopoly on day trading. And, as such, they were growing really fast and trying to figure it out on the fly, but had assembled a bunch of incredibly talented people who were crushing it in markets and competing against tier one banks, doing what essentially those tier one banks had a monopoly to do for decades. And they were doing the best they could. So I started working for a firm, and the way that it worked was you wanted to make enough money, save enough money so that you could trade your own money. We called it trading prime. That was what it was called. And so I started for the firm, and I made anywhere between 10 and 30% of my P&L. And when you had accumulated about $250,000 of profits, you could trade your own account. We borrowed another $250,000 from a third party and started trading with, essentially $500,000 with our own accounts. And so after about 18 months, I had saved enough money, made enough money to be able to do that, and traded my own account for about close to a decade after that, before I started SMB.
Okay, very cool. And I believe somewhere in that time frame you were taught by who you've called one of the 50 best day traders of all time. If it wasn't for his training, how do you think that would have changed the level of success that you've been able to reach today?
So one of the things we do at SMB that's very purposeful is we have something we call team trading. We think of the first year very systematically and in a very structured way. For the first 5 weeks, it's just learning and trading on a demo. And then you graduate towards trader development. For the next 6 to 8 months, you are trying different types of setups. You are trading live. You're keeping a journal. You're crunching your statistics for trades you're trading well and trades you're not trading well. You are being mentored by myself and by our floor manager. You are developing your playbook. You're developing your business. You are trying to figure out what your niche might be as a trader. Are you going to be a scalper? Are you going to be a swing trader? Are you going to be an options trader? Are you going to be an equities trader? Are you going to be a futures trader? Are you going to be a quantitative trader? What's your focus going to be? Essentially, in that first 8 months, you're trying to build your business and catch the attention of a senior trader. So, on our desk, I had the eyes and ears of one of the top 50 great all-time day traders. During that first 8 months, our guys and women are trying to convince a senior trader, to impress a senior trader to work with them one-on-one and get coaching from them one-on-one. And that's really important. That's where people see a lot of success. And I think that this is where trader education, trader mentoring doesn't make good distinctions. There's a very large difference between coaching and mentoring, and there's a very large difference between mentoring and education. And you need all of them, but you definitely need coaching. And coaching is when somebody in real time is watching what you're doing, is giving you feedback, is pushing you, is correcting you. And I can give you a really good example. So, one of our guys who is doing real well and making a lot of progress over the last 3 months was a former Division I college quarterback. And for the first 8 months of his trading was learning, but not necessarily showing progress. And then he interviewed for Team Shark. Shark is one of our better traders. I wrote about him in the playbook. Somebody who certainly is a very, very solid intraday trader, P&L wise, and also in terms of a great leader for younger guys on our desk, and a high performing trader, a real P&L guy, certainly can make north of $50,000 in a month, but also great at review, great at preparation. And Shark interviewed this one young trader and accepted him onto his team, and you can hear the two of them talking during the trading day. I sit across from both of them, and you can hear Shark saying, "If you do that again, I'm going to put you on the demo." And you can hear Shark saying, "If you're going to hold that position all the way through that pullback, that's fine, but then you're going to have to actually add some size up here at these levels." Or Shark will say something like, "If you do that trade 1,000 times, it's not going to work, so don't do that again." The point is that he's giving that trader critical feedback in real time, which is the best time to learn. I mean, there's a reason why coaches pull people out of games. There's a reason why a college basketball coach says to one of his star players, "It's time for you to sit on the bench right now." Because that's how people get better. And so that coaching aspect, which you rightly pointed out and asked me about, is key.
Yeah, no doubt. And just sort of looping back to your sort of journey and when you were coming up as a trader, just reflecting back on that time, even with the mentoring, what were some of the hurdles you had to cross, like things that you really struggled with early on?
Just edge. I think that lots of times people mistake psychology with a lack of edge. And people think, "Oh, there's something wrong with me. There's something wrong with my mind." I think a lot of times just people don't understand their edge and they don't have edge. And, look, if you make a trade and there's no edge in the trade, of course you're going to get upset because you're going to probably lose money. Whereas if you're in a trade where you have edge and you make money, you're not going to necessarily struggle with lots of the psychological issues because you're going to have made money. So I think that edge is hard. And I think people don't even understand how hard it really is. Great traders can barely be right more than 50% of the time and still be legendary traders.
Yeah, I think that's really important to understand. So, like you mentioned, you were sort of independently trading for many years up until you had the idea of starting a prop trading firm. So, what was your motivation behind this?
Stupidity. I mean, I've said this before, that one of the most arrogant, egotistical, ignorant, stupid, ill-informed, selfish things that I ever did in my life was start a prop firm. And it was sort of like I didn't know what I didn't know. And if I would have known it at the time, I would say the things that I just said. And I don't mean that it wasn't a very valuable experience. I just mean it's incredibly difficult to start a prop firm and grow a prop firm. We could talk about this issue for 3 hours, but it's really hard. I mean, I think the hardest thing is that the success of the firm lots of times depends upon you absolutely being right about certain things. And some of those calls are very, very difficult. And if you're wrong, then it's going to affect a lot of people. So it's a hard gig. I mean, it's been fun. I've learned a lot. And I'm glad I did it, but I kind of didn't know what I was getting myself into. I didn't realize how hard it was going to be. It's certainly it's much harder than becoming a good trader ever was.
Okay, sure. So I'd like to ask a few questions around how you sort of personally trade these days. So how would you best describe your actual trading approach?
Sure. So I look for changing fundamentals plays. So what I look for are stocks that today have very different fundamentals than the day before. That those fundamentals are increasingly better or increasingly worse than the day before. So there's a series of news headlines, there's a series of news catalysts that I'm looking for that get me really excited about trading a stock. And I populate my screens. I have 6 screens. I populate my 6 screens with ideas that fit changing fundamentals. And then I dive deeper. So if something is up or down 3% in our US markets and has a news catalyst behind it, like changing fundamentals, then I'm going to get very interested. So a good example of that today is Urban Outfitters. Their margins for this quarter and the quarter going forward are under attack. That's something that's going to get populated on my charts, and I'm going to dive deeper into that. Home Depot today had earnings, and one of the research notes that came out from Cantor was, hey, their earnings were nowhere near as good when you back out a one-time tax advantage. And this is a stock trading near 52-week highs in a really strong market, which is a pattern for profit taking. That's going to be something that's going to go up on one of my charts. Certainly today, at the end of the day, Yahoo was on our radar because the IRS perhaps may be changing rules. I'm not sure if that's the case, actually. I think the market overreacted, but there was fear that the IRS was changing tax statutes, regulations towards their ability to spin off their portion of Alibaba, which caused selling. So that's what I'm looking for. That's how I start my day. And in fact, our younger guys fill out a spreadsheet of stocks that I can't miss. And that spreadsheet is consumed with stocks that have changing fundamentals and with facts where they're diving deeper.
Yeah, so is this similar to the approach you've followed from sort of day one and it's just kind of naturally developed? Or have you tried like a wide variety of approaches and this just happens to be the one that really resonated and stuck with you?
So I've changed my style many times over the years. When I first started trading, I traded more of a basket of stocks and I was more of a relative strength trader. That's how I learned how to trade. I trade tech stocks, I trade semiconductor stocks, and I would look for the ones that were stronger than the marketplace, and I only traded on the long side. Then we hit a patch where I was more of a momentum trader, trading internet stocks. Then 2001 was really a year consumed with breaking news bounce trades. That was pretty much my whole year. And then I was just actually saying this to a trader today who I was coaching, one of the experienced guys who I was coaching in our conference room today. And I was talking about this trader was getting run over by certain stocks that he was trying to fade. And he was having lots of really good days, but he was putting up some really bad numbers. And we were talking about how you have to understand the difference between the stocks that are going to return to the mean and the ones that just aren't and are going to trend for the entire day, and how if you really take too big of a loss and the ones that don't revert to the mean, that you're just going to rip up your whole month. For 3 or 4 years of my trading career, I was a fade trader. For a couple of years, I was more of a short trader. When sort of I was kind of a short momentum trader when we sort of have the almost collapse of our economy. Spent the year trading ETFs. So I've traded a lot of different styles, and now I've gravitated more towards making sure there's a news catalyst behind my idea and being more of a swing trader than when I first started. When I probably watched the tape a little bit more, and I probably traded more actively than I do today.
Okay, sure. So could you take us through maybe one of your favorite setups that you thoroughly enjoy to trade? Like, tell us, what does that look like, and what are some of the things that get you really excited about a trade?
Yeah, so I like for stocks, one of the setups that we really like, we call the money trade. All of the setups that we teach on our desk, we give them names. And so if you come in and you take our training program, towards the end of the first module, we talk about trading setups. And all of them have names. So we're going to trade changing fundamentals plays. We're going to trade second day plays. We're going to trade breaking news plays. We're going to trade high beta technical plays. We're going to trade fade plays. So they all have names. One of the ones that we particularly like, we call the money trade. And that's something with very, very positive changing fundamentals. So you might walk on to a trading floor and there may be a company that announces that for the full year, I'll just do it generally instead of giving a specific, for the full year, they are raising guidance. And they're raising guidance by over 10%. And we're noticing that stock is gapping up 3+% in the pre-market, and we're noticing that its relative volume is particularly good. And then, for the first 45 minutes of the day, we call that price discovery, and the stock kind of chops around, but still finds a way to trade a little bit higher. And then after 10:15, 10:30-ish, it's actually not only holding that gap up, but holding a nice higher consolidation area. And that area to be above VWAP, which is the indicator we really use, for there not to be overhead resistance on our longer term technical levels, for the R-vol to be particularly high, and for us to be able to control our risk on the long side. So sort of playing a gap and go, we call it the money trade. We're getting behind the trend of the news. We're getting behind the trend of the price action. We're not seeing any overhead resistance on our longer term charts. And we know that there's going to be buyers in the short order, 1 to 3 days behind these ideas.
Okay, that's excellent. So thanks a lot for going into that, Mike.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital? Or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with 0 locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
So I'm keen to get a lot deeper into how you sort of teach traders. So let's start from the very beginning. So if someone who has never traded a day in their life, are there any characteristic traits that you can identify as sort of going hand in hand with having what it takes to become a really good trader?
So, yes, and I just would take a step back, and the reason I hesitate is I almost wanted to. I hate when people do this to me because they do it to me all the time. When I ask questions to the people that are teaching, people always change the hypotheticals on me. But maybe since I'm a guest, you'll let me do this. But I wonder if I would change the fundamentals, the hypothetical a little bit to sort of say, I think people should show a passion for trading before they actually start trading seriously. And I think that's a big thing. So, if you haven't read charts, read trading books, read blogs, been interested in markets, and are 28 years old, 35 years old, and all of a sudden wake up and are thinking that you want to trade, that's a little bit unusual in this day and age because we have so much information. There's so much free education. There's so much more an ability to practice whatever our specialty is these days because of the internet and Twitter and Facebook, that if you're not doing it in some way already, if you haven't discovered your real interest in it, I wonder if you really do have an interest in it. So I hope that's okay if I change it a little bit. So I want to see that. Well, the first question I ask people is, how do I know that you love trading? And I want to see guys saying, well, I'm trading an account, here are the trades I'm making, and can talk to me about particular setups. They can talk to me about that Yahoo trade. They can talk to me about that Baba trade. They can tell me what they're thinking about Facebook. They can tell me where they think the SPYs are going. They can tell me where they think the VIX is going to struggle with. They can tell me what we should see during the summer. They can talk to me about what would happen to the markets if interest rates go up. They can speak my language. They can talk to me like I'm a trader. Those are the people I want to be around, is people that are interested in markets. And if you're not reading about markets and thinking about markets and working on your game, this isn't probably something that you should be doing. It's too competitive. I'm looking at my desk right now at 6:30 Eastern time, and 40% of the guys on my desk are still here. And so, they're working on back testing algorithmic trading ideas, and they're preparing for the next day. How many desks are filled with guys like that? So, if you just can't sort of sit there, and I equate it to my background. I was a high level athlete, and I just know that no one had to tell me to practice. No one had to tell me to watch the Yankees on TV. No one had to tell me to read books about Tom Seaver pitching. I love doing it. That's what I wanted to do.
Yeah, that's really important. So, Mike, could you give us an overview of what the learning and training process looks like for a new trader when they come into your firm? What's the process they go through and follow?
Yeah, so great question. So we have 3 parts to our training program. We have the foundation, the S&B Foundation. So for 5 weeks, you are learning. You're trading on a demo. You're going to mentoring meetings. You are watching videos that are a part of our training program. There's different types of mentoring sessions. One of them we're going over specific setups. Another one we're just talking about stock selection. Another one we're talking about the different universe of stocks that you should be thinking about. Another one is an introduction into different types of setups that senior guys are trading. So you're just being immersed in a whole bunch of knowledge that you're trying to grab hold of. And then the next 6 to 8 months, we call that trader development. And during that part, you're trading for the firm, you're trading firm capital. We're a P&L shop. We're exclusively a P&L shop. So we back all the traders. We take all the risk on. We provide all the technology. So you're experimenting. You are each day playing around with different types of setups. So I talked about the money trade. We also have the Raj Mahal trade. We have lots of different types of trades. So we are showing you these types of trades that have edge and that are worth study, and you're trying them in real time. And some of them you're going to like, and some of them you're not going to like, and that's fine. There's plenty of people. Lots of times when I go in and talk to our guys about particular setups, and we were going over a play in GMCR recently during our playbook checkup, which is a mentoring session where we archive a setup we really love, the junior trader presents it, and then I give feedback. And instead of me sitting up in front of the students and saying, this is exactly how you should have traded it, I don't do that. I say, if you are a momentum trader, here is how you want to be thinking about attacking that setup. If you are a swing trader, here is how that's different than being an active momentum trader, and here is how you would want to attack it then. And so I run through, I envision people being different and being different types of traders, and I run through the things they should be thinking about in the same trade on the same day for the same stock. And there are fundamental ways to attack that GMCR play. So, for instance, one of our guys is really aggressive, and he was looking at a particular level in this GMCR at 93.50, and he shorted the stock below 93.50 because it was in our wheelhouse for something we call second day plays. Essentially, if something is really weak on day one after it has earnings and a huge level is put in this case, this was the low from day one. This was an important low from day one. If the next day it gets below that level, we're going to look for follow through, particularly if there's a news catalyst behind it. And there was in this case with GMCR, which was they put out a new product and the new product wasn't any good. And so he's looking at that particular setup, and he shorted that stock below 93.50. And I said, wait a second, you're not wrong, but what kind of trade are you making? And second of all, there's a big level there at 94.21 And if you're going to make that trade at 93.50, you got to make that trade at 94.21 based on the way that you're playing this particular setup. And if you, and I said to him, you have a decision. You can momentum trade it below those two levels, or you can swing it below those two levels. But you got to understand that if you're going to make that trade below 93.50, you had to make that trade below 94.20. And we walked through the different ways you would attack it if you're a momentum trader and if you were a swing trader. So that 6 to 8 month period is trader development, and then you apply for team trading. And so you're sitting in front of a senior trader who's a high-performing trader, and you're convincing them, for them to give up their time during their trading day to coach you, work with you, push you to be better, like Shark does in my example with one of our newer guys. You need to be able to show that you're going to work hard, that you have some edge, that you have some setups that you really like, and that person has to accept you. And if they do, then you work one-on-one and you join a team. And your job is to bring ideas to that team trader and be a sponge and learn and get better. And hopefully one day start your own team.
Yeah, that's excellent. So generally speaking, how long do you expect it to take the newer traders before they start hitting certain targets or certain goals with their trading, where they start to become profitable?
I think you got to give it a year. I have no expectations of anyone in the first 8 months. I think between 8 months and 12 months, we need to start seeing some progress. I'm giving you a general guideline. It doesn't always work like this. Sometimes it's a little bit sooner, sometimes it's a little bit later. But since you asked the question, that's when we want to start seeing a lot of progress, is month 8, 9, 10, 11, 12. And you really should be able to make a little bit of money during those months and be over the learning curve.
Okay, and how would you say that might differ for the traders who are more in the retail space, who probably don't have quite as intensive coaching as what's provided with a prop firm?
So I don't know. I'm not an expert in the retail space. I do. There are some people that I've noticed who are particularly, I think, are probably pretty good helping retail traders. I have not verified that. I'm just saying, as an observer, it's my job. Part of my job is to know who the new best traders are going to be and where they're coming from. And there are some places I see guys taking things very seriously, where people are being taught edge trades really with edge. And some of them reach out to me and talk to me about their ups and their downs. I do notice that even there's one particular group that I think is pretty good, and I'm getting a lot of their students who are reaching out to me. We don't really compete. I mean, they're in the retail space. I'm a P&L prop shop. They're kind of selling them a chat room and a sort of a DVD-ish series. And our main business is to build traders and give them capital and give them technology and show them lots of different ways to trade other than just one. And help them be 7-figure traders. And so I notice that one of the things that's difficult for retail traders is capital. Guys, I've met guys. This is not uncommon. I can tell you in the last 12 months that I've had conversations or have met 8 retail traders who went from $25,000 to above $500,000 to below $200,000. And most of them are saying, why am I going from above $500,000 to below $200,000? And a lot of times it has to do with them just not having learned some of the basics that you might learn at a prop desk, such as managing your risk a little bit better, such as sizing a little bit better, such as understanding what your best trades are and trading them bigger, such as simple things like having an intraday stop loss. You'd be surprised how many people don't have that. So there's, it's like when you play sport, there's basic things that you learn as you're growing up. You have those fundamentals built inside your game. They don't have that. They learned edge, perhaps, but they haven't really honed. That's what I see anyway from my seat. They haven't necessarily honed very, very solid fundamentals. And you can't really become great at anything without those solid fundamentals. You can't really skip over those steps. You may have periods of success, but you're never going to be elite without getting that part really strong. Have you ever seen a really elite athlete that didn't have a really strong core or a really strong base? It's sort of the same thing for trading.
Okay, right. That makes a lot of sense. And you mentioned in there risk management. So what are some of the basic sort of risk management rules that you teach your traders in terms of sort of daily, weekly, maybe monthly loss limits? And on the same note, if a trader has like a good morning and makes a nice profit early in the session, is there a simple risk management rule they can follow to avoid giving back what they've gained later in the day?
Sure. So I think 25% is a good rule to think about as you're trying to build your bank. That works for certain types of traders. It may not work for other types of traders. I like to think of traders in two particular buckets for simplicity and not to make this too complicated. But I think there's probably swing traders and I think there's active traders. And so for swing traders, I think you need to sit down and understand what your best setups are. That's why I wrote the playbook. I wrote the playbook to give people a way to categorize their favorite setups, to understand what they are, to be able to discern the variables of them specifically. If I tap you on the shoulder, Aaron, and I say, what trade are you in? And you tell me you love it, you need to then be able to tell me immediately the variables of the trade and why you loved it. And if you can't do that, that's not particularly a sustaining style as a trader. Lots of people say, I kind of know it when I see it or I feel it. No, you don't. No, you don't. You write down variables and you measure them so that you internalize the setups that you truly are best at. Don't tell me about feeling things. I want to know, based on past research and work and study and statistical verification, that the setup that you're telling me is really going to work, is really going to work. And so in the playbook, I sort of roll out ways to capture your best trades. And then think of it as, if you're a swing trader, risking 2 to 5% on your best setups and building from there. As an intraday trader, I think about risking 30% of your intraday stop loss and building from there. I just had a conversation with a guy today who is an experienced guy who we're trying to bring into the firm. And he was saying to me, I'm not used to trading with a stop loss, an intraday stop loss. And I said to him, I don't really know what you want me to say to you about that, because we're not used to actually having anyone be given capital who doesn't have an intraday stop loss. I can help you to trade within those parameters, but we're not going to be in a situation, and you're never going to be scalable as a trader. You want to think about it. If you can't come up with a system for how much you're going to risk per trade as a swing trader, if you can't, as an intraday trader, come up with a system as to how much you're going to risk per day as an active trader, you can't be scalable. And if you can't be scalable, then why are you actually even in this game? Where are you ever really going to get to? We're not trying to do this so that you can make $50,000 a year. We're trying to get this so you can be as good as you can be. And that means being scalable. And being scalable means that you understand how much you're going to risk per trade, and it's in percentage terms. So I like 2 to 5% for swing traders and 30% for active traders per trade. And I like to think about a 25% give back rule for guys who are just starting out.
Okay, that's excellent. Thanks for sharing that, Mike. Now, just want to touch on psychology and sort of the mental aspect of trading. And you've worked sort of firsthand with Dr. Brett Steenbarger. And for those who are unfamiliar, Dr. Brett is one of probably the most respected sort of authority figures on the topic of trading psychology. So, Mike, what was it like working with him, and what were some of the great psychology lessons or pointers that you picked up from him?
So we're actually having SMB and Dr. Steenbarger are holding an event in New York City for networking, where we're going to have a couple of beers and invite outsiders to come and meet us and meet Dr. Steenbarger in New York City. And so that's actually on our blog. And hopefully, if this gets up before this Thursday, we'll see some of you, unless you're in Australia, and then in that case, we probably won't. But I've been thinking about, one of the things that I notice about Dr. Steenbarger to me is that I don't really consider him to be just a trading coach. I consider him to be a life coach who just happens to teach trading. And one of the first things that you can't help but notice from Dr. Steenbarger, and if you work with him, that can't escape you personally, is just how generous he is. He literally I'll ask him a question, and he'll say to me, give me a call after 9 o'clock, we'll talk about it. And we just were dealing with an issue internally at our firm that I wanted to get right, and we had a 45-minute conversation about something, and I hung up the phone and I said to my wife, that was an incredible conversation. I just can't believe how much I learned in 45 minutes about a topic that I found interesting and I had thought about for a long period of time. And he was just at such a experienced level of thinking that it was just incredibly helpful. So the generosity is just something, and it wears off on you. You feel like after being touched by him that you're going to be more generous to other people. So specifically the things from him that I think are very, very helpful for retail traders and for guys like us are keeping a trading journal. Understanding that if you don't have trading edge, you can have the strongest psychology in the world. That's not going to be particularly helpful. And if you've noticed, he writes a lot about studies and quantitative work of late. I think that you got to sort of be able to understand that as a trader, you really are an elite performer, and that means taking care of yourself, stepping away from the game at times, balancing your day so that you're intaking a lot of information that you need, but also having restful times, treating this as a performance sport and best practices that he's sharing to better perform.
Yeah, well said. All right. Well, this has been unreal, Mike. Your answers have been incredible, and I'm sure we could keep going, but we should probably start to wind this down. So let's roll through just a couple short questions to take us out. Now, one question I always like to ask the guests on the show is, in your mind, what's the top reason why such a large majority of traders never reach the high level of success they initially set out to achieve?
So that's a tough one. I think it depends on what type of trading that they're doing. My answer to that would be they're choosing a type of trading, a product or a time frame that doesn't best fit their personality and their thinking talent. So specifically, if you don't think fast, you're not going to become a really good active trader. You'd be better off being a global macro trader.
Okay, that's great. So, do you have a favorite quote or one final piece of advice you'd like to leave with anyone who is listening?
Sure, and it's the way that I finished my book, The Playbook, and it's the greatest lesson that I've learned from trading and from running a firm over these years, which is you can be better tomorrow than you are today.
That's awesome. I love it. Again, Mike, this has been incredible. So thanks so much for coming on. I really appreciate it. But before you go, can you share with listeners where they can connect with you and find out more about you and SMB Capital?
Sure. Just go to smbu.com and you can find us there. On Twitter, I'm at Mike Bellafiore. My email address is mbellafiore@smbcap.com.
Great. Awesome, Mike. And you've published 2 books, and those are One Good Trade and The Playbook. So could you just give us a brief overview of what each book is about? And is it possible to read them individually, or do we need to read One Good Trade before reading The Playbook?
So One Good Trade has become sort of the go-to book for proprietary traders and for retail traders. If you go to a proprietary desk globally, and I just sort of say this informationally, if you go to a proprietary desk in London, in Australia, in other parts of the United States, at the beginning or at some point, somebody's going to say to you, you should read One Good Trade. And so One Good Trade is a series of do's and don'ts filled with anecdotes of traders that I've trained, some who've made it and some who didn't, who did some silly things or did some really, really great things, have some really best practices for you to copy. So it's the trading principles that you need to grasp filled with stories. It's a very fun read that if you're starting out and you're taking this seriously, at one point somebody's going to recommend to you. And The Playbook, I actually think should be read next. And The Playbook is a reflection on how we built our firm as it's presently constituted. It goes over very, very significant review processes that have helped our traders become high-performing traders. It introduces a series of very different types of traders and characters and their journey, while being topped off with a very specific trading setup that I've mentored them on. And then it gives you a play-by-play chat of that trader who has become successful, sharing a very specific trade, and me giving them critical feedback, showing that trade, walking through that trade. And so it's a deeper dive, it's a serious dive into how you pull out your best trades and archive them and build from them in markets, and gives you a way to build from your success, to find the trades that make the most sense to you, trade them more often, to be a better trader.
Okay, good one. And if pick up a copy of either of those books, I'll place a link in the show notes at chatwithtraders.com/Mike. I'll also include links to the website and you mentioned just before. So, Mike, absolute pleasure speaking with you.
Okay, great. Hey, next time you are in New York City, please stop by. And
no doubt, man, for sure. Thanks, Mike.
Thanks a lot.
Hey, what's up? It's just me. Value, and Mike gave some incredible pointers and quite a bit of detail, which was really /17 lessons. Now, this guide is titled The One Thing I Wish Someone Would Have Told Me Before I Started Trading. So I put this together by reaching out to 17 proven traders and ask them what was that one thing they wish someone would have told them before they ever started. So I got 17 responses. I've collected them together and put them into a free guide, which you can download at chatwithtraders.com/17 lessons. So essentially, I mean, that's 17 of the most valuable lessons from 17 proven traders. It's a great resource. Go there, check it out, and let me know what you think. Shoot me an email. All right, guys, I'll catch you next week, and if I don't speak to you in between, catch up.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Trader. And some people are just going to say, I just don't want to dig that deep. It's just it's too challenging. I'm going to have to look at my psychology or my own belief system. I'm going to have to examine that. Come on, that's nothing to do with trading, but of course. It's everything to do with trading, especially as a discretionary trader, where you're more prone to succumbing to biases, and usually with larger positions. I would say that it's just a matter of digging deep. I have met so many bright people. I work with some incredibly bright people, and I believe in fun. Just like systems can diversify. One strategy, by being uncorrelated, for example, and removing a single point of failure. I like surrounding myself as much as possible with people who are brighter than me or think differently than me, and in this way, I'm getting exposed to to more ideas, more knowledge, more perspectives. And my larger point with that is what I guess. It's a matter of digging deep and constantly exposing yourself to new ways of thinking, and I think that's more than some people really are up for. To me to probably the number one reason. It's overcoming a lot of biases and taking a hard look in the mirror. It can be rough in the early going. And it can be rough later on, but and just as a trader, there are bad periods for any approach, trader, strategy, what have you. But at that point later on, you should be very well prepared for them, and you should know, especially as a quantitative trader. Am I in my risk parameters? Is this drawdown normal? On and on. So. More than you asked for, probably, but I would say the digging deep, if I could put it in two words, that's what's required. And some people are going to leave it at a certain level and not push to be where maybe they could be.
Sure, yeah, those are some really great points. So now, as you mentioned, you're a big fan of reading a good book. So are there sort of maybe one or two books you'd maybe suggest as a good read for upcoming traders? Maybe one that perhaps it isn't even directly, a typical sort of trading book.
Right. Yeah, boy, that's so great. I don't know if I can pick one. Let me just spit out, a few. I thought that Fortune's Formula, it's not a trading book, but I found that to be fascinating and really helped drive me to want to quantify finally. So this is some years ago, but I found that to be excellent. I'm not a trend follower in the classic sense of that first generation trend follower, systematic trader, the turtles and so on. But I found that the book Trend Following by Michael Koval, I found that to be fantastic. So many great anecdotes of the developers, of the actual traders behind the system, so to speak. I thought that was a very well done book. I like that a lot. There are so many. The Physics of Wall Street. That's a fantastic overview for someone who just is interested in the evolution of really quantification largely, and some of the different players from different fields who have come into the field, of trading and so on. I could go on and on, but those come to mind off the top of my head.
Okay, sure. Yeah, those are excellent. So I'll be sure to put a link to those in the show notes. All right, Dave, well, we should probably wrap this up. I mean, I'm sure I could keep going on and on, but your answers have been unreal. So thanks again for going into so much depth with all of your answers. It's been awesome, and I've no doubt listeners are going to take a lot away from this interview.
Aaron, I sincerely appreciate it. It's great talking to you. I hope we can do it again.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey guys, what's up? Welcome back to episode 24 of the Chat with Traders podcast. Thanks so much for tuning in. It's great to have you here. So, on the show this week, my guest is Ivan Hoff, an equities trader of 10 years who tackles the market with a swing trading approach to capture powerful, short-term gainers that may run anywhere between 3 to 10 days. While swing trading is his bread and butter, Ivan also allocates a portion of his capital to position trading when he has a reason to believe that the trend will continue for the longer term. He's also written several books, including The 5 Secrets to Highly Profitable Swing Trading and The Next Apple, which was a collaboration with Howard Lindzen, who is the co-founder and CEO of StockTwits. Plus, Ivan is regularly featured in the Wall Street Journal, Bloomberg, Yahoo Finance, Traders Magazine, and he's also a familiar face amongst the StockTwits community. Now continue listening to learn about Ivan's trading methodology, one of his high probability swing setups, the importance of following industry momentum, and a whole lot more. Hey Ivan, what's up, man? How's your week been?
Oh, it's been really well. How are you, Aaron?
I'm very well. Ivan, thanks so much for coming on the show, man. It's a pleasure to be speaking with you. I'm thrilled to have you on, and again, thank you very much.
Hey, thanks so much for having me.
My pleasure. So, Ivan, if you could, give us the rundown on where you've come from, sort of how you got into trading, and what was it about trading that really appealed to you?
Okay, so I was born in Bulgaria. That's Southeast Europe, just north of Greece and Turkey. And people there and just in Europe in general don't really have that stock market culture ingrained in them. Like most people there invest their money in real estate, their own business, or just they keep their money at the bank where they pay 3-4%. So no one really invests their money or trades in the stock market. There, so I entered the stock market during one of the biggest bull markets in financial history for emerging markets. So whatever happened to Nasdaq in the later 90s pretty much happened to emerging markets in the early to mid 2000s. Percentage-wise, of course. Like I'll give you a quick example. The Bulgarian stock market went up like more than 2,000% between 2002 and 2007. So I opened an account there with my savings, and pretty much at the beginning I wasn't really trading. It was more of a buy and hold approach and just watch my account grow. And then in late 2005. I moved to the States to study, and this is when I opened my first trading account and started to dabble into trading more. Pretty much that's how I started. And at the beginning, of course, the state market was very different than the Bulgarian market. Because of liquidity, of course, the Bulgarian market wasn't liquid at all. It's a really small market, and you can really trade. The U.S. market, it's the biggest market in the world. So pretty much anyone who trades for a living anywhere in the world, you trade the U.S. market, pretty much the U.S. stock market.
Yeah, absolutely. So, what were your early experiences like? I mean, did you hit kind of like some beginner's luck to start off with, or did you, blow up multiple accounts? What were the first couple of years of trading like for you?
Well, I would say that I was really lucky. First growing my account really fast on the Bulgarian stock market, and then moving in the States in 2005, 2006, when it was a really good bull market here too, by the time I moved. And of course, at the beginning, I made all the mistakes that all beginning traders do several times over. Like at the beginning, for example, I did not have an edge. Luckily, I found a few very good financial blogs at the time and I learned a lot from them. I found IBD Investors Business Daily. I was reading the Kirk Report. I was reading StockB. And out of there, I actually developed one of my major setups that I use even today. It's based on post-earnings announcement drift. So pretty much it means that any company that receives favorable market reaction to its earnings reports tend to continue to trend in the same direction for at least several weeks after that gap, up or down. So based on that, I developed my first major setup.
Okay, that's excellent. We might get into that a little bit more a bit later in the interview. But just sort of looking back on that time, you mentioned you made sort of a number of mistakes over a game. What were sort of some of those big mistakes that kind of stood out and you found sort of the most challenging to overcome?
Well, I think one of the biggest one was position sizing. I was I was taking too big positions without really taking into account the capital at risk. This might be really suitable occasionally for someone with a lot more experience, but not for someone that is, just starting out. Trading too big could mean making a lot of money sometimes in a crappy market environment if you pick the right stocks, or it could mean losing a lot of money in an excellent market environment because you happen to pick the one or two stocks that did not move. So this time I used to grow my account like a 30-50% in a month or two during strong uptrends, and then I gave back most of it when the inevitable correction came. So I know everyone makes money in an up trading market, but not everyone keeps that money when the correction comes. So that was a big struggle for me initially, just to learn how to time the market properly, because there is no trading approach or no trading setup has a 100% success rate. So you really have to take into account the right market environment when you need to pounce and make all of your money, and to know when just to step aside or just to use a different setup for that specific market environment.
Yeah, for sure. And I mean, you mentioned there position sizing. So that was sort of one of the biggest things that, you were challenged with. How did you sort of overcome that? I mean, were you maybe taking less trades, or were you just sort of, risking less on per trade, or, how did you overcome that?
Well, I found a much more scientific way to approach position sizing based on capital at risk. So nowadays I risk anywhere between 25 basis points and 100 basis points, which is 1% of my capital per trade, depending on the setup and on the market environment. So I know exactly how much I have at risk every time.
Okay, that's really good. So let's get into a little bit about sort of your actual trading approach that you've sort of adapted and that you're trading today. So if you could, just give us an overview of your approach to the markets.
Sure. So pretty much I'm a swing trader. My holding period is anywhere between 3 to 10 trading days. So why a swing trader? Because I believe there is the 80-20 rule that exists in the market. That most stocks spend in a range, about 80% of their time they spend in a range, and the majority of their move happens in only 15-20% of the trading days. So the purpose of swing trading is just to capture that 15-20% of the time when the stocks are actually moving. So I buy on strength and I sell on strength.
Okay, and would you say that you've sort of been a swing trader since day one, or is this sort of something you've slowly sort of gravitated towards and it's now kind of stuck with you?
No, at the beginning, the first couple of years that I was struggling to find an actual edge. So the first few years I was actually trading only one setup that was based on post-earnings announcement drift. It was a pretty much anticipation setup. When I was looking for stocks that gapped and then consolidated through time, and pretty much I bought that consolidation in expectation of a continuation of that move. And then over time, I added more setups to my portfolio of setups. I started trading breakouts and pullbacks, and I started taking into account factors like industry momentum, float, individual stock momentum.
Okay, sure. And you sort of brought up an interesting point there, was sort of how you just sort of focused on one particular setup for the first couple of years. Do you think that's sort of contributed to the success or the level of success you've been able to reach today by just focusing on one sort of setup while you were sort of learning the ropes?
Absolutely. I think at the beginning, and not only at the beginning, less is more. People have to find just one great setup and learn absolutely everything about it and when to trade it. And then over time, as you really become really good at it, you can start adding, new setups, because, that particular setup that I trade is not good for all market environments. So, for example, it's not good for during market corrections. So over time, you start to add, as you get better and better, you start to add new setups for the different market environments.
Yeah, that's great. That's really excellent. So just before we go any further, what markets are you sort of most active in, and what are you trading? Are you trading sort of stocks, options, ETFs? Like, just tell us a little bit about that.
US equities, that's it. Nowadays, I only trade US stocks.
Okay, sure. As a swing trader, like, what would you say is your primary aim? Like, what opportunities are you aiming to exploit in the market?
What opportunities? So as I said, stocks move in cycles. They spend the majority of their time in a range, and I'm looking to be in those stocks when they're out of that range. So I capitalize on their move. So opportunity cost is a really big thing for me. Any capital that I allocate to one stock, I cannot allocate to another. So for me, it's really important to be in stocks that are actually moving at the time. So I maximize my capital allocation.
Okay, sure. That's really good. So again, just as a swing trader, how connected to the market are you during actual trading hours? Like, do you watch the intraday action, or are you mostly analyzing data after the close each day?
Well, I do both. So some of my signals trigger intraday, so I take them intraday. So during the day, I don't watch every tick, of course. I run a bunch of screens that show up certain results, and if I like the setup, I'll take it intraday.
Okay, excellent. So what are some of the things that you really look for to identify big short-term gainers, like before they actually move? Like what is it that often drives these powerful short-term market moves?
So the single most influential factor for short-term moves is industry momentum. If you're in the right industry, you're very likely to capture a stock that is likely to move a lot. So being in the right industry could be the difference between getting a breakout that will get an immediate follow through, or getting a breakout that is going to fade very quickly. It could be the difference between getting into stock that is going to move 20% in a couple weeks, or getting in a stock that is going to move 5%. So being in the right industry is the single most important thing a trader could do. So I'm really paying attention to the hot industries of the month. Like recently, we've seen huge moves in cybersecurity, in semiconductors, in biotech. So those are the industries that I've been focusing on my capital and attention. And those industries change pretty much every few weeks. So you really need to pay attention to that, to industry momentum.
Okay, so once you identify an industry that's picking up some momentum, how do you sort of drill down on which stocks you're actually going to place trades on?
So the first, from my perspective, the best way to figure out which industries are hot is just to, I run a few screeners that are based on various criteria, on momentum on various timescales, and based on if certain industry has a large numbers of setups that are showing up, this is the industry that I need to focus. And of course, I'll give a priority to recent IPOs, because recent IPOs they have a very small float. Like most companies, initially sell only between 7 and 15% of their shares outstanding to the market. So during the first 6 months, they could move a lot because of their small float. I mean, if you look at some of the biggest movers on a month to 6 months time frame, you'll see that so many of them are actually recent IPOs, and that's exactly because of two reasons. Because they're small float, and because they belong to currently hot industry. Those are the two most defining factors for their outperformance.
Right. Okay. That's really interesting. So you kind of touched on this before, but if we could just go into it a little deeper, would you be able to run us through your ideal setup for a high probability swing trade, like on an individual stock, and at what point you might enter into that as well?
Sure. It belongs to, let's say, to a hot industry. Let's say currently to biotech or semiconductor, and it has an initial leg up, so it has an already established momentum, and then it has spent some time consolidating, usually through time or through price. So there is a slight pullback. So I'm looking for the 5-day moving average to be trading above the 20-day moving average. And then I'm looking for something I call a pivot move. So I'm not just looking for a pivot level that has to be taken out to enter. I'm looking for a pivot move. I'm looking for a certain size of a move. For example, a 2% breakout to new 20-day high in order to enter. And that's it pretty much.
Okay, so when you said you look for the first leg, what sort of time frame are you looking at there? Like, how long would a leg typically take to form? Like, what sort of size are we talking about here?
It could be anywhere between 1 week and 3 months, or even 6 months.
Okay, right. Okay, sure. So, for argument's sake, let's just say you identify, I don't know, maybe like 20 of these setups, or maybe other setups that look equally appealing. How do you go about filtering out which trades you will and won't take? I guess another way of asking this is when you have more signals than capital. So how do you decide which trades to act on? Because you can't take every trade, obviously.
Of course, I mean, I'll just let some go, and I'll give a priority to stocks that belong to a currently hot industry and to recent IPOs, just because they tend to move a lot faster. If you study the best performing stocks on a 1 to 4 week time frame, you'll figure out, as I already repeated several times, I guess, that they're either recent IPOs or they belong to a hot industry. So of course I'll give priority to those two. And then if by the time I'm in 7 to 8 stocks, I'm pretty much already fully invested. So I'll hold them, anywhere between 3 to 10 days, depending on the price action. And if a better opportunity shows up, I'll sell those that are not acting as well, and I'll just reallocate money.
Okay. Right. So you mentioned the 3 to 10 days a couple of times. Like, how did you discover this was an effective holding time for your approach?
Based on studying past winners. So I meticulously study past winners on several different time frames, on a week, 2 week, a month, quarter, 6 months. So every day I study the best performers, stocks that were up more than 10% for the week, more than 20% for the month. And I'm studying their charts, and I've been doing that for years. And I figure out that most swing legs, last anywhere between 3 to 10 days, and then there is another consolidation. And, then the same stock could spend, a few days to a few weeks consolidating through time or price, and then it will break out again, and, you can enter again.
Okay, that's interesting. So let's say a stock you've been holding a position for 10 days, and it's still moving in your favor. It's not really showing too much of a sign of weakness. Are you likely to still cut that, or maybe you're going to hold on to that?
This is very unusual, and most of 80% of my trades are swing trades, but I also have some longer term positions that I hold for multiple weeks. And I for my longer term positions, I pay attention to weekly charts. So if a stock has a really good weekly charts and has a story that I really understand and is acting price-wise properly, I might hold it for multiple weeks, even multiple months. But that's a relatively smaller portion of my capital that I allocate to that. You can call that, I guess, position trading. It's a little bit different than swing trading. Swing trading is 3 to 10 days. And you're looking to capture 5 to 30% quick moves.
Yeah, exactly. I've got a few questions around your sort of longer term approach that I'm keen to ask you as well. But just still on the topic of swing trading. So you've written a book titled The 5 Secrets to Highly Profitable Swing Trading. I know we can't go into huge depth on each of those 5 topics, obviously. But would you be able to briefly touch on each one of, the 5 secrets? And if anyone is listening, I mean, they can obviously dig deeper and grab the Kindle from Amazon. But would you be able to give us just an overview of what the 5 secrets to highly profitable swing trading might be?
Sure. I mean, it's a really simple book. I think it's simple for a reason. So even people without any trading experience could get it real quick. So pretty much in chapter 1, I talk about when to buy, and I describe my perfect swing setup. And I've already talked about it here. Looking for an initial leg up, then some form of consolidation. We have the 5-day, the price of trading above the 5-day moving average, and then the 5-day above the 20-day. And then you could either buy a breakout, at least 2% move to new 20-day high, or you could buy in anticipation of a breakout. If that particular setup meets certain criteria. For example, if that particular stock has recently had like a really good earnings surprise and a favorable market reaction, and if the market environment is right, you can buy in anticipation before the breakout. Like, this is really an approach that, as your account grows in size, you could take you pretty much you have to buy in anticipation of a breakout, because there's not enough liquidity to chase after most breakouts. So in chapter 2, I talk about when to sell, and pretty much in swing trading, it's good to sell on strength, because we are only looking to capture that quick 3 to 10 day like up or down, and just to avoid the dead periods when the stocks consolidate through time or through price. Then in chapter 3, I talk about how to improve the odds in your favor, how to capture bigger winners, pretty much. And there I talk about industry momentum. Why is it so important? I talk about IPOs, and I talk about individual stock momentum. In chapter 4, I talk about the so-called 4th secret. I talk about risk management, talk about position sizing and how important it is. And in chapter 5, I talk about market timing, why and how to time the market, and when to risk 1% of your capital, and when to risk 0.25%, and when to sit pretty much on the sidelines. So it's really, really sweet, really short book. You can pretty much read it in probably an hour.
Okay, awesome. Yeah, well, I'll put a link to that in the show notes, so if anyone's keen to check it out, they can pick up a copy of it.
Are you ready to get serious about trading? Then join Tasty Trade, Investorpedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including 0 commission on stocks, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, risk analysis tools, and more features to help you trade smarter. See equities and derivatives with high trading volumes, dividends, upcoming earnings reports, and more with their pre-built watch lists. Or create a custom watch list to keep an eye on the companies and sectors that matter to you. Manage your positions with speed and precision using active trader mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Visit tastytrade.com/chat for more info. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC. Have you ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news, with Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. And now you can also have unlimited time to reach the profit target. It's a game changer. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you even pay a cent. Click the link in the show notes to start trading with Trade the Pool's capital.
But moving along to sort of what you touched on before, like your position trading approach, so separate from swing trading. From your experience, like what do the big winners have in common? How do you identify stocks that are likely to rally longer than sort of your 3 to 10 days that you look for when you're swing trading? Is it again sort of momentum within an industry, or is there something more to it?
Well, there are several factors. One of them is earnings growth. Usually the best long-term performers are the stocks that consistently report high earnings and sales growth. Another important factor is general price momentum, which pretty much is a reflection of people's expectations about the future. There were so many recent examples like Tesla Motors or Yelp. Those stocks tripled and quadrupled before they reported a single profitable quarter. So the market in this case was forward-looking. It was expecting those stocks to do very well in the future. Of course, in many occasions, the market won't be right. Since the market is a discounting mechanism, in many cases, it will discount future events that will never happen, that happen all the time. And once the market, gets tired of waiting for those companies to actually deliver what it is expecting, you see a correction, as we saw in Yelp. It's not uncommon to see a stock that will go up 300, 400% let's say in a period of a year and two, and then it will give back 50 to 80% of that move in 6 months. It usually happens to stocks where the market has had very high expectations, and you could have ridden those moves just based on price momentum. And then, as I said, at some point, the market grows tired of waiting for those companies to actually deliver what it has already been priced, and there is a correction. So another way to capture bigger moves is to wait for a market correction. If you study some of the best performers in a 3 to 12 month time frame, you see that so many of them start their move immediately after let's say 8 to 15% market correction, which used to happen every year before. We haven't had that in a few years. So the stocks that show relative strength during that correction, the stocks that manage to, let's say, move sideways or even attempt to break out as the general market is dropping, 6, 7, 10%, those are the stocks to pay attention to, because as soon as the general market bounces, those stocks will lead and outperform by a mile. And the last bigger correction that we had was last September, and exactly at that time, I think the S&P dropped 7-8%, and exactly at that time, there were quite a few biotech stocks that just didn't move. They just went sideways. They built new bases, and as soon as the market bounced, those stocks, pretty much every single one of them, went up between 50 and 200% in the next 3 months. So I think for most for position traders, for longer term investors, the best thing that could happen to you is a market correction, because pretty much the safest time to enter the market is right after those correction, when the general market is starting to move up and those stocks are starting to break out on new 50-day highs or new 52-week highs. And if you concentrate all your effort to that specific time, I think you'll do really well without having to watch the market every day. And actually, speaking of books, I actually have a recent book that I published exactly on position trading, on longer term trend following, that exactly deals with that subject. And I co-authored that with Howard Linson. It's called The Next Apple. It's also on Amazon. I think it's also really, really good read if you have the time.
Yeah, for sure. We'll put a link to that one also in the show notes. I'm sure that would be a really good book to get into. Something you sort of brought up at the beginning of that answer there, and thanks for going into so much depth with it, is you mentioned higher earnings, consistently higher earnings. For someone who doesn't follow fundamentals too much and sort of, news like that type of thing, how do they determine whether earnings are higher than sort of what is expected?
For example, a company that used to grow at 10, 12% quarter over quarter earnings and sales. If that company suddenly reports a quarter where it has a 200% earnings growth and 100% sales growth, something major has just happened apparently with that company. And this company, and usually that huge acceleration in earnings is just like a cockroach. There's never only one quarter. There are usually several quarters that follow. And if you study some of the best performing stocks, on a longer time frame, they really grew their earnings at triple digits. That's natural. Companies that grow their earnings and sales at such pace usually do very well.
Okay, and another thing you sort of touched on in that same answer was many of these stocks might run for 200, 300% in the space of a year. What are maybe some giveaways that the trend might be coming to an end? Because obviously you want to pocket as much of your gain as possible. So is there any giveaway that the trend might be starting to turn down?
There could be several different factors that could give you a clue. First of all, you never know. You could never know how far a trend could go and how long it will last. But just in general, if you see like a huge counter trend move, let's say the stock suddenly drops 8% down in a day on a huge volume, that has a major distribution day. A day like that usually wakes people from their dream. All of a sudden, the fear of losing becomes bigger than the fear of missing out. And this is usually the beginning of the end. And like when you have like a couple major distribution days like that. And again, if you're a position trader or a long-term trend follower, I think it also makes sense to take some profits on strength. Like for example, I'm using a weekly RSI. When it gets above 80, I will take some partial profits on some of my position trades. Everyone has his own approach, and then I know a bunch of people that will never sell on strength, that will only sell when on weakness, and they're also doing really well. So everyone has to build, their own approach.
Yeah, that's a good point. Thanks for bringing that up. So here's a question. I'm interested to hear your insights on taking trades that have a worthwhile risk to reward. So what is something entry-level traders should understand about trades that have a good risk to reward before getting into them?
Well, I mean, I could use the phrase "tight is good." So look for a tight range. For example, stock that normally trades, let's say a dollar. It's its normal daily range. It's all of a sudden the last few days it's spent in a much tighter range, let's say 30 cents range, and look for closes for a couple of days of where the closing price of each of those days is very close to each other. So this is just another ingredient that you can add when you look for a perfect setup. So first of all, you never know how far a stock will travel after it triggers. It could travel 5%, it could travel 20, 30%. Of course, that depends on the industry. It is on its float, on the market cap of the company you're trading. It depends on the general market environment. So in a good trading environment, of course, you get a much bigger move, and you can risk 50 cents, and then you can make $5 on those 50 cents. In a choppier market environment, you might make only 50 cents on your 50 cents risk. I mean, you never know in advance your actual rewards. All you know is that in that specific trading market environment, your setup has an edge, and let's say out of 10 setups, probably you make money on 7, and out of those 7, you make a lot of money on 2, and on 5 you make a little bit of money. And those two that where they really go in your favor, they'll pretty much account for 80% of your overall profit.
Sure. Okay. So I read an article the other day, and I think you wrote it on Dr. Brett Steenbarger's blog, which I thought was really interesting, and I'd like it if you could share some of that with the listeners. And it was about one of the most practical habits that has helped you as a trader. So what is that practical habit? Would you mind sharing that with us?
Are you talking about studying past winners?
Yeah, it was about going over charts of sort of the best performing stocks on multiple time frames.
Yeah, I already talked about it here. Yeah, every single day I go over the best performing stocks on multiple time frames. So I keep a trading journal, and on that trading journal, I not only review my trades, I only review my missed opportunities, and the missed opportunities, of course, came from studying those past winners. So I'm looking for those best performing stocks, let's say on a weekly time frame, and I'm asking myself, why did I miss that move? Because based on studying those past winners, I have built several different screens that I run throughout the day, because I have reverse engineered based on my study of past winners. So I'm looking, why did I miss that move? And should I change my current screen? Should I create a new screen so next time I don't miss it? Even though I know that there's no way I could catch them all, but I'm constantly trying to improve by studying past winners and by keeping a journal and constantly trying to tinker my screens.
Okay, yeah, that's really good. So, all right, Ivan, well, let's start to wind this down. So let me ask you one of my favorite questions, and that is, what's the top reason you believe why the majority of traders never reach a high level of success? Because often traders set out with big dreams and plenty of ambition and enthusiasm, but somewhere along the way, this sort of fades out and it doesn't get them there. So where is the disconnect? Like, why do the majority of traders fail?
Why? I think they don't concentrate. So all their at the beginning, first they don't have most people don't have an edge, and once you find a setup with an edge, most people don't concentrate enough efforts on learning everything about that setup and making it profitable for them. Most people just try something, And if they see that it doesn't work, in a few weeks they'll try something else. They constantly jump from one thing to another, and they never really become masters of one particular setup. And I think at the beginning, if you really learn one great setup and just, the first couple of years, just trade specifically that one setup. And of course you have to know when to trade it, because there will be time when you have to sit on the sideline and do nothing because, your specific setup won't have an edge. If you do that, over time you become really successful, and over time you'll be able to start adding new setups. So at the beginning, less is more. You have to concentrate on that one setup. And there are so many actually working setups that are shared for free in the public domain, or you can get them in, there's so many really good books. You can get them for really cheap and just take a setup from another trader that, is already profitable, and you can tinker it, to your own, lifestyle, or based on your own study of past winners.
Yeah, I love that answer. That's really good. You've made a lot of really valuable points in there. So, Ivan, thanks again so much for coming on. You've given some incredible answers and incredible insights. So you've been an awesome guest. Before we bring this to a close, can you share with listeners where they can learn more about you and your trading, and any sites they should check out?
So I'm active on StockTweets and on Twitter, and I'm using the handle at Ivan Hoff. Ivan, Hoff, and I also run a couple sites. It's ivanhoff.com, and then the other one is socialleverage50.com. And you can, just ping me on Twitter, on StockTweets.
Okay, good one. Make sure to put links to everything you mentioned there in the show notes at chatwithtraders.com, and just click on episode 24. And just, you mentioned there Social Leverage 50. Just want to give us an overview on what that site's all about?
Yeah, it's a trading service that they run with Howard Lindzon, and it pretty much helps the traders and aspiring investors to be more profitable in the markets, and just to accelerate their learning curve.
Sure, that's really good. So, check that out. And again, all the links will be in the show notes. Ivan, thanks so much for coming on, man. Take care, and we'll speak to you soon.
All right. Thank you, man.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Chat with Traders is brought to you by Trade the Pool. Did you know that every decade the market reinvents itself? Online brokers opened the doors, mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. And now you also have unlimited time to reach the profit target. From now on, your trading risk is capped, and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade larger positions and scale your strategies without risking your own savings. It's time to trade with more capital, making it truly worth your time and effort. Ready to trade the pool? Click the link in the description and join the stock trading revolution today.
Are you ready to get serious about trading? Then join Tasty Trade, Investopedia's best platform for options trading in 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade all in one platform. Get low commissions, including 0 commissions on stocks, so you can keep more of what you earn. Trade smarter with advanced charting tools, a pre-built strategy selector, risk analysis tools, and more features. Visit tastytrade.com/chat for more information. Tasty Trade Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up, guys? Thanks so much for tuning in to episode 25 of the Chat with Traders podcast. It's great to have you tuned in. This week, I thought I'd change things up a little bit, and I'm actually going to reverse the interview. So instead of firing questions at the guests like I normally do, I'm going to be on the receiving end and giving the answers. If you've had the chance to listen to episode 1, then you may recall I gave a brief overview right at the beginning explaining where I was at with my trading. Well, things have gradually progressed since then, so I thought this would be a good milestone to update anyone who is curious to know. So to keep things interesting, I brought on Zach Hurwitz, who I'm sure you will remember from episode 11 of the podcast, and he'll be the one asking the questions. Zach's a great friend of mine and is continually guiding me along to becoming a better trader through regular coaching and mentoring, so I couldn't think of anyone better for the job. Plus, Zach also expands on many of my responses with additional insight. So all in all, I hope you find this episode to be valuable in its own unique way. And just before we get into it, if you have any questions or comments for either Zach or myself, just go to chatwithtraders.com/25, scroll to the bottom of the page and drop in a comment. Both Zach and I will be monitoring this very closely. So if you've got any feedback or responses, just feel free to share them there. All right, team, enjoy this interview and let's talk soon. Hey Zach, what's going on? Thanks again for appearing on the show for, I guess we could call it maybe round 2.
Round 1.5. Aaron, it's always a pleasure, man. I'm happy to be here.
Yeah. So, I mean, we're doing things a little bit differently this time. I'm going to be speaking, for the most part, not entirely, but giving a little bit of insight about an update on sort of where I'm at with my trading and sort of what's been going on in my world. I mean, you've been pressuring me into doing this for a while, and I've had a bunch of emails come through from people just sort of asking me for an update because, I mean, I sort of made it pretty clear on where I was at with my trading in episode 1, right at the very beginning. I sort of rambled on there for a bit, and I just sort of haven't really updated anyone in the meantime. So I sort of thought this might be interesting, just change things up for a little bit. So...
Well, Aaron, you were missing an important trader in your first 25. You only gave people insight in episode 1. So, like myself, I came along episode 10, 11, etc. And I don't know, I kind of missed the backstory, so I had to Skype you and talk to you longer after the interview. We've developed quite the friendship.
Yeah, for sure. So you're going to be sort of firing a few questions my way. So I'm a little bit nervous to be on the other side of the other side of it now, but let's see how I hold up, eh?
Well, tell me, Aaron, how did you first discover trading? I mean, this is the question you always ask people to lead off with, so it's a natural start for you.
Yeah, no, that's a good one. So, I mean, I should probably go right back to the very beginning, and I'll try and not ramble too much. I'll try and keep it fairly brief, just to bring us up to speed. So, I left school when I was about 15. I hated school. I couldn't wait to get out of there. And I left school and I moved into an apprenticeship. I don't know. Do you have apprenticeships in the States there?
I think it'd be more called like an internship, but apprenticeship feels a little more serious and arduous.
It was paid. So I was getting paid to do it. I was doing, 38 hours a week. I think I was on, I'd be lucky if it was $5 an hour. On my first year as an apprenticeship. Kind of goes up each year. But anyway, I was doing an apprenticeship and that was in sort of graphic design. And anyway, did that. I was qualified by the time I was 19. It was a 4-year apprenticeship. And on the side, I'd sort of started a side business, just doing a little bit of freelance design and that sort of thing. Just trying to make a little bit extra money. I mean, I always sort of had a drive to set myself up for the future. You know, I wanted to be well off. I wanted to be wealthy. I don't think there's any harm in saying that. You know, I didn't want to be struggling, you know, later on in my life. I want to, you know, not have to worry about money at some point. So I sort of felt like I had a long-term kind of vision. So I, you know, started a side job. I was pretty good with saving. I ended up buying an investment property when I was about 20 years old. And then from there, I was sort of like, okay, so I've got a property. You know, what else do you do? So there was like, the next obvious choice was for me to take a look at the stock market. Like, I didn't know anything about the stock market or trading or investing and that sort of thing. Like, my family's not into it. None of my friends were into it. No one I worked with when I had the job. So, you know, I just sort of ended up I just sort of jumped on Google, looked up some seminars that were going on in Brisbane where I'm at. And there was pretty much just signed up to one of there wasn't too many, and I just signed up to one that was coming up in the next few weeks. Went along, liked what I heard. Obviously, I was only probably about 21 at that point, and I don't think I was too hard to convince. But anyway.
Well, you know, there's a quick. I want to interject. There's an old saying about the stock market: if you want to make $1 million, you start with 2. Right?
Yeah, I've heard that one before. That's a good one.
So it's real estate or the stock market. But that's so impressive to hear at a young age. I know, as we often joke, while I'm still in my 20s, I'm going to say is we're both still 20-somethings, but I am continually impressed, man. As you said, you didn't have too much worry about the present. You had a lot of foresight for the future. Even from an early age. I don't think many 20-year-olds are considering investment properties. I don't know how many 20-year-olds could spell investment property.
Yeah, I mean, that could have sort of had something to do with the fact that I left school when I was 15. I didn't see it all the way through and graduate. That I sort of had those few years experience working. I don't know. But anyway.
I hope this isn't broadcast to the children out there who are going to drop out of school thinking that they can buy an investment. I'm just kidding, Aaron. You are maybe an exception to the rule, but a brilliant one. And I don't know, man, I've said this to you before. I'm glad we have you in the stock market now. You're a powerful mind, and you're helping a lot of other people with the podcast. So
thank you.
Keep going on,
you might
Sorry,
give me a big head. But yeah, so where was I? So yeah, I signed up. And what I signed up for, I should be a bit more clear. So what I signed up for was, essentially education on how to trade. And that education sort of involved, a great big thick book, a couple of DVDs, and like weekend workshop. So it was about like 2 days long. Mm-hmm. Anyway, I went home, obviously got stuck into the book. I watched the DVDs. Like, I put in a fair amount of study. Like, I didn't bring it home and put it on the shelf and let it collect dust. I got stuck into it. It was actually really good. It sort of taught me how to, chart, technical analysis. Like, I was actually hand charting. So I spent at least probably the first 6 months before I brought a decent piece of charting software. And I was actually just charting by hand. And I think that was a pretty valuable skill to have, to actually sort of understand like how to actually construct a chart without just having the software do it all for you. You sort of like understand how these tools are actually working, what's going on. So I was plotting, just a pretty standard bar chart or candle chart, and with an indicator over top of it that I use occasionally. Anyway, the method that this company taught was the methods of William Gann, W.D. Gann. And for those who aren't familiar with him, he was sort of considered to be like an a Wall Street legend of the early 1900s. I think he passed away around 1950 sort of time. Don't quote me on that though.
Sure.
And his methods were a lot of them were sort of based on ranges repeating and time repeating, and then fractions of those time and ranges. So I studied his methods for probably about 2 years, maybe close to 3 years, pretty intensively. I also read a bunch of his books multiple times, so I got right into it. And anyway, I sort of, by the time I hit 3 years, I was like, okay, well, I opened a $5,000 account like way back, probably about 6 months after I started reading up on trading. And my account, it's gone up a little bit, and then it's come down a little bit, and it's just sort of floated around the opening balance. Like, it hasn't moved too far. I haven't lost a great deal of money, and I haven't made much money. So I was sort of like, time's ticking by. I always sort of feel like there's an urgency, and I was like, I need to change something. So what I'm doing just isn't working. So yeah, I mean, that's pretty much how I got into trading. I don't know if I missed any parts out there.
No, this is good. I want to interject before we get to how the podcast started, because that's the question that's been on my mind. I'm sure everybody else's mind. How'd you arrive at this point? Before we move on, I want to ask about what appealed to you about GAN. I think most people find GAN more in the intermediate part of their trading career. It's interesting to hear somebody who learned about his methods early on in their trading career. Seems a bit daunting. Was it I don't want to say artistic balance maybe, but you don't need to have too much technical understanding of the markets to appreciate maybe a fractal price pattern or an understanding of Fibonacci, to make an analogy, right?
Yeah, to be perfectly honest, I mean, that was just the first thing that I started learning about. So when I went along to the seminar that one time and I signed up for the education and that sort of thing, it was just, that's what they taught. And I just stuck with it. Like, I was always very conscious of not jumping around too much. I didn't want to sort of go from one educator to the other and just sort of spin my wheels. So I just kind of went deeper into that subject because I'd already started getting into it. I just went deeper into it, started learning more and more about him and his methods. And I kind of reached a point where it just seemed a little bit wishy-washy for my liking. I don't know if that's a good way to describe it, but like, it was just a little bit open to interpretation, I think. And I'm not saying that it doesn't work. I'm not one to say any strategy or any particular way of trading doesn't work, because there's always people out there who it works for them, right? I'm just saying, for me, I just wasn't really vibing with it too well. But in saying that, it did give me a good understanding of, ranges, understanding market kind of moves and structure and that sort of thing. Different periods like accumulation, distribution, consolidation, all those sorts of different repeating ranges, all that sort of stuff. Like, I learnt a lot from reading up on GAN, even if it's not how I directly trade today.
Yeah, I mean, that leads into all sorts of questions. Are you live trading now?
Yeah, so I started live trading probably since like about 6 months after I started reading up on the stock market and started like educating myself. I didn't open a brokerage account and then decide to get educated. So I knew that I had no idea what I was doing. I got to get clued up before I put any money into this. So I took that approach. I sort of studied pretty hard for 6 months, and there was a little bit of paper trading in there. I didn't paper trade too much. For me, it wasn't really.
It's hard to have the gravitas of real money, right?
Yeah, exactly. And I sort of struggled with like treating it like real money, even though I'm like, oh, that's a losing trade. That's annoying. But it's like, you just don't fully get it. Even though recently I've been paper trading a new strategy, which I'm sure we'll get into a bit later, and I have found it very useful. But at the time, at the very beginning, it just I couldn't really find much value in it, to be honest. So I know it worked for some early on. It didn't really work for me too early on. So anyway,
it's like you had to build the experience to know what would be different and be cognizant of it. Early on, it just seems like I'm not getting something here, but I'm not able to put my finger on what it is that I'm lacking.
Yeah, totally. That's you pretty much hit the nail on the head. So, yeah, I've been trading. I opened a $5,000 account, and I'd been trading that sort of ever since. And recently, I haven't been taking many live trades, but again, I'm sure we'll get to that a little bit later.
It just sounds like you're in a development cycle. This is something that traders routinely go through. They go through activity cycles and development cycles. Sometimes it's best to bunker down, build the strategy, test it, as I know we're getting into more of the quantitative stuff, but it's a pendulum, and it swings back and forth and never ceases. Many traders think, I'm going to do a year of development, and then I'm going to go make $1 million for the rest of my life. And I think it's that constant refining and honing of the process a lot of lazy traders don't want to do, and it's no surprise why they don't succeed. I was actually going to point this out earlier when you're talking about your development on GAN, your research and understanding, building the bar charts manually. I hope all your listeners pick up on the thing you're really doing right is you're developing mastery of a specific subject before moving on. Even if that subject isn't going to be useful to you, or I should say profitable, it'll still be useful. Learning how to learn, learning how to evaluate, learning how to arrive at an actual conclusion instead of it forever being, well, that might be helpful. I'll hang on to it. You kind of need that finite, nail it down kind of nature. And I think you've succeeded in that from what I've seen. So,
I mean, I don't feel like I definitely can't say I mastered GAN, but there's definitely aspects of what I learnt from reading up on his material that I still use. So I don't use like the full package, of course. It's my approach is much different now, but there are certain things which stick with me,
I feel that same way about Elliott Wave. I always say I'm so glad I learned Elliott Wave, and I'm so glad I don't trade Elliott Wave. So I'm sure I'm going to inspire some anger from a few Elliottians out there, but I apologize. To each their own. So does that bring us up to when you're starting the podcast, or are there a few more points we want to hit on?
Yeah, so, I mean, from there, that probably does lead into the podcast. So, obviously, I'm sort of like 3 years into this journey, and I'm not seeing huge success, and I'm not seeing massive failure either, unless you consider not making money as failure, but at least I wasn't losing heaps. I never blew up any accounts, or touch wood, I haven't yet.
There's still many years in your trading career, my friend. That's an okay thing, by the way. I'm not ragging on Aaron here. I'm giving him a hard time that he's going to blow up an account. The smartest thing, I think I may have mentioned this in my interview, I put the minimum in. So even when I did blow up an account, it's not the end of the world. It's the most modest loss that you can take. So good on you for being patient. I mean, that's another thing I'd pat you on the back for. Anyway, continue. Podcast.
Yeah, so, I mean, my passion for trading sort of gradually got stronger, and I was just like, there's no point doing this half-assed. Like, if I want to actually make trade and make some serious money doing this, then I need to, give it my full, well, not say full attention, but I need to give it the attention it deserves. So I was sort of like, just in like my circle, none of my friends were into trading. None of my family was into it. I just didn't know any traders. I had no one who I could speak to about trading who understood it. So I felt like, I've used this analogy, you've probably heard this 10 times, Zach, when I've been speaking to others, but like, if you want to be a mechanic, right, you hang around with people who talk about cars, work on cars, fix cars, you know what I mean? Mm-hmm. I wanted to be a trader, yet I didn't know a single trader. So there was kind of a disconnect there, and I felt like that was partly my issue, is I couldn't learn from anyone who was more experienced. Mm-hmm. So I've always been a fan of podcasts. I always listen to podcasts, and I was just like, this would be really cool. I'd love to speak. It could be a really good platform that would allow me to speak with other traders. And, I can ask them a bunch of questions. It was sort of a podcast that I was looking for, that I would like to listen to myself, but I couldn't really find one that sort of really grabbed my attention too much.
Mm-hmm.
So I was just like, well, I'll create it myself. And I have the graphic and web design knowledge, which I briefly mentioned earlier, to sort of, put together a website, just jumped online. If you want to learn anything, you can just jump online these days, looked up how to set up a podcast and just read up on it, brought a bunch of equipment, and then just started, emailing some traders. So
I got to ask, and I'm such an old fuddy-duddy here, why podcasts as a medium, not to challenge you, but like in such a visual profession, so many charts, to do a podcast seems almost backwards, but you've had such great success. I mean, it's definitely quality of the people you've brought on. I'm kidding. As well as the quality of the interviews, man. I can't tell you how many people I've spoken to who have, and so I will, on behalf of all listeners, thank you for what you're doing and for putting it out there, man. I hope you know that. And probably not the only time I'm going to thank you on this, man, on behalf of everybody. Go ahead.
Yeah, that's a really good question. And it was something that kind of did run through my mind.
Mm-hmm.
It did run through my mind when I was initially, sort of scheming. But, I mean, podcasts, you can listen to it anywhere. You know what I mean? Where a video, you've got to be sitting down, and it takes your attention. You know what I mean? Like, you can't be. I mean, a lot of people listen to podcasts at the gym, driving to work. I don't know, a bunch of different places. Whereas if you're watching a video, you can't really be doing anything else. And
right.
I know,
so accessible. Yeah.
Yeah. So yeah, accessible. That's a great word. It was. Yeah, the video, and I mean, what was I going to put on the video? I mean, I'd have to ask the guests to sort of share their screen kind of thing. And I mean, a lot of it, when we talk about setups and that kind of thing, would be nice if we could have some visuals. And that's maybe something I'll consider, sort of further down the track, is how we can maybe sort of work that in. But like for the part where they're sort of discussing their journey and that sort of thing, like we can get away with it on a podcast, I feel. So
I love that you can hear so much emotion and experience and sometimes burden in traders' voices. You know what I mean? I'm talking to a trader, and you feel like you're talking, somebody with 1,000-yard stare. And I know you're really good at this. You pick up on the words that people choose to describe certain topics. I just know you're really good at pulling the quotes from each of the article interview or the interviews. It's always impressed me when it was after my interview or something, and I was like, I said that? And I was like, man, Aaron is smart. He's paying attention to me more than I'm paying attention to me. But it makes it really cool to read through some of the interviews and find those quotes and hear the interviewee say it. So definitely, I mean, I can appreciate the audio is really the most important part of connecting, and putting a voice, a persona to a name or some charts. It's all very dry and distant, and the voice is so, personal and connecting.
Yeah, and I mean, podcasting, it's just so much more engaging than reading a blog article, right? So, I mean, I could interview someone by email. Mm-hmm. You know what I mean? I could just turn that into a blog post, like a written blog post. It's not that I'm sure it would be a good read still, but
you could post it on your GeoCities page back in 1999.
I can't say I know what that is, but
wow. Okay, the age disparity is real. How old are you, Aaron? I don't know if you've ever mentioned this on the podcast.
Yeah, I'm 24. So,
God, geez,
25.
Kids these days, man.
25 in December. Sorry, where'd that come from? 25 in September.
Do you need to review your notes about your birthday? I'm just.
I try to forget it. To be honest.
It's all good. Dude, I know people are probably impressed and a bit daunted listening to you. When I first met you, I was like, man, this guy's going to be in his 30s. Oh, he's 5 years younger than me. Great. I was actually mention...
I've got, some guys listening, 19, 20, 21. Like I was emailing a guy last night who's been listening to the podcast and reached out, and he was only 21. And I was like, well done, man. Like it's a great age to be getting into it.
Do you remember the, not to put you on the spot here, but the email that you got from the father-son duo who had listened to your podcast while driving cross country?
Yeah, that was really cool one to receive. Actually, I wish I could give them a shout out so I could mention their name. But father and son dropped me a line to mention that they'd been on a road trip across the state somewhere. I can't remember where it was, but they were on a road trip. It was about 10 hours, and they smashed out about 10 episodes of the podcast. So I was like,
wow,
congrats for putting up with me for that long.
Well, and having something cool to discuss and kind of bond over. I just think it's neat that you're giving people experiences like far beyond probably what you expected when you started this. And this is another thing. Sorry, I'm giving you a bunch of praise here, but man, you started this in January of 2015. What? You know what I don't know how else to say it other than I'm brutally impressed, man. You've had a tremendous following, and it's cool to see it grow, and I'm thrilled to hear from people still to this day, 3 months after my interview. I'm sure you hear from every single day who have found some value in this. So
yeah. Well, I mean, I definitely like to connect with anyone listening. So I mean, I'll just mention it right now.
Be careful what you ask for, my friend. I learned from being on episode 11 where I offered a free consult, and in the best of ways, I was overwhelmed, but it's cool to see such a response. There's no other way to put it, and I know you're genuine in offering to reach out to have people reach out to you.
Yeah, so I mean, if anyone wants to drop me a line at any point, just shoot me an email. My email address is just aaron@chatwithtraders.com. Otherwise, just hit me up on Twitter @chatwithtraders. But yeah, that's a bit of a side note. So where were we?
So I was going to ask you actually about swing trading versus day trading, because when I first met you, so many months ago, I'm kidding, back in January, you were predominantly a swing trader, right?
Yeah, absolutely. So I've always swing traded since I first started reading up and learning about how to trade, how to become a trader. Swing trading was just sort of, again, it was just the first thing that I was introduced to, and I just sort of stuck with it. I always knew about day trading, but I never I never attempted it or bothered to read up on it, because all the material that I had on GAN, and I don't mean to keep bringing up GAN, but it was all swing trading. It was all swing trading. And so it could be anywhere from holding a position to, a couple days to potentially a couple weeks. And I kind of liked that. I kind of liked that approach because, I mean, like a lot of swing traders, I had a job. I was working, I used to do shift work a little bit, but for the most part I was, working during the day. So I couldn't really watch the market too closely during the day. So with my swing trading, once I sort of started to move away from GAN, like I mentioned, I took some aspects that I really liked from his methods and just some other things that I'd observed, just some particular setups. And I just tried to refine those a little bit and just get a bit more specific on what I was actually trading. Because with his approach, there's a lot of variables and a lot of different things to take into consideration. I tried to sort of almost dumb it down a little bit and just try and set myself some rules, create like a bit of a trading plan and say, I trade this setup and this setup looks like, A, B, C, D. And
you realize how smart that is, that you're going through the boot camp before going to war? I think we were joking about this before. Like most people go to war, get shot a bunch, come back, try and take boot camp, aren't really motivated to go through. It's such a backwards process, and it's so refreshing to hear somebody, especially as a novice in the stock market, so to speak, who's that diligent and disciplined. I mean,
yeah, I mean, I'm not saying that this approach led me to huge success, because it hasn't yet, but it was just an approach that made sense to me at the time I was doing it. So I did that, and I would take these trades, you know, as they came up, as I saw them setting up. I'd, you know, take these trades, I'd trade them with a live account. You know, a lot of them would lose. Occasionally I'd get a winning trade. And I'd sort of go back over them. I'd try and see what the differences were, you know, just that usual sort of thing. And try and refine my rules a little bit. But this particular setup, so my swing trading setup, so I try to narrow it down, dumb it down, like I said, and just focus on, you know, one particular setup, which had a couple variables. And this setup sort of didn't come around too often. Like, it wouldn't be strange for me to be out of the market for a couple weeks at a time. And I sort of had the idea that if I want to excel my learning curve,